뉴 시리즈 9 프로 플러스. 아침의 깔끔함을 저녁까지 업그레이드된 6개의 커팅 요소로 닿기 힘든 곳까지 남김없이 부드럽게 저녁까지 깔끔하게 브라운.
확인해야 할 문서가 너무 많아? 종이문서 100% 폐지, 페이퍼리스 보험사. 전자문서 전환으로 환경까지 생각하는 미래에셋 생명. 보험 상담하러 갈 시간이 없어? 언제 어디서든 비대면 화상상담 서비스로 모든 보험 업무가 가능한 미래에셋 생명. 통화 대기 시간이 너무 길어? 디지털 ARS 서비스로 24시간 통화 대기 없는 미래에셋 생명.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for
여러분 안녕하세요.
insights.
뉴스 읽어주는 여자입니다.
Is this new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New
일단은
Live in the ground.
분위기 만들기 위해서 음악을 좀 넣어야
And the most informative analysis
잠시만요.
means for November's presidential election.
What is your path to the nomination?
It all starts Monday in New Hampshire, only on Bloomberg.
The investment bank has been extraordinarily successful. We have had a strategy over a number of years to do investment banking and to do it well. And we are the leading investment bank domiciled outside the United States. People are looking for a partner and a counterpart who's not just a US bank. And if they have to pick one, they tend to pick British banks. And we're a strong British bank.
That's the pitch. CS Venkatakrishnan and the Barclays CEO.
멋있나요?
Lisa Browers and Amory Hordern. I'm Jonathan Ferro. Bravo, I think you've drawn the distinction between the thinkers and the doers, and at risk of offending people, there is a clear difference between the thinkers and the doers in Davos, Switzerland this week.
It seems like the thinkers are gloomy and the doers are optimistic, and that has been, frankly, the incredible takeaway that I've gotten. The people who actually run businesses
오늘따라
optimism ahead, and the people
신경 쓸 게 좀 많아요.
are very depressed, and that, frankly, is the divergence.
At risk of offending people, I'm sure we just did. But Lisa, I wonder, is that because they've got a story to sell? The doers, they've got a product, a service, something to sell? Or do you reckon they actually see something on the ground that gives them that reason for optimism?
I mean, call me naive, but I believe them because it's been consistent and it's been with some specific examples of places that they're seeing it. And frankly, we're seeing that in consumer spending. Even the Beige Book, which I know is sacrilege to mention at a time like this, really showed an increase in appetite in consumer spending.
Is anyone reading the Beige Book?
I read parts of it last
Maybe a little bit. Okay, you can share those parts with
It's
us.
okay, we don't have to.
Equities look look like this on the S&P 500. 2 days of losses, trying to replace that with a day of gains. It's been a soft week. Over the last 2 days, only down by something like 1 full percentage point, not even. We bounced back by 0.25%. Yields come in by a couple of basis points. At least I think we can call it 4.1%. But when you put together the comments from Governor Waller and a strong retail sales story we saw just yesterday, it's quite a powerful pushback against those big, lofty rate cut expectations that could begin as soon as March.
It is shocking to me that we're still pricing in more than 50% chance of a rate cut in March, given some of the data that we've gotten and given the pushback that we've gotten.
아직 사람이 별로
What
없구나.
other people are seeing that everyone here who's leading
좀
businesses
일단 좀 기다려봐야죠. 기다려보고 좀 이따가 본격적으로 시작하려고요.
I actually want to pick up on some previous comments that you had on the global economy. I think at the end of the third quarter, I think you described things as a challenging macro environment. Has your assessment shifted in the last 3 months?
Yeah, I'd say it was a mixed economy in 2023. I mean, you saw pockets of strength. You saw things like the automotive sector, especially driven by EVs and the growth in EVs. We saw weakness, obviously, at the beginning of the year in consumer electronics, durable goods, obviously things that are related to housing and the slowdown in the housing markets because of interest rates. But the consumer disposable business was good, so the day-to-day buying food at the grocery store, health, those areas were relatively strong. I'd say as the year unfolded, we also saw some positive things from an operational standpoint. Supply chains coming more into line. In our industry, we've been working through some destocking through 2023. And as the consumer demand stayed strong and the retailers got inventories back under control, you would start to see kind of a more normal cadence to things toward the end of the year. So I'm optimistic, at least from a perspective of if we have seen rates moderate and we are going to see a decrease, then I think
오늘
you're going to see
어떤
some potential to build
뉴스가
momentum into the
있을지
housing sector by the end
한번
of the year.
알아봅시다.
And then that carries obviously an awful lot of volume both here. And look, that's the same thing we've got in China. China's housing sector's been slow.
근데 오늘 일단 시작하기 전에 제 티셔츠 그 맨투맨 보이시죠? 오늘 과연 어떤 컨셉일까요? 저 어제 엄청 충격을 받아가지고 제 오늘 다 잃어버렸어요. 저 이제 매수 여신이 아니고 빨간색 맛만 좋아하는 여자도 아니고 저 오늘은 어제 너무 충격적이어서 일단 오늘 매도 해보려고요. 오늘은 샷으로 약간 해보고 싶은데 근데 이것도 어떻게 갈지는 모르겠어요. 차트 보니까 좀 나쁘지 않은 것 같고 막 컨셉을 잘못 잡았나 싶기도 하고 오늘 굉장히 많이 올라갔네.
It's not awkward. I think people misunderstand what the industry is trying to do. We're a first mover in advancing sustainability, and we're also doing it in a way that creates long-term shareholder value. Just before the end of the year, we announced FID on the world's first net zero ethylene and plastics production facility.
일단
And that will feature
일단은 컨셉은 매도인데 너무 애매하면 금방 옷을 갈아입을게요. 갈아입고 매수 들어갈게요. 일단 계획은 이런 계획인데 그리고 일단 시작하기 전에 뉴스를 좀 봐야 될 것 같아요. 괜찮은 거 뭐가 있나?
So we have a project in our Seadrift, Texas facility to build the first small modular nuclear reactor there with X Energy. And that is on the basis of a high
제가 이해할 수 있는 문제가 뉴스가 나왔으면 좋겠어요.
steam. And for a big industrial process, we need as much steam as we do electricity. but I can take that site essentially to net zero through that investment, and gives that a power system that will be in place for decades there, and really moves us forward. So Canada, by the time we're done with the Canadian project, 25% of our global ethylene will be zero scope 1 and 2 emissions. We have a complete plan by 2050 to take our entire fleet to zero scope 1 and 2 emissions, all on the basis of technology investments, not through offsets.
You're getting $25 million from the Department of Energy because of that IRA. Do you expect that money to dry up if we were to see a change in administration?
Well, I think one of the reasons the Department of Energy supports us is we're trying to help mitigate the risk and trying to show how we can deliver these units at a repeatable cost that's affordable for an investor. So you need an industrial company that has good project management capabilities like ours that can deliver a mega project at a low cost.
오늘도
hear a lot of times about
어떤 발표가 있을지는 알아봐야 될 것 같아요.
pass all that cost down the chain to the consumer. I've got to be competitive. And so what we're trying to do is work with X Energy and DOE to say, here's our target for the cost of this energy, the cost of these capital projects. And if we can execute that, then I think you're going to see other industrial players follow. And at that point, you won't need to subsidize every further investment that's made.
Music to people's ears, I think, worldwide, who are possibly nervous about paying more taxes so they can subsidize more of these things.
Well, this is exactly the fear, and this is actually what I keep hearing is what's necessary to kind of make things economic, to drive things in the right direction.
Yep.
Kind of disparate feelings, but was it a policy necessity to pump 13 million barrels a day of oil in the U.S., so it's not happening as quickly as maybe some people would like.
Secretary Kerry was brutally honest and transparent about that in a way that I have not heard from this administration for the last 12 months, who had basically ignored the fact that US crude production had gone through 13 million barrels a day. Jim, going to leave it there. It's good to see you.
Good to see you.
Thanks
Thank
for
you.
being with us. We appreciate it. Jim Fiddling there of Dow. The Inflation Reduction Act keeps coming up, doesn't it, AMH?
What's so surprising about it is that all this money is being flooded into the market, and states like
지금 뉴스 보니까 아나운서 분들 진짜 불쌍한 것 같아. 여기 갇혀 있는 거 아니죠? 거기 맨날 그 추운 곳에서 이렇게 대화 나누면서 뉴스 전달하고. 근데 진짜 생긴 게 다 맨날 똑같아요. 오늘 주식 시장 보니까 좀 어제보다 많이 나아졌던 것 같은데요. 아, 참.
세상의 돈을
광고.
자유롭게 살 때도 팔 때도 평생 무료 환전 토스뱅크.
근데 나스닥 떨어지네. 오늘은 좀 떨어졌으면 좋겠는데.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
제가 봤을 때 오늘 별로 재밌는 뉴스가 없는 것 같아요. 물론 이것도 제 객관적인 생각인데 아니면 내용이 너무 어려울 수도 있어요. 제가 이해가 안 되면 잘 안 읽거든요, 뉴스를. 그냥 저는 그렇게 생각해요. 제 방송은 초보자들을 위해서 하는 방송이고, 그리고 물론 옛날에 해왔던 그 해외 선물 해왔던 사람들도 있을 수도 있는데, 근데 저 같은 초보자가 이 뉴스 보고 이게 뭐야? 무슨 뜻이야? 라고 하면 그럼 다른 사람들 그렇지 않을까 싶어요. 그러니까 일단 최대한 이해할 수 있게 할 수 있는 이런 언어로 이렇게 뉴스가 있으면 사람들한테 전달하는 게 좀 더 효율적으로 생각해요.
Yesterday was a fantastic example of that, both for the data and for the bond market. So yields shift higher. We can check in bonds right now, 2-year, 10-year, 30-year. New 2-year at about 430 something. Yields up big time yesterday morning. Off what?
네, 어제는 너무 충격을 너무 받아가지고 거의 성의를 얼마 봤어. 거의 마이너스 70만 원? 70만 원까지 떨어졌는데 이거 진짜 죽겠다라고 생각하고 좀 타이밍을 잘 잡아가지고 그 계약수 늘리고 어떻게든 간신히 수익으로 넘어가는데 그래도 뭐 8만 원? 7, 8만 원 정도 벌었어요. 와 진짜 다행이다. 어제는 그냥 완전 멘붕이었어요. 넋이 아예 나갔어요.
Inflation heading up just a little bit. What do you do with this? I don't really know, but I do know that the ECB is trying to walk back some of those rate cuts that other people are saying. You're going to.
네, 저도 좋은 기운이 필요해요. 저도 기운이 필요하고 오늘 뭐 일단 좋은 선택인지 모르겠지만 일단은 오늘 얘기하듯이 파란색이에요. 오늘 파란색이야. 그러니까 오늘은 숏으로 가보려고요.
It's an absolute escalation, and it's on top of minds of individuals here because this is the main artery of global trade going through the Red Sea, the Gulf of Aden, and now they're having to spend a lot more time, a lot more money going around Africa. We need to see exactly what the U.S. struck, though. Is this another degradation of what the Houthis may be able to use to go after these merchant vessels? But at some point, are they going to ratchet it up where it's a big enough message that the Houthis actually stop?
All I can say is the fact that the Iranian foreign minister is here and the president of Israel is here. I'm wondering what conversations are happening behind the scenes to try to resolve this, if at all. But it seems like a momentary pause where some meeting of minds maybe can happen. I don't know. It's just an interesting sort of juxtaposition.
Well, I can tell you this. Those two individuals will not be meeting together anywhere.
I assume so.
Potentially they'll walk past each other, but, there's other players here. The Saudis are here. The Qataris here. Other individuals who can broker potentially some kind of negotiation.
One to watch a little bit later on this afternoon in Davos, Switzerland. Here's your next story. It's Apple. selling versions of its smartwatch without a functioning blood
화이팅!
oxygen
조한 씨도
feature after a
화이팅!
setback in its patent dispute with Massimo. It's the latest in a string of challenges for the tech
오늘
giant.
오늘
Netflix
잘
also
돼야
announcing it will not
됐던데.
launch an app for the company's new Vision Pro headset, which goes on sale next month.
이번
It has not been a
연속으로
great start to
중독을
the year. For what
받으면
was, I
저
think,
죽어요.
briefly the world's largest company, because did Microsoft take over?
Yeah,
briefly?
Microsoft took over.
I'm struggling to keep up with where they both are, but yeah, Apple double downgrade to start the year. Massive run up in
전 멘탈이
2023
그렇게
despite some pretty
강한
soft
사람
numbers
아니에요.
coming off the iPhone. Stock was up by something like 48%. That's the standout for me in earnings season. Early February, Apple.
Especially given the fact that we've heard mixed things with the potential of some sort of plateauing in the smartphone market after declining. All I can say is you were skeptical. You thought that it was a marketing pitch, John. You thought they were just trying to get you to buy an Apple Watch ahead of the holidays and it was going to come back online right after, but it actually was not. And that, I think, is my big takeaway.
Well, no, I was just saying that if you wanted the blood oxygen feature, that buying it before Christmas, everyone was rushing there, and did they do that? I guess we'll find out when we get the numbers,
If
right?
you want the blood oxygen feature, just buy it here in Europe now before you go back to the US.
Or go to Best Buy, right?
Because it's still available in Europe and other countries.
So there's the Apple pitch.
Pro tip,
There
yeah,
you go.
exactly.
There's the Apple
Go to
pitch.
Europe.
Let's finish on this. Mixed results in luxury retail. Shares of Richemont rising after posting higher than expected sales during the holiday season, benefiting from strong demand for its jewellery out of China and the United States. Meanwhile, watches of Switzerland slumping after the UK's top seller of Rolex cut its sales and growth forecast, blaming volatile demand and a shift in luxury spending habits. So, Bramo, a little bit later in the programme, we'll catch up with a massive person who focuses on tourism in China.
한참 수익인데
That's the interview to watch a little bit
너무
later to gauge
힘들었어요.
what's going on in the world's second largest economy.
I could not agree more. The CEO of
진짜
Trip.com at a time
진짜
where
쉽지
it
않아요.
does seem like there is real weakness. I mean, we keep seeing it again and again, and it's not clear what levers the Chinese authorities can use or are willing to use. But at the same time, they have a lot of money that they haven't spent yet.
역시
And one
해외
reason doing
선물은
that
이렇게
bad- I mean,
쉽게
maybe
보면
they're
안
not
돼요.
buying luxury watches from
Sure.
Switzerland.
순식간에
but
떨어져요.
it's not as if luxury hasn't been doing well.
That conversation a little bit later this afternoon. Joining us now on the potential weakness that's emerging in this labour market, Becky Frankiewicz, the Chief Commercial Officer at Manpower Group. Becky, good afternoon.
Good afternoon.
It's good to see you. We saw in the latest labour market report, just going back over the last 12 months, just temporary workers. It's a real weakness that's starting to emerge there. Do you see the same thing in the business?
Yes, and so temporary workers is usually a good leading indicator for a slowdown in the economy. It hits about 6 weeks before the rest of the economy, where employers are thinking, I now need to hold on to my permanent employees and I let my temporary workers go. So we've seen month over month reduction in temp worker. However, defying history, we're still
그러니까
seeing
쉬우면
resilience
누구나
in the US labor
잘하겠죠.
market, truly driven
그러니까
by 3 areas.
역시 공부는 이런 부분이 있어서 공부가 진짜 어느 정도 있어야 돼요. 왜냐면 저도 그때 와 주택금 망했다라고 생각해서 와 이거 진짜 다 돈이 다 날려버릴까? 어떻게 하면 좋을까 계속 생각하고 있었는데 근데 마침 방법이 생겨가지고 그러니까 아 그치 차라리 이렇게 하면 나 하고 뭐 계약도 늘렸고 뭐 마법을 좀 부려오다가 당연히 잘 됐죠. 물론 일단은 들어갈 때는 그냥 느낌으로 들어가. 오늘 일어나자마자 아 오늘 매수할까 매도할까 이렇게 그냥 기운을 받아가지고 오늘 이렇게 가는 게 나아 생각하고 이런 생각을 저녁까지 이렇게 버텼고 그러니까 일단은 그냥 달려봅시다. 달려보고 이제 이것도 오늘 아니다 싶으면 또 다른 방법을 생각하고 해결해야죠. 와 근데 어제는 진짜 순간에 너무 멘붕이 왔어요. 야 이거 진짜 망했다.
but it's still incredibly strong and one of the fastest driving sectors for growth in the U.S.
오늘
economy.
그런 상황이 없었으면 해 사실.
What are you hearing from people and how much it can disrupt the labor market?
Yeah, so AI, we've made AI very big here, so I'm happy to have the
근데
conversation on
찾아보니까
AI.
계속
The great thing about AI is we've
하루
seen a
종일 계속
structural change in the
올라오고
labor market in
있었는데
terms of population growth, aging people opting out, retiring.
뭐
We need
느낌상
AI to come in and take some of the roles so that we
벌어지겠다
have enough
이거지.
people to fuel the global
근데
economy. So I
이것도
think AI is good.
제
It is going to
감정일
disrupt some
뿐이고
roles, but just like
제
history, all of our
라이브는
research shows AI will create net
참고만 하세요.
positive roles for the
저
future.
따라오면
And so we're
안
quite
돼요.
confident. The other thing I'll say about AI is it's the first technology-driven transformation that doesn't require technology skills. Very accessible. So you can be a prompt engineer without any coding experience at all.
Mike Spence, Nobel laureate, joining us in about 22 minutes on AI. A question I'm going to ask him, I want to share with you as well, just to get your feel for it, your reaction. Exactly to what Anne-Marie's talking about. Globalization decimated manufacturing bases in certain countries. There is a fear that perhaps artificial intelligence can do the same thing, but to services. Do you not share that fear then?
Yeah, it is absolutely going to have a disproportionate impact on services and entry-level skills, which is something we haven't had a lot of talk about here in the forum. But what I would say, it's also going to create new opportunities and new skills and new jobs. The challenge of leadership now is we need to humanize work while we're digitizing work. And that will be the defining challenge for our generation.
It felt like for a moment it was a new era of labour market power. The leverage had shifted coming out of the pandemic. Has the pendulum swung back?
Yes, so great. I've asked that question by CEOs across the world, and so that's a hot take on a question. I would say we're seeing balance now. So during the pandemic, the power shifted to the employee, and now as labor markets continue to be tight, they still have power, but as demand reduces, we're seeing a balance. And so maybe for the first time in history, actually, we're seeing a new compact between employer and employee where balance is at the center.
Do you think that as a result, real wages will continue to rise going forward?
Yeah, I hope so. I hope so, because back to your fast food question, we saw real wage growth rise in the U.S. for the first time
그쵸, 우리는
in
그냥
decades at a
날리는
minimum.
거죠.
And I hope that we see, as we have higher order skills, we reward that with higher wages, whether it's at the fast food line, because think about in fast food, if you digitize it, you have to have the skill to actually run the digitized capability. And so I think we'll see wage growth as a result.
I love speaking with you because we get this economic data and we always wonder, what are we missing? What's fuzzy here? What's inaccurate? And you're on the ground. What's your leading indicator to understand
이제 아나운서분들이 되게 피곤하게 보이네.
turn or it's one way or the other, either up or down?
Yeah, so we do see real-time
사네요,
demand. That's the difference.
진짜.
When BLS reports it's a month in the rearview mirror, we see in real time. We are starting to see a bit of softening in demand, meaning jobs posted. We're seeing that across the economy, even in registered nurses, still number one, but softening. And so I think the first half of the year for the U.S. economy is probably going to be more of the same that we saw in the end of the year, a cooling across the labor market.
So you still think there's going to be a lot of demand to go out there for those jobs?
I think there'll be continued demand. I think it will be at a lower pace than we saw, at the beginning of 2023.
Just want to finish on this, just to lean on your experience at PepsiCo over the last decade plus as well. You've got a decent read on inflation, input costs, particularly in your current position too. Was that moment really just transitory? This T word that Lisa gets frustrated with because it's coming back up again? It was poison maybe 12 months ago. Is this moment just a transitory phenomenon, or is there something sticky about it?
Well, I think both are true. I think we're going to have a little bit stick and a little bit that's going to go away. And the stick, though, I hope leads us to better jobs, better wages, and a better overall economy.
Becky, this was super smart. Thank you. Becky Frankowitz there of Manpower Group, one of the biggest staffing firms on the planet with a really solid
그죠, 지금은 그냥 막 올라오는 거잖아요. 조금 많이 올라가면 그럼 급속히 들어질 수 있겠죠?
And on the flip side, real strength, the tech hiring part. To me, I love that she said that. The idea that Walmart was the #1 hire of some of these tech officials. It just highlights why some of these layoffs aren't affecting the economy, because those people are snapped up like that.
So introduce the election campaigns that are going to take place throughout this year. AMH, is the calendar on the president's side? When you start to hear things like maybe a little bit of weakening in the labour market, that's not going to be good news for the White House and this president.
No, absolutely not, because that's the one thing they're holding on to, that the labor market has been very strong despite higher inflation. So inflation doesn't come down quick enough, and then you see a weaker labor market. What do they have to hold on, and what's their economic message they're going to sell? Which the president, by the way, is going to be touting Bidenomics today in North Carolina. Let's see if it lands.
Well, all I can say is that there's a real tension here between both of these narratives. that we've been talking about throughout the first hour, which is on one hand rate cuts that would come with real softness and weakening, and on the other, a strong labor market. The strong labor market is one of the reasons why people see a soft landing. Are we even landing? And I ask this question seriously.
Consumers going to Rogoff.
No, I mean, seriously, what is the landing going to look like? And is that really something that Joe Biden's going to be comfortable with in terms of capital creation?
I'm not going to make a call on that. Do you remember 12 months ago?
Yes.
Do you remember? It was hard landing.
맞아요. 좀 좋아요 눌러주세요. 좋아요, 구독, 알람 설정까지 사실 그렇게 필요 필요하시면 알람 설정 해주셔도 되고 좀 거의 똑같은 시간에 뭐 앞으로 8시, 8시 반쯤에 9시 그 사이에 라이브 하려고요. 그러니까 그때쯤 시간이 있으면 들어오시고 같이 매매도 하고 얘기도 나누고 음악 듣고 뉴스 보고 보세요. 지금 뉴스도 보니까 초록색 참 마음에 드네요. 쭉쭉 올라가고 있고 오늘 보니까 주식 시장이 좀 안정적이기보다는
잠실 야구장을 229번 채우고도 남을 자동차 보험은 척하면 차 삼성화재
아무튼 올라가고 있어요. 저도 지금 이거 누리고 있어요. 막 열심히 올라갔다가 급속히 틀어지는 거.
A data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
일단은 타이밍을 계속 봐야겠죠?
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends, we're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. New time starts Monday.
지금 보니까 좀 시청자분들이 좀 많이 늘어나가지고 여러분 안녕하세요. 저는 뉴스 읽어주는 여자고 그 유자 참 좋아요. 그리고 뭐 해외 선물 하는 여자도 해요. 제 망하는 모습을 보고 싶으시면 계속 시청해주세요.
In fact, Anne-Marie, he said it was necessary.
Yeah, Lisa says a policy failure or policy success, given what they're trying to do in climate change, and he talked about the necessity of it when you're waging a war on Russia and there's also disruptions in the Middle East.
I say it was refreshing, Lisa, because we've barely heard that from this administration at all on fossil fuels.
근데 제가 수익을 보는 거는 얄미우시면 너무 보기 싫으면 그래도 보세요. 응원해주시고.
I mean, that's pretty strong wording.
In the United States, specifically, the fact we're in the 70s, That 13 million barrels a day in America, if you did not have that, I doubt cruise in the 70s right now. That's for sure. Snapshot of the markets looks like this right now on the S&P 500. It's a little bounce, a bounce back from 2 days of losses. We're higher by about a third of 1% on the S&P. The absolute perfect guest to catch up with on financial markets and investment trends. A man who I've been fortunate to spend some time with over the last couple of weeks is Joe Taylor, the CEO of the entire Teachers Pension Plan. Good afternoon, Joe. It's good to see you. Fantastic to catch up. I think for people who are familiar with what you do, you have a pension firm that essentially has to cater to unique pension profile, retirement profile, and one career. Can you walk us through how complex that actually is?
좀 폼을 제일 좋아요. 폼은 약간 새로운 시작? 이런 의미가 있었기 때문에 좀 너무 의미가 너무 좋아요.
And certainly our retired members have strong views about what they'd like us to invest in. The challenges for our dynamic is we have a group of members who actually live a long time. They work for a shorter period because often they do something before they become a teacher. And we just have to really look a long way out into the future to actually make sure the plan is funded and our liabilities are covered.
So inflation doesn't help because I understand things are indexed to inflation.
시간이 없어요. 다른 걸 신경 쓸 게 너무 많아가지고 어느 순간부터 건강 어디 갔어?
I think we've learned the hard way over 34 years that you stay your course and actually plan for longer term. So our dynamic is really to look for a return of about 4% real. But obviously when real is 5, 6, 7%, that just makes the issue much more challenging.
Well, this is where I was going to go. At the time where there was basically zero rates for a long time, we were one of the pioneers of creating your own internal private equity-like unit where you invested directly in companies. Are you moving away from that now that real yields are getting closer to what you actually need?
Well, look, that's a great question. You know, we've been investing in private equity for over 25 years. We've had about a 20% return net of all fees and carry paid to third parties, so it's served us really well to date. So there's the question, what can we do going forward? I would say if I picked out private equity for one thing at the moment, it's lack of liquidity. So our portfolio is not very liquid, and we really have to decide as a long-term pension plan whether we are really willing to sell assets at a discount to find that liquidity just at the moment.
So what's the answer?
I think for us the answer is to invest carefully, actually look at businesses that we think are better than what's already in the portfolio, and actually try to find solutions which aren't predicated on bank debt. So sometimes we can buy companies without any debt at all and leverage it later, and we have the balance sheet to be able to do that.
We spent some time earlier in the week talking about private markets. Just red hot the enthusiasm to move into private markets. You've been there for a long time. Can you talk to us about how participants in private markets are changing and what that means for what you do every single day?
Well, it's great to see new entrants because that actually allows you to have people who might want to buy your assets. So I guess I could say in infrastructure at the moment, would you like some of our portfolio? Because certainly there are plenty of people talking that up. I think for us where we struggle a little bit is where it adjusts the pricing to levels which we don't find
초보자분들이 약간 타이밍이 너무 애매하면 언제 들어갈지 이렇게 계속 생각을 하시면 차라리 뭐 계약을 예약해놓고 하는 게 더 해도 돼요. 이런 방법도 있으니까 아니면 일단 계약을 예약해놓고 그리고 다른 일도 해도 되니까 일단 이런 방법도 있어요.
From Golden Tree Asset Management, he was saying he likes single B and he's going into public credit, which is ironic to your point. Are you kind of moving in that
그러니까 중요한 거는 오늘 그 저번에 갈림길이요, 맞아요. 오늘은 시작을 잘 해버리면 나중에 좀 쑥쑥 풀릴 건데 근데 이것도 다 반반이잖아요. 완전 대박일 수도 있고 완전 나가릴 수도 있으니까 조심하세요.
What's the bogey that's realistic now for you?
Well, we still aspire for that 4% real. So if you take Canada at the moment, say it's about
맞아요.
3.5,
타이밍이
that's about
제일
7.5% rate
중요해요.
of return.
그러니까
Is that
지금
bogey real
다른
mark? Well, we don't
뉴스
have the
뉴스
sample
보고
release since inception,
싶은데
so that would sound like it should be
계속
possible.
차트 보느라 너무 정신이 없어요.
classes that we're in, private equity venture, really sort of slowing down in terms of returns we're seeing. So why is that?
지금
The
뉴스가
businesses aren't
계속
growing as much as they were. We're holding them longer,
한
which
이렇게
also affects your rates of
은근슬쩍
return.
보고 있는데
I think you just got to work harder and making them grow.
대부분 다 지금 그 대통령 뭐라고? 이거 잠깐만요. 갑자기 단어가 생각이 안 나요. 아무튼 그 선거? 그 대통령을 뽑는 거 선거이겠죠? 맞아요. 선거 때문에 뉴스가 거의 이것 때문에 다 이쪽으로 뉴스 다 하고 때문에 전 사실은 별 관심이 없어요. 물론 이거 주식이나 해외 선물에 대해서 좀 영향이 많이 영향을 줄 수 있다고 생각해요. 있다고 생각하는데
I think there's a degree of an America first sentiment existing, and that may be amplified as we go forward towards November. From our point of view, I think the interesting thing that we've largely adopted as a strategy for the US is a state-by-state approach to where we want to invest. So if you're Canadian, you'll probably see it initially as being a bit more left of centre than many people down in the US. We look after teachers who are left of centre again of that community. So I think for us, we've really got to be careful in things like healthcare and other issues where it is a bit more of a
물론 해외 선물 하려면 이런 관심도 생겨야 되는데
the zone where we'll probably be looking at it most carefully be in two areas. So one is things like infrastructure where we need a state approval to be able to operate.
이런 부분 우리 사회에서 이런 부분을 되게 안 좋게 봐요. 뭐 아무튼 이거 제 개인적인 얘기라서 나중에 문제도 생길 수 있으니까 여기까지입니다.
It's interesting you brought up healthcare. Clearly the abortion issue is absolutely massive right now in the United States. Is it too simplistic to say one state is easier to do business than the other, given what you just said? Because typically I think we'd have a conversation about doing business in America. We'd say Texas good, California hard. When I hear you say those things about healthcare, it doesn't sound that way at all.
I think it's somewhere in the middle. So I think there is some truth of it's easier in some states than others without any question. But everything has subtleties to it. So it depends what area of healthcare you really want to be present in.
MG 확실하세요? 저기요. 문제 있어요? 이리 오세요. 저기요, 선생님.
It's been great to catch up with you over the last couple of weeks. That was Joe Taylor of the
좀
entire Teachers Pension
심하시네요.
Plan. Bramo, a lot to chew on in that conversation.
That was fascinating to me. Back to back, Adam Posen and Joe there talking about how
아이를 까보세요.
different than they were under Trump as they are under Biden, and how everyone's already kind of adapting to that internationally.
It's not the federal story. It's what's happening at the state level. AMH, that comes up again and again and again. I think back to
저보다 어리지 않겠죠?
earlier on this week. We're talking about the ease of doing business somewhere like Texas versus, say, somewhere like California.
참
And you get a
얄밉죠?
different flavor of things when you start
저
talking
이거
about
되게
healthcare.
잘해요.
That's exactly why Governor Kemp came to Davos from Georgia, because he's making these deals, especially for clean energy, into his state.
That's the politics. We'll pair it with the economics. Up next, Nobel laureate Michael Spence with us in Davos, Switzerland on day 3 of the World Economic Forum. Check out the equity market on equity futures right now on the S&P 500, trying to bounce on the S&P after 2 days of losses.
전 아파트에 살아요. 관리비는 신경 쓰지 않죠. 그래도 혜택은 포기하지 않아요. 어떻게 가능하냐고? 아파트 아이에 사니까 관리비 조회, 결제 분석 전부 다 가능. 1등답게 아파트 아이.
Live and on-demand webinars, only from Bloomberg.
자, X. 엿보고 싶지 않아요.
Visit Bloomberg.com webinars.
예, 알겠습니다.
I'll just lay plenty of groundwork for future revenue. But for now, Mark Messler's most pressing challenge as CFO is conserving capital.
you have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them.
후원금 주시려고요? 아, 예. 오, 감사합니다. 감사합니다, X세대님.
We are marching towards our goals of commercialization.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You're going to have more volatility going forward. Returns are likely going to be lower in the next decade.
At this particular moment in the markets, tail risk is higher.
I have no idea how to interpret the market. It seems very sanguine.
Right now, particularly ending the year with the melt-up, there's just too much broad optimism.
We think earnings are growing. The street thinks 11%. We think half.
This is Bloomberg Surveillance, live from the World Economic Forum in Davos.
발매를 계속
It's
봐야
day 3 in
되네.
Davos, Switzerland, and everyone you meet says the same thing. I can't wait to go home. I can't wait to go home.
You are so
It's
right.
like 3 days is just enough for absolutely everyone. I would say 2, maybe. From Davos, Switzerland, for our audience worldwide at the World Economic Forum, good afternoon. Good afternoon. This is Bloomberg Surveillance alongside Lisa Abramowitz. I'm Jonathan Ferro. Together this week with Anne-Marie Hordern, with your equity market on the S&P 500 positive by 0.3%, bouncing back by a few days of losses. And Lisa, the data's been good, and we've had a ton of pushback from central bankers. With that data, I think, really reinforcing the message.
It seems like the more optimistic we hear from a lot more optimism that we hear from the business leaders here at Davos, the more pessimism we hear from some of the central bankers who are saying, hold up, you keep acting like this and we're not going to get to where we're going. We're not going to be able to cut rates at all. So that seems to be the tension right now between some of the policymakers and some of the business leaders.
I'd say for the politicians, typically you come to a place like this, we've all been here a few times, the politicians usually get a feeling of that it's kumbaya. You mentioned this yesterday.
Yeah.
Nothing kumbaya about this moment. There are so many massive issues. If you can be constructive on the economy, and we can talk about whether you can, that's a conversation. I don't think you can be constructive on the dialogue when it comes to geopolitics, Anne-Marie, in any way, shape or form.
No, it's the big overhang over this Davos. It's not just a business meeting. It definitely feels like a foreign policy meeting as well because of what's happening with Ukraine. President Zelensky was here making his pitch. But of course, Lisa, you mentioned we have the Iranian foreign minister here at a time when Pakistan and Iran are having a tit for tat, and Iranian backed groups, whether it's Hamas, Lebanese Hezbollah, whether it's Houthis, are causing conflict in the Middle East.
Which explains why there are basically armies of police officers everywhere you go, and there are people who are at checkpoints that are high up there with huge guns that are looking out over all this. So it definitely seems like there is a very big military presence here. As a result of some of this, that is the elephant in the room that might stymie some of the optimism. But for the people who are actually on the ground doing deals, looking at what consumers are spending, if you look at what they're doing, it's not that dire. And I think that divergence just keeps coming out again and again.
전쟁에서 얘기하면 계속 웃네?
Put the microphones
기분
on. I
나쁘게?
log into the Bloomberg terminal, and Lisa sounds optimistic based on what she's heard in Davos, Switzerland.
Hold up.
What's the caveat to that?
The caveat is that the world could fall apart as people are worrying about, right? I mean, there are so many things that could happen. If it's inflationary in the Red Sea, although people are kind of poo-pooing that. Whether it's something massive about disruptions with trade, people are poo-pooing that too. So, I mean, these are some of the things that people are kind of taking off the table.
I'm
that
just
are
trying to work out what Happy Valley has done to Gramo over the last 3 days.
We'll analyze that in detail.
Okay. In the equity market right now, the S&P 500, that's the next hour on this show.
Please, let's not.
Equities bouncing back by a third of 1%. In the bond market, yields are a little bit lower after climbing higher over the last few days. Lisa, we are at 4.08% on a 10-year.
What we're looking forward to this hour, we've got some incredible conversations, including Ted Pick, Morgan Stanley CEO, Brian Moynihan, CEO of Bank of America. I just want to say all the banks, their CEOs have been so optimistic about what's ahead in terms of deals and people actually coming together. James Quincy, chairman of the CEO and CEO of Coca-Cola. We could talk all about price increases, but also Ozempic, and Dmitry Kuleba, Ukraine foreign minister. But right now, I've got to say, on the macro geopolitical level, there is nobody more important than our next guest, John.
Just absolutely fantastic. Michael Spence, the Nobel laureate and senior advisor at General Atlantic. Mike, good afternoon. It's good to see you.
Great to see you.
Just great to catch up, sir. The author of Permacrisis, together with Gordon Brown and Mohammed Al-Arian. We reflected on AI together.
Yes.
Just last year when that book came out. You've been on a panel this week about artificial intelligence. We're going to do the doom and the gloom. You're going to do the optimism. Right. Why should we be optimistic about this technology?
Because, deployed widely, it has the potential to produce an enormous productivity surge, relax the supply side constraints, relieve the potential inflationary pressures, and so on. Not tomorrow, not, maybe by the end of the year, but by the end of the decade, we could be on a completely different, sustainable growth trajectory. So that's the optimistic one. It's not to dismiss the downside stuff. That's important. But you need a balance, right?
움직임이 별로
What you don't want to
없네.
do is focus on the downside and then skip this enormously powerful tool we've been handed.
So I'll focus on the downside and you can convert me maybe.
Okay.
I asked the question in the last hour. In fact, I asked it of you as well last year too.
Yeah.
Globalization decimated manufacturing bases in places like America. A lot of jobs were displaced. A lot of people were out of a job, out of a career, and some of those towns are still suffering.
Yep.
There is a fear that this advancement in technology will do the same thing but to services. Is that wrong?
Yes.
일단 K 올라가, 쭉쭉 올라가.
Bias. People think, and for good reason, right? The Turing
나중에 들어줄 때 엄청 아프겠죠?
says Alan Turing, was trying to figure out how much progress we'd made in AI by figuring out whether we had a machine that when we talked to it, we thought we were talking to another human being. And we benchmark AI routinely against human performance. And that's also a fairly natural step. It's the next step that's problematic. Okay, so when people see this, the machines do images better than humans, then people say, why don't we replace the humans? Okay, but the AIs we have now are prediction machines. They write the first draft brilliantly. They may put some people out of business, but their best and most natural use is as powerful digital assistants, and the model's machine-human collaboration, not wiping the humans out.
What scares me, John was saying I sound really optimistic. I'm not about this, and I have to say, I've heard a lot about the potential to disrupt the financial system pretty dramatically using artificial intelligence and hacking into different systems and putting out there misinformation of all sorts.
Yep.
We're seeing all of the elections and this question around what kind of interference could really come to the fore.
네, 오늘
Battles
완전
on that front with
샷샷샷
artificial intelligence.
다짐했어요.
put that aside and just focus on the optimism?
No, you don't put it aside. So what James and I said, when we wrote this paper in Foreign Affairs is you just definitely don't put that aside, Lisa, right? That's serious. You've got copyright issues, you've got, misuse of a whole variety of kinds. What you do is balance it, with a program on the public policy side to make sure that this stuff doesn't end up in JP Morgan and a few other large entities, and and everybody else, like small and medium-sized businesses, managed sectors, are missing in action. So we're not saying it's either this or this. We're saying we need both.
So, because we're in Europe, I feel like we have to ask this question. Does it need to be regulated across multinational countries?
Yes. Right, because of the way the internet works, right? Election interference, flooding the system with, extremely plausible sounding misinformation or, biases and all that kind of thing. You can't regulate that just one off unless you close off your internet, right? Maybe the Chinese can do it because that internet is relatively isolated from the rest of the world. But for the rest of us, I think we need a global process as well as domestic regulation, for sure.
How are you looking at how AI is going to play into the election? We've already seen some, changes in ads because it was AI generated, different people's voices, and people view that as actual truth and fact.
Yeah, so I think we have to regulate that out of the system. And we don't know exactly how to do that. And it varies depending on where you are. I mean, if you listen carefully to the commentary on this, Europe has a very different attitude toward that. I was listening to the Minister of Communication in Singapore, remember our panel yesterday. They said, I know this probably won't work in the United States or in Europe, but when we see something that's problematic, we remove it.
그냥 음악 듣고 뉴스 보고 이렇게 합시다. 아니면 뭐 궁금한 거 있으시면 물어보시고 대답을 줄 수 있는지 잘 모르겠지만
But I have a little bit of sympathy for the Singapore approach. I mean, if this is just clearly destructive, maybe we should have the battle with the polarized free speech lobby. But anyway, it's not for me to decide.
No, you went there, so let's talk about it.
Yep.
How do you think these systems are going to change?
네,
Capitalism, free
조금 더
markets. I do wonder how things are going to shift, and maybe quite dramatically.
제가 오늘
Well, they're already changing it. I mean, I was
얘기하듯이
talking to somebody I won't name him, but
감기가 좀 걸려가지고 지금 정신이 없어요. 그러니까 말이 좀 꼬일 수도 있어요.
There'll be mini versions of the big ones. But they'll be pretty powerful.
원래
It's going to change everything.
말을 그렇게 해서 잘하는 편이
We're just going to have powerful AI digital assistants, right beside us all the time.
넋이가 나가고 있어요. 네, 분명히 좋은 기회가 있을 거예요. 지금 딱 기다리고 있어요. 계속 잣대 보면서.
I'm not so worried about that. I mean, there is a longer term discussion, about when these things become, 2 orders of magnitude more powerful than they are now, or whether they really are somewhere near, sort of artificial general intelligence. But I think we're a fairly long way away from that. So what we really got is just powerful tools in our hands, and it's up to us to decide how to use them. So I don't want to be Pollyannish about it, but I just think it would be a terrible shame in a world that has labor shortages, fragmenting supply chains, and lots of, supply side constraints, to throw away the most powerful tool we have for producing a productivity surge and growth.
There's a sensitive issue that sort of is the drumbeat under a lot of the jobs questions, which is that there are a lot of people who are not employed and who are not employable. And I'm wondering, as the world becomes more technologically advanced, you need to have some skill to be able to use these technologies. Will that part of the population grow, where it basically becomes that much more bifurcated between the people who are educated and have skills and those who don't?
It's an important question, but I think the trends are on our side. First of all, there's 2 hallmarks of Gen AI that you can see in the large language models.
네, 제가 보시다시피 제가 오늘 컨셉은 매도하는 여자. 저는 파란색만 누리고 있어요. 그러니까 지금 거의 17,000원 올라갔네, 가격이. 좋네. 엄청 좋아요. 쭉쭉 올라갔다가 괜찮은 타이밍에 팍 매도해버리고 쭉쭉 수익을 빨아먹으면 돼요. 아무튼 계획은 이런 계획인데 성공할지는 잘 모르겠어요. 일단은 해봐야죠. 왜냐면 어제도 이렇게 해봤는데 지옥을 봤어요. 지옥을 갔다 왔어요. 근데 거기 뭐 분위기 생각보다 괜찮네요. 물론 두 번 다시 가고 싶지 않지만. 그쵸, 더 올라가야죠.
I mean, they're both powerhouses. The only difference between now and 5 years ago is that the research and development community in AI was integrated, and now it's completely bifurcated. Right? They can't even talk to each other, and that's geopolitical tensions and national security issues. But beyond that, I don't see either one flat out winning. I know we're trying to hold them back by denying them access to various things, you know, the lithography,
대단하다고 생각해요.
and so on. But that's
한심장이라고 하고 싶은데 그렇지 않아요. 그렇지 않고
the Nobel laureate, giving us a lot to think about on that topic. Ramo, converted?
On AI?
Yeah.
Well, I think that there are going to be good applications. I'm just not convinced that the regulators can move fast
두 번
enough to
다시 충격받으면 안 돼요.
regulate something that's moving at light speed with the top paid executives and top paid tech creators. How does the government compete with that?
That's where I struggle too.
That's the issue.
Yeah, that's where I really struggle. Fantastic to catch up with the absolutely wonderful, the brilliant Michael Spence. Coming up on this program, Samantha Power of the US Agency for International Development. That conversation is just around the corner. Equities attempting to bounce up by something like 1/3 of 1% on the S&P 500 through most of this morning in New York.
보자. 지금 딱 올라가고 있네, 주식이. 니케이 105. 와, 나스닥 지금 떨어지면 안 되는데? 아직 일러. 아직 아니야. 어디 떨어져? 올라가 임마.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The new Bloomberg surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. The 2024 nominating contests are here, and the candidates are making their cases to voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is
아직
live and
전인데
live, bringing you the
근데
fastest
벌써
news.
조금씩 배고프기 시작하네.
And at the end of the day, that's what the American people want.
저 원래 먹방 할 생각이 없는데 근데 간식 같은 거 좀 먹을게요.
to the nomination.
It all starts Monday in New Hampshire, only on Bloomberg.
We have delivered very tough messages to Iran, including I had a discussion with the foreign minister last week. And obviously there's a number of sanctions and other measures already in place. But I think it's absolutely vital that we send a very clear and unequivocal message to Iran that its behavior in supporting these proxies, whether it's Hamas or Hezbollah or indeed the Iranian armed groups in Iraq and Syria, its behavior is unacceptable.
I'm told we shouldn't have favourites, but that was my favourite interview of yesterday. That was David Cameron, the British Foreign Secretary. Favourite because I think we could have conducted that interview for another 30 to 45 minutes, Bramo. We didn't even get to Brexit and his role in that, his departure, his return to politics. Before we even go there, we need to talk about the Middle East. Yeah. It's been absolutely dreadful what's been unfolding in the Middle East over the last 3 months. It's starting to have a real economic impact as well, Anne-Marie, given what's developing more recently in the Red Sea.
Absolutely. There's a situation in Gaza, of course, but then there's these Houthi militants that are firing at commercial vessels at the same time. Now we're tit for tat between Iran and Pakistan. And the question we asked David Cameron is, don't all these roads, whether it's Hamas, whether it's Houthis, whether it's Lebanese Hezbollah, lead to Iran?
오늘도 좀 욕심을 부리려고요. 조금이나마 벌어야죠.
Because the United Nations hasn't exactly played that role. There's been a real question of who plays the middleman in this, and actually it's emerged as Qatar, which you actually mentioned as being here. But it's a real shifting in sort of the global power structure of where things actually get done.
Let's talk about some of those issues
얼마?
right now.
거의 만 원이죠.
The
저
administrator for the
방송하는 거
United States
한
Agency
뭐
for
5시간?
International Development and former U.S. ambassador to
5시간
the
정도
United Nations. Samantha, it's good to see you.
4-5시간
Good to be
정도
here. Thank
하긴
you for being
하는데
with us. Can we just lean on your
그러니까
experience at the United
제품이나마
Nations?
뭐
We have
5만 원,
people
5만
like
원이라도
David
벌어야
J.
돼요.
Morgan talking about how dangerous the world is right now. From your perspective,
아니면 성해요.
how dangerous is it?
Well, objectively, you have more displacement on planet Earth than we've had since Hitler. That's bad. We have more conflict happening today than in more than 30 years. But I will say one of the priorities that President Biden had in coming into office was to rebuild alliances, to get democracies delivering for their citizens, to try to fight back against some of the more authoritarian trends, which are not just in big countries, but we've actually seen a fair amount of democratic
너무
backsliding,
목방으로 돼버리다고 보니까
where election results and so forth are challenged. So, you know, I think what we see when it comes to Ukraine or even the humanitarian response to Gaza is more countries digging deep to provide more humanitarian assistance. There is a lot of diplomacy going on behind the scenes for sure, including thinking, for example, in the Gaza situation about longer term, a two-state solution, getting that political process back on track. But there are a lot of stakeholders.
그리고 쪽쪽거리면 안 되니까 마이크도 꺼버릴게요. 좀 이따가 다시 내 모습을 보여드릴게요.
Making sure that we're organized, because my agency is not going to be able to deal with all the humanitarian symptoms in the world. We have to deal with root causes and end these conflicts, you know, so that the citizens aren't suffering to the extent that they are today.
This might be a difficult question for you to answer, but how problematic is it for you to deal with humanitarian aid that's needed to get into Gaza when the United States vetoes ceasefires at the United Nations?
Well, part of the challenge, of course, is that the very people behind October 7th are still at large, still want to kill Israelis. And while those capabilities exist, of course, the military effort is continuing. We have managed to increase humanitarian assistance that is flowing in, but not enough. And there's a major food crisis imperiling the people of Gaza that USAID is, through our partners on the front lines, of trying to respond to. So we think it's incredibly important to work behind the scenes with the Israeli government, with the Egyptian government, with all stakeholders to increase that pipeline. I was in Egypt about a month ago and just saw the backlog of truck after truck after truck drivers who had food and medical supplies to deliver to the people of Gaza, who had to sleep in their trucks for 3 or 4 days waiting for permission to clear.
Because the U.S. is in touch with the Israelis. They give them the aid. Shouldn't there be more leverage in pushing on them to?
Well, I think you've seen the exercise of that leverage to get us where we are, but we're not. Nobody can be satisfied, again, given the condition of civilians inside Gaza. But again, remember how October 7th happened. A lot got into Gaza, and it got in through channels that, when the after action is done, we will better understand. But you can understand why people who have just gone through the experience of having more than 1,000 civilians brutally murdered and all these hostages taken would be cautious about just open sesame and letting everything in. But gradually, we're getting more and more points of entry opened, and again, we need to get the number of trucks, humanitarian and commercial, way up beyond where we are today.
To build on what Anne-Marie is talking about, the U.S.'s leverage, how much has it declined as its role has become maybe muddied on the international stage? And I ask this of you, someone who's been on the international stage representing the U.S. for decades. How much have we lost clout in the U.S.?
Well, as one who was ambassador to the UN, member of President Obama's cabinet, and then came back, certainly our alliances had eroded in the intervening 4 years, and that is why Secretary Blinken and the President have invested so much in restoring those alliances, because alliances aren't popularity contests. They are networks that you leverage at times of crisis. Look, we're here at Davos. I don't feel right now any loss of leverage. I'm trying to get the world to rally together to end plastic pollution. The number of major CEOs that show up to be part of that coalition is extraordinary. We're trying to end lead poisoning in developing countries. 1 in 2 kids in developing countries have elevated levels of blood, lead levels in their blood. Again, philanthropists, foundations, other governments stepping up, and Ukraine is probably the best example where U.S. investment, every dollar that USAID and other U.S. agencies have invested has brought $2 in from other donors. So the leverage is real.
As someone who used to be the ambassador to the UN, is the UN relevant anymore?
The UN is countries. The UN is, Richard Holbrooke, the late great diplomat, used to say, blaming the UN for the world's problems is like blaming Madison Square Garden when the New York Knicks play badly. You're blaming a building. We need countries to change.
I don't like MSG.
The Knicks are playing better now, but it's the countries who constitute the UN who should not be abetting transnational crime, who should be standing up and enforcing sanctions against countries like Iran that are fueling these militant movements. It is the countries at the UN, for example, not that long ago, a few weeks ago, that stood up against the Houthi attacks on commercial shipping. Why? Because those countries recognize that their interests are at stake, that as food prices grow up because of these attacks, that's going to affect people in countries around the world. But there's too much polarization, and there are fewer democracies within the UN now than there were 10 years ago. So we also need to see democratization proceed and an end to the march of authoritarianism, because authoritarians, in repressing their people, also prevent there from being the kind of accountability that you need to see more prosperity. When you have less prosperity, more people who can't get access to jobs, who can't criticize corruption in their own neighborhoods, that's a doom loop in terms of more extremism, more instability. So, again, governance and economic development are very linked, and people have tried to separate them of late in a way that's not helpful.
We have about 60 seconds left. I want to squeeze this question in. There's a bit of a division that's emerged, and I would say it's been exacerbated by what's taken place in the Middle East over the last 3 months. A division between the administration you represent and the younger population who would typically vote Democrat. How do you close that gap over the next 8 months?
Well, it's not my job to talk about domestic politics at all. I will just quote President Biden, who says always, don't compare me to the almighty, compare me to the alternative. So I think that's the nature of the argument. And, when you think about the kinds of values that young people have, wanting to protect the natural world, wanting to fight climate change, for example, that's a leading animating issue for young people, that the choice, I'm sure, will be evident.
Samantha Power, it's good to see you. Thanks
Thank
for
you.
being with us. Thank you very much. Of the US Agency for International Development. Coming up on this program, Steve Pagliuca, the founder and CEO of PAGS Group, the owner of the Boston Celtics, and an Italian team called Atalanta who beat my beloved AC Milan last week. And I wake up to a text from Steve Pagliuca himself just to show me the highlights. A YouTube link.
Brutal.
Yeah, what do you think we're going to be talking about next? Okay, from Davos, Switzerland, at the World Economic Forum, this is Bloomberg.
was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action at a new time, 11 a.m. on the East Coast, 8 a.m.
멋지고 화려한 이름의 끝은 어디일까요? 우리는 얼마나 더 어렵고 복잡한 아파트의 이름과 마주해야 하는지 알지 못합니다. 그래서 한화포레나는 생각합니다. 우리가 고민해야 할 것은 포장된 이름이 아닌 주거의 가치라고.
앞선 기술이 생활을 변화시키고 미세먼지는 더욱 세심하게 잡아주며 일상의 여유는 더욱 편리하게, 걱정 없이 반려동물과 함께 뛰놀고 어제보다 더 멋진 나를 발견하는, 기술은 장벽이 아닌 도구가 되도록 당신의 생활을 먼저 생각하는 것, 이것이 바로 한화포레나가 찾은 주거의 가치입니다. 새로운 기준이 되다. 한화포레나.
Sensor, blood oxygen sensor, and a whole host of other potential challenges.
Why don't they just pay the company? Why don't they just pay the company so that they can use the technology? I don't understand. Are they still saying that they haven't taken that technology for someone else?
I'm sure there's being litigated.
It's still being litigated.
It's being litigated, so I'm not going to weigh in. But you can buy the watch here. You can buy the watch here if you want the
as you said, I think you can go to Best Buy, can't you? It's just Apple can't physically sell them. Is that right?
Or distribute them or whatever.
Right.
Look, I'm not an expert in this, but I didn't even realize they had Best Buy in Europe. That's all I can say.
No, I'm not saying they do.
No.
I'm just saying you can go home.
Okay, there was something else. Best Buy.
All right, let's move on. All right, bonds look like this: 2-year, 10-year, 30-year. Yields climbing in the last 24 hours off the back of some comments from Governor Waller of the Federal Reserve. Put that together with the data we saw yesterday, which we really haven't talked much about so far this afternoon. We need to talk about US retail sales, just hot, pushing back against this idea of weakness and rate cuts coming in March.
I mean, honestly, to me, this has been one of the biggest interesting drivers of the market activity, is that we've got better than expected data, better than expected forward-looking indicators from the Beige Book. So this raises a question, and I mentioned this before, but how much of this can come as growth that's not inflationary? Can we still see the disinflation continue without any kind of hit to the growth, the sort of soft landing or no landing that some people are talking about?
Let's finish on foreign exchange.
Move on.
Let's move on. The euro against the dollar, something like 108, 109 over the last few weeks or so. Moving the GDP of Italy and maybe the Eurozone is Steve Pagliuca, the founder and CEO of Pax Group, senior advisor at Bain Capital, owner of the Boston Celtics and an Italian club called Atalanta. Thank you for the text just last week. Thank you very much. Defeating my beloved AC Milan. How much fun are you having? It just seems like you're having a blast right now.
It's been a good year. I don't want it to end. 2024 open up in a good way. The Celtics are winning, Atalanta's winning, and the markets are doing well. So
let's get to the NBA first. So Cuban getting out of the Mavericks. Some people talking about peak valuations of NBA franchises. Can you give us your view on that development?
You know, I don't think they've peaked at all yet. Basketball is a global sport. I've invested in soccer. It's a global sport. With streaming, I watched the game actually last night. I watched the Celtics game on my phone last night. So we haven't really penetrated all the markets. Media rights are still going up. And so the programming, it's the only program, I think, the top 10 of the 10 rated shows in the U.S. were sports programming.
Let's talk about that. NFL is absolutely crushing it. Let's build on the NBA. It feels like, in the minds of some, so let me give you that perspective, that we're hitting this ceiling, that the broadcasters never really truly own the asset, they rent it. They're finding that it's getting really expensive, and they're trying to work out where on earth to put it. Do you land it on Peacock, on a streaming device? Do you go to as many homes as you possibly can through cable? Cable's dying, what do we do? What do you see further down the road that suggests to you that media rights, TV rights for sports like basketball can keep climbing?
Well, we're in a period now, as you guys have followed media investing in the last 30 years. You've had bundling, unbundling, rebundling, unbundling. We were in a big unbundling phase. Streaming coming in with cable,
분위기 아주
linear
좋네요.
TV. And what that means is the new internet players, Google, Facebook, they all want programming for people to watch content. So content is more and more valuable. NBA content is hugely valuable, and so they're fighting over that. I think you'll see some consolidation. You'll see these streamers consolidating, back to the bundling, because it's inefficient to have multiple software systems, multiple marketing. So you'll see a rebundling, but the programming will always be valuable because it's the only thing that really aggregates eyeballs. And so I don't think we're through with those rates going up for premier sports like NBA and NFL.
Are buying sports teams better than buying regular companies?
If you win, it's better.
I wonder, is it a better investment?
It's really bad when you lose.
Okay,
when
but
you
is
see
it
a
better
sign,
investment?
you fire the owner.
Well, I'm going to ask this because, the entire Middle East delegation here is trying to buy the whole host of different football clubs in Europe. You see this as sort of the hot investment. At what point is it too hot to handle? And this is sort of what happened in certain spheres of private equity during some of the boom times that turned into bust times.
Well, it's turned out that, we didn't buy the Celtics. We didn't have a presentation of 17% IRR. It was like banner 17. We did it as a labor of love. So I have to say, I certainly didn't predict the values.
위로 올라가자.
But it turns out that sports has been a very good business
근데
because of this
알바
dynamic of
아니고
people battling for
지금
eyeballs.
얼마 정도는
And
올라갈지는
secondly, it is a fun investment.
제가
People
지금 누리고
like to be part
있는
of tribes. And
바다,
sports is a
지하,
great feeling.
지옥.
Even something like AC Milan.
그 정도까지 내려가야죠.
It's also a great feeling unless they get hammered by
it's
your
a great
team.
feeling to be part of this club. And when we
그러니까요.
got the team in 2003,
다
they barely had
나가버리셨네요.
contact with any of their customers. I don't think they even had the emails. And there was no
아니면 뭐 그냥
Facebook,
한국어
there was
모르는
no
사람일
Twitter,
수도
now X.
있으니까
So what's happened is
그냥
technology has
아
allowed the fans to get right
외국인인데
up close to the players.
분명히 영어를 해야 될 텐데 생각하고 들어왔는데 아니었어요. Sorry guys. I do speak English, but it's not this live 방송.
I love how John opened it up. It seems like you're having so much fun, and you're having fun with the tribe of sports, but you're also having fun with the tribe of artificial intelligence, which is basically permeating every corner of this get-together. And I'm wondering, you've invested in companies for many, many years. What proportion of some of these AI companies and initiatives do you think are actually going to come to fruition and be valuable?
That's a great question, Lisa. It reminds me of 1999. I was going out to California, and people would come in with a term sheet and said, "Okay, you have 2 hours to invest in this company that's going to sell medical devices on the internet."
외모가 이래가지고 영어를 할 줄 알아야죠. 아니면 오해를 받아요.
If you walk around Davos here, I think they should change it to the Artificial Intelligence Forum this year. Everything seems to be
다른 나라 말도 저한테 사실 한국은 다른 나라 말이죠. 그러니까 이렇게 생각해 보면 네, 다른 나라 말 할 줄 알아요.
But I think it'll be just as revolutionary as the internet was. Right now, I don't think people realize a model like ChatGPT.
싫어요. 제가 왜요?
Transformer model. It cost $400 million just in GPU to program it, to make the large language model. So Liquid AI, a company we've invested into, the thesis from MIT is they can configure the software more like the brain. So they have 900, let's say, nodes versus 100,000 nodes in ChatGPT. So you can program a large language model for probably a 20th, 15th, or 20th of the cost.
So you're going to need that cost
네,
to come down because if you think about all these models,
고려인.
built on those models, you
고려인이라고
take up
생각하면
half the
돼요.
power in the United States. So I think we're still in the experimentation stage, and CEOs are saying, thoughtful CEOs are looking at this and saying, where can I put it in my business? How
잘못된
can I
나라에
make it secure?
태어난
If you
항상.
build your own large language model with today's technology, it's $300-400 million, so that's not going to happen. So new technologies are going to have to come out to make it cheaper, more efficient, and more secure.
When did you begin to become interested in all of this, Steve?
브리스.
30 years ago, I started a technology fund to bank out with information partners. And
오늘은 더 이상 영어 타임이 없어요.
A conference in Aspen. It looks like caveman now, but it was called convergence.
왜냐면 영어로 해버리면 한국 시청자분들도 다 나가버릴 수도 있으니까.
Nope. But I've been interested in tech and been a tech investor and consultant for many years, and been through the internet boom, the craziness of I'm standing in California in 1990. These term sheets are coming in.
I bet.
This is crazy, and now it's happening again on AI. But AI is going to have a huge impact on productivity. It's going to be
맞으세요, 지원 씨는? 아재 개그 참 잘하시네요.
To me, it is a supersized slide rule. When I was Methuselah studying accounting, I used to use a slide rule and look at a table, and they said, "Oh, the computer's coming in 12 HP 12C. It's going to ruin our minds." It doesn't. It's a tool that's going to expand our capabilities, and AI is incredible.
Mike Spence said the same thing, Nobel laureate, General Atlantic, working over there with Bill Ford. We talked to him about 40 minutes ago. Is there anything about it that concerns you? Anything whatsoever? Is there something, let's say you get some term sheets. I want you to draw a distinction between the companies you would work with and the companies you're worried about because you think they'll do more harm than good. How do you draw that distinction?
Well, that's a great question. It's a tough one. I would compare it to anything else. Like nuclear power was great. Nuclear bombs can destroy the world, right? If you have bad actors. So artificial intelligence, if you have a bad actor behind it, it's going to be a problem. So what's going to happen is you're going to have a regulation. You're going to have people watching the internet. You're going to have people punishing and thinking about security. So again, I view it as a tool, but it's a tool that can be misused. So there's going to have to be a certain amount of regulation and a certain amount of more security and more watching what is happening by the world.
On the flip side, are there any companies that you're seeing? Are there areas of artificial intelligence that you're seeing where you think companies are going to become the next Facebook or Apple?
There's two schools of thought. One school of thought would be one company, maybe ChatGPT, is going to merge and become the Google, of artificial intelligence. Another school of thought is these models will come down in price, which I would say liquid AI is one that can drive that price down, and you will get many large language models that are usable. And secondly, you'll focus on verticals. So there'll be artificial intelligence for medical. So it doesn't make sense for a medical artificial intelligence system to go out and read, the Mozart symphony. It has no relevance to medicine. So I'm in the camp that believes it'll be a hybrid system. There'll be a few foundational models people will use. They'll be large, but they'll be foundational. And then there'll be probably companies that can capture vertical markets. And so you'll have it'll be a network effect. There'll be a company that captures medical, a company that captures industrial, etc.
Before we let you go, you mentioned 1999, and we can't let that slide. If we're looking at another 1999 internet bubble-like boom in artificial intelligence, is there going to be some kind of bust and how painful will it be?
Yeah, there's always busts after the boom, for sure. The good news is
근데 사실 여기 내수 먹었으면 지금 참 수익을 많이 먹었을걸? 여기
and there'll be a carnage, and then there'll be the companies will emerge, the best companies will emerge, and there'll be several of them. And I think, again, different than Google dominating search, there'll be companies that really dominate vertical markets. And by the way, if there is a disruptor, if you think about AT&T used to dominate the phone business and then everything became fragmented. Google looks unassailable, but if there is a disruptor, it'll be an AI company that gets you a better search. So when you say, I want to know what the best pasta is, it won't give you 5 articles. It'll give you a recipe for the pasta, why it's the right pasta, and who's the person that invented the recipe. That will be a big disruptor for Google. That's why Google's spending so much money in AI.
안정하게 조금씩 먹다가
in a great era where there will be some disruptors
뭐 10만 원 정도 그러지 않았을까? 여기 빼고 그리고 다시 물로 매도로 확 가는 게 좀 괜찮지 않을까? 근데 이거 과거니까. 과거인데 앞으로 어떻게 될지는 알 순 없죠.
Oh my gosh.
So I didn't know. I grew up in a gourmet, restaurant.
Can I come over?
Used to make the sauces at the back of the apartment building. They'd have these big sort of oil canisters and make the tomato sauce.
My family still does that.
Oh, just amazing.
Canning it. 200
She
cans.
used to wake up at 6 in the morning and make fried pizza dough for me when I was a kid.
I love it.
I had breakfast every Saturday and Sunday.
Steve, you're taking me back.
It was a good life.
Yeah, I didn't have that. That was good.
Honestly, the food there
It's so much better.
that was like a 3 Michelin star restaurant, and like you say, Steve had no idea it was that good at the time. You try and find that elsewhere, you cannot find it.
We have to get you a Canada Goose coat, John, on the company Bain Capital Investment.
Of course, yes.
It's the warmest coat in Davos.
Okay, there's the sales pitch. James Soon, CEO of Trip.com.
Get an email back, and Debbie, who's been with him for over 40 years, wrote back and said, "How's October?" I said, "I'll be there because we're not going to the playoffs." And that led a series of 5 or 6 years where I go back to Omaha, and he said, "Alex, you always want to be a gentleman. You want to be a great baseball player, and then the 2 rules of investing are 1, never lose money, and number 2, don't forget rule number 1."
COVID has shown that there's a huge pent-up demand. That hasn't eased. I think people thought this revenge travel would ease down. I mean, it was hard getting here. And I think elasticity on pricing is good, coupled with ancillary. So I think airlines are in a good position, whatever the shocks are. Oil is still, despite all the geopolitics, there's a lot of supply.
Steve Pagliuca trying to exchange codes in a commercial break. He does not want this one on TV anymore. That was Tony Fernandez, AirAsia CEO. That's what that was about, wasn't it?
He's going to troll you all day long.
He wanted a commercial for Canada Goose live on Bloomberg TV. Okay, Steve, you've got to pay for that.
And the Celtics.
Yeah. Okay. Well, he got that for free.
Yes.
Okay. Let's turn to financial markets briefly and squeeze in some of the price action for you in the equity market on the S&P 500. It is a day of gains, a morning of gains in New York City for now at least, up by 0.5% on the S&P 500. Yields are coming in by a single basis point, 4.09% on a 10-year. Just a story this week of central bank pushback. Wonderful to see Francine's interview with President Lagarde of the ECB on the front page of the Financial Times a little bit early this morning when I picked up the newspaper. Pushback from Lagarde, pushback from Waller, I think endorsed by the economic data programme we saw yesterday in the United States.
And not just the economic data, also some of the rhetoric that we're hearing from CEOs that actually have some sort of incentive not to lie blatantly before they put out some sort of economic projections. All of them are talking with real positive kinds of tones about the potential for consumer spending to continue just as robustly as we've already seen it.
Let's find out what's going on in China. We can have that conversation with Jane Soon, the CEO of Trip.com. Jane, good afternoon.
Good afternoon.
Largest online travel platform in China. That is a big deal. So give us an idea of what's happening with the Chinese consumer, because what we're told in the United States is that confidence is shot. It is broken. It is not bouncing back. What do you see in the business?
Yeah, for our business, it's doing very well. We have 4 segments. The first one is domestic travel. Not only we recover fully to 2019, we far exceeded 2019 by more than 50%. The second part is outbound travel, which is to bring Chinese travelers from China to the rest of the world. So we look at both demand side on our search as well as the supply side. The demand side already exceeded 2019 level. However, on the supply side, we still have 2 major hurdles. The first one is the visa application still takes too long, particularly to Europe and to the United States. The second hurdle is the flight capacity and shortage of the labor. I'm very hopeful in 2024 we'll do better in that segment.
I'm curious, though, whether Chinese consumers want to travel to Europe and the U.S. in the same kind of numbers we saw in 2019, or has something shifted as some of the international relations have frayed?
Not really. Chinese people are taught for 2,000 years to travel by Confucius. His teaching is it is better to travel 2,000 miles than to read 10,000 books. So parents always want to use travel as a means to educate their children. When you're traveling, you're not only learning theories, you are working with the people along the way. So Chinese people enjoy traveling.
Well, I'm just curious to see how this pairs with some of what we see in the economic data and some of what we're seeing out of even official rhetoric that just demand is not there. You look at loan demand falling off a cliff regardless of rates that have been falling pretty significantly. You talk about the potential for some sort of further stimulus. Where's the disconnect in all of the demand that you're seeing on your site and what we're hearing about from all of the other indicators?
Yeah, because China is very big, we need to look at different segments. Certain segments have pressure. For example, real estate might have some pressure. However, if people are not buying houses, their disposable income is increasing. So the segments that's doing very well, travel is doing very well, entertainment is doing very well. For example, concerts, music festivals, opera, these are doing very well. Wellness products are doing very well. So really depending on the segments.
You mentioned how it's difficult for Chinese consumers and citizens sometimes because the bureaucracy of visas to go, say, to Europe and the United States. Where are Chinese tourists going? What are the top?
There are certain regions doing very well. For example, the GCC countries in the Middle East, they offer free visa. They double the flight capacity, so we're bringing double, triple volume into the region. Thailand does very well. The Prime Minister just offered 5 months free visa. He personally went to the airport.
주원 씨, 여행 가시려고요? 참 부럽네요. 어디 가시려고요? 비밀이 아니면 알려주세요.
And China, on the other hand, also extending their welcome to the rest of the world. The first batch, we issued free visa for 6 countries: France, Germany, Italy, Spain, Netherlands, and Malaysia. And then this week, we added 2 more countries, Switzerland and Ireland. And Singapore and Malaysia and also Thailand.
그러니까요. 잘못하면 안 돼요. 잘못하면 안 되고 진짜 어제처럼 해버리면 안 돼요.
In travel and experience or going after some luxury goods?
I think China is very big. Out of 1.4 billion people, you will find all kinds of customers. The most expensive
유럽 같은 아시아? 유럽 같은 아시아.
per person per trip. 80 days
유럽
around
같은
the world.
아시아면
And it only took us 17
싱가포르?
seconds to sell these packages.
아니야, 싱가포르
So,
아니고
we do
싱가포르
have,
너무
very affluent population. And also
아시아 같은
there
아시아.
are people, young people wants to have good experience, attending, listen to a concert, attending a music festival.
글쎄.
So you can find different categories.
Jane, you went through a range of countries, you listed them. There was one I didn't hear. I didn't hear you talk much about the United States of America. I understand it's difficult for you to talk about politics, being a Chinese company, being the CEO of one. I'll talk about the politics briefly and you can kind of walk me through the consequences you might be seeing. Clearly there's no love lost right now
네,
between the United States and China. It's a difficult relationship.
계속 올라가고 있어서 조금 좀 기다려야 될 것 같아요.
The United States right now, Joe Biden, and previously with Donald Trump. Has that led to less travel? What do you see? Are Chinese tourists traveling to the United States like they were before the pandemic?
근데 주원 씨 보니까 영어 할 줄 모르시잖아요. 어떻게 다른 나라 가시려고요? 참 궁금하네요. 혹시 개인 뭐 통역사 같은 거 있나요?
Price is going up. How expensive is it to travel between the United States and China?
Exactly. Price, as you can see, particularly in a major city, London, New York, becomes very expensive. But people have been longing for travel after 3 years of the lockdown. So I think they're ready.
We were talking about how there's the biggest delegation from China here on an official stature since 2017. But you were mentioning there aren't that many business members that are here from China. Why do you think that is?
I think this is the first year without, all the control measures. Gradually, I believe more and more people will come and attend these meetings.
고생하시겠네요.
Because there isn't necessarily the interest or a desire for the investment from overseas.
Not really. I think particularly during this time, we should stay engaged and really let people know what's going on in China. And the government is taking a giant step to welcome friends from all over the world to visit China. So I hope you can all come.
You'll have to arrange the trip for us.
Absolutely.
Well, based on what you've said about prices from America to China, we want a discount. I need like a major discount. Jane, thank you. Jane Soon there at trip.com. Jane, appreciate your time. Thank you very much. China's largest online travel platform. Just some insight there, Lisa, into what's going on domestically and what's happening with international travel.
I thought that the point about visas is
it's massive. It's a huge issue.
The idea that people can't get visas and that some places like the Middle East are saying, hey, come on down, come buy all of our luxury products and we're going to make it super easy for you.
Well, that's the exact point that you hear from Mohammed bin Salman and some of these leaders. They want to not just have an economy that's embedded with fossil fuels. They want to become tourist destinations.
Coming up on this program, we're going to catch up with Ishwar Prasad, the professor of trade policy at Cornell University. That conversation is just around the corner. We'll talk about international trade, fold in some international politics, get to the economy.
갤럭시 24?
Maybe we should be a little bit more upbeat on the global economy.
갑자기 무슨 말이죠? 근데 마지 랭귀지 그쵸. 웬만한 문제를 다 마지 랭귀지로 해결할 수 있는데 뭐 시장 같은 경우에는 뭐 뭐 이렇게 보여주면 되네요. 근데 뭐 큰 문제 해결하기가 좀 어려울 수도.
Cross borders, just like they always have. Where is the opportunity? That is really the main story I've taken away.
Without a doubt. One more hour still to go. Looking forward to that next hour on Bloomberg Surveillance. Going into it, counting it down to the opening bell, with equity futures on the S&P 500 slightly elevated by 0.4%, up by 0.4% this afternoon. This morning in New York.
진짜요? AI 번역 기능 알아봐야겠다. 물론 전 별 필요가 없긴 한데 그래도 혹시 한번 알아봐야겠다. 시장 저 사실 삼성은 안 쓴 지 오래돼가지고 지금 신상이 뭐가 나오는지도 몰라요. 이거 알아요. 그 거꾸로 이게 꽂는 핸드폰 있잖아요. 이거 좀 탐나요. 네, 거꾸로보다는 그냥 플립인가? 이거 좀 너무 조그맣고 너무 귀엽기도 하고
This is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists.
와, 실시간 번역하는? 이거 좀 밥줄 끝낼 수 있는데? 내 밥줄.
Which ones are good on the marketplace right now? I think founders have woken up to the reality that taking on more money at higher terms
생긴 게
doesn't
좀
necessarily play to their benefit in the long run.
예쁘다라고 하려고 했는데 네. 디자인이 참 예.
12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television.
네, 아무리 AI라도 그 번역은 그 정도는 좀 정확하지 않을 수도 있어요. 자기 국어밖에 안 돼요? 참나.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of that material.
펜도 있네요.
And so I do think both will basically continue to grow and continue to be very relevant.
저는 아이패드 쓰기 때문에
And the big thing that's changing is actually the risk taking is what's going to move. And so we've historically had risk taking in the UK.
아니 뭐야? 카메라 6개야?
That go with it, not the people alone, but the assets that go with it. That's the next phase of what we're now moving into, and that will be a material change.
참 디자인이 참 잘 모르겠네요. 색깔도 그나마 오렌지색 좀 귀엽긴 하네요. 저기요. 블랙이 없네? 블랙이 없다니. 제일 기본인데 좀 블랙을 되게 좋아해요. 물론 지금 제 핸드폰이 제 핸드폰도 오늘 파란색이요. 안 보이네요. 파란색이요. 오늘 완전 매수하려고요. 매수래. 매도.
This is Bloomberg.
저도 오늘 수익을 많이 보고 그 핸드폰 대신에 다른 거 사려고요. 근데 제가 원하는 거 사려면 이런 식으로 해외 선물을 하면 세 달, 4달 있다가 살 수 있지 않을까 싶어요. 제가 원하는 제품은 좀 많이 비싸요.
It is day 3 here in Davos, Switzerland at the World Economic Forum. It is hour 3 for Bloomberg Surveillance. Good afternoon for our audience worldwide, live on Bloomberg TV alongside Lisa Abramowitz. I'm Jonathan Ferro, together for the week with Bloomberg's Anne-Marie Horton. And your equity market attempted to bounce on the S&P 500 by something like 0.4% after 2 days of losses. Here in Davos, Switzerland, on the economy, I'd say things a little constructive. I wouldn't say upbeat, but better than downbeat. On the geopolitics, absolutely dire. And Lisa, that's been a story of the week so far.
Especially with armies of police officers marching around. I really do think that sort of adds to the tension, this idea that there are these officials that would be massive targets, whether you're talking about the Ukrainian president, whether you talk about the president of Israel.
욕심쟁이? 그쵸. 제가 좋아하는 데 있어서 욕심을 부릴 수밖에 없죠.
Yeah, there's also a sniper behind your head, Lisa, not to mention that.
왜냐면 제가 좋아하는 거 사면 헷갈릴까요?
And the cloud over the business community right now is geopolitics. Whether it's
행복은 절대 나쁜 거
Washington, D.C.,
아니에요.
about who's going to be the next President of the United States, or the
그러니까 30분 있다가 괜찮은 좀 중요한 발표가 있으니까 저도 이거 지금 누리고 있어요. 계속 언제 들어가려나 계속 생각 중인데 근데 아마 딱 그 발표 직전에 들어가는 게 좀 괜찮았어요.
The very fact that even with strikes from the United States and the UK, in the United Kingdom, we've seen this, what now, twice? Twice in the last week or so, Bramo, and yet still we haven't been able to restore order.
Which is the reason why there is a lot of gloom around trade in particular. How does trade sort of revive with these tensions between countries, but also the freedom of the seas being fundamentally challenged? Because if the Houthis if they're gonna get away with this, why wouldn't other groups do the same thing? It's a very low impact way to really disrupt the whole line.
조한 씨 무서운 말 되게 많이 하시네요. 미국 신규 실업수당 중국 공수 필라델피아 제조 옵지수 뭔지 모르겠어요. 좋은 거겠죠?
I must say 2024 is starting off from a banking perspective quite well.
We feel quite strong in 2024 as all of those investments are going to deliver for us later. But the direction of travel is the same. Clients are still there.
The regulatory environment's really uncertain in the U.S. The rules around liquidity, the rules around capital, the Basel III endgame.
Regulators are looking in the wrong place, looking to over-regulate the banks.
It's going to be a bumpy year, but more than anything else, we've got to be resilient. We've got to be prepared to react to news.
I'm very much concerned about the small and mid-sized banks. They've got several risks happening at this point in time.
There's always concerns, but today the regional banks are stronger.
It's all about banking over the next few hours on Bloomberg Surveillance. Bramo, two big conversations coming up a little bit later.
We are so looking forward to having MorganStanley's Ted Pick, the new chief executive officer, who's going to join us shortly. And then, of course, Bank of America's Brian Moynihan on some of these questions around some regulations, capital requirements, and the competitive edge with the growing private markets that we keep hearing.
Yeah, the mood of maybe the bankers on those capital rules downbeat. Our next guest thinks we should be a little bit more upbeat, perhaps, on certain issues. Ishwar Prasad joins us now, the Professor of Trade Policy at Cornell University and former China IMF head. Joins us now. Good afternoon, sir.
Good afternoon.
Professor, why do you think we should be in a better mood?
Well, maybe it's not time for celebration, John, but certainly there is some reason for optimism. If you look at inflation around the world, it's on a downward glide path. The largest economy in the world, the US, is doing pretty well, all things considered.
연방 준비인에서
most of the indicators are coming in relatively positive, and it looks like they can sustain decent growth momentum over the next year. India is doing well. Certainly the Eurozone is very downbeat, but overall, as you look at the global macroeconomic position, it doesn't look too bad. Not great, but not too bad.
감사해요. 오늘도 조한 씨 덕분에 그런 거 알게 되네요.
He was much more downbeat when it comes to engines for growth. What is the engine for growth in the global economy this year?
That's going to be difficult. If you think about the two largest economies, they're doing reasonably well, and certainly there is a question about how much we can count on US consumers to continue stepping up to the plate. Chinese consumers are trying to do so, as your previous guest indicated, but whether they'll really pull in global demand remains open to be seen. One of the interesting issues here is whether all of this promise that productivity gains might come from the new technologies might actually start showing up soon is a potential growth driver. We've already seen some indicators in the US data, and it's possible that we'll start seeing this in the data more broadly. But of course, the cloud hanging over all of this, as you said, is really dampening the mood in terms of where the economies might be going.
There's also a feeling that it's not just deglobalization, it's the US separating itself from the rest of the world and putting up these hurdles, whether it comes in tariffs or other types of measures. I'm really struck by the number of executives who've come on and said, you know, Biden isn't that different than Trump when it comes to some of the tariffs and some of the other policies. So how much does that put a damper on international trade, particularly with the U.S., at a time even with the uncertainty of the election, regardless of who wins?
The uncertainty is really the crucial issue, because it's clear that we're not going to move to a stage of dampened conflict. If anything, conflict gets worse, and the best case scenario is that things don't get worse, especially between the US and China. And that's not a very good environment to do business in, because you know that the economic policies are going to be largely driven by the political cycle, and there is this broader theme of decoupling, de-risking between the economies, and how that translates into policies is never entirely clear to businesses, so they hold back on investment, which ultimately ends up hurting growth and possibly even productivity growth.
Have you ever seen seen a wider divergence between business executives that are planning out trade routes and that plan to lean into the globalization as much as they are, and populations that are leaning against it, and the politicians who represent them leaning against it and talking about nationalism more and more.
Yeah, the narrative that globalization has not worked well for everybody, especially the economically underprivileged, that has certainly taken hold. And if you layer on top of that national security considerations, then it becomes a very potent mix that's very difficult to get around from a policy perspective. So the narrative that we need to protect ourselves, that we need to make sure that we can insure ourselves against geopolitical risks, let alone all the other risks out there, that's a very compelling narrative, and it causes an inward-looking turn to policies. And that ultimately is not good for the world economy, and especially not for businesses, which explains why you're hearing these negative sentiments from businesses.
The concern amongst a lot of Europeans at Davos has been the return of Trump to the White House. But we talk about the policy, given your expertise is in trade, of what his 10% tariff wall would actually mean, not just for inflation in the United States, but also American companies that want to do business abroad into foreign markets.
America has been the trendsetter for globalization, for opening up, for free markets and so on. And a pullback from that, I think, has very important implications for how this narrative plays out in the rest of the world. If America starts putting up walls, that is going to mean that other countries will find it much easier to start putting in place restrictions of their own. And that could certainly lead to a disruption in trade. Now, having said that, businesses understand very well that even if you don't take advantage of the full spectrum of globalization, having regional supply chains, even in North America, for instance, can be very beneficial. So we might see a splintering of trade, even if not a complete pullback from trade. But certainly it is going to add to costs in addition to the uncertainty, and that's not good for inflation, it's not good for economic progress, and ultimately it's not going to be good for growth.
If we were to see that, though, who wins? What countries win in that environment? Does China win?
I don't think anybody really wins. The question is who loses less. Because ultimately, I think globalization has worked reasonably well. Again, in certain parts of the world, it's not worked well for certain segments of the population, but that's largely because of domestic policies. I think if the rules of the game are set, that everybody plays on a level playing field, then in fact, the gains can be very broadly distributed. Even if you think about the US-China relationship, that really has been seen as a positive-sum game. There are some countries that might benefit from geopolitical splintering. If you think about a country like India, it's right in the middle of different geopolitical alliances, so it could end up getting some of the benefits from this reshoring or friendshoring. But by and large, it's a net negative for all countries, I think.
Ishwar, can we talk about trade, policy, theory, meeting practice? We were all taught at school, at college, that increased trade, increased interdependence between countries leads to peace. Isn't Russia a fantastic example of the last 2 years that just disproves some of that? How do you fit in what's happened in reality over the last couple of years to the theory that we were all taught over the last few decades?
No, that was the assumption that economic progress would lead to a movement towards, liberal democracies, because that was seen as the epitome of, the structure of economies, societies, and indeed civilizations. And I think that has come under deep question. I mean, the notion that democracies will be self-correcting, that has really been put to the test in the US in the last few years and will again be put to the test in just a few months. So I think it has caused a disillusionment among those liberal values. And of course, now you have a very important player in the world economy, China. There is a very different set of values if you think about economic organization, societal organization, political organization, and they want to push that. And there are certain countries and leaders of those countries that find that view very compelling because it allows them to maintain their power. So I think we are seeing a conflict, not just in terms of trade policies, but really a much broader conflict in terms of these fundamental values.
We're coming through history here, so it's not particularly helpful, but I do want your opinion on this. Do you think it was the arrogance of the West to believe that China would ultimately want to become more like us as they did more trade with us and became wealthier? Is that what the misplaced view was all those decades ago?
That is proving to be misplaced. I mean, it seemed like a reasonable view that once people had their basic necessities met, that they would aspire to higher values, the freedom of expression, the freedom of association, and so on. And that doesn't seem to be happening. People seem to be perfectly willing to trade off those liberties for economic progress. And unfortunately, that is something that we had not quite anticipated.
We also didn't quite anticipate why there wouldn't be some sort of interference with the policies of Xi Jinping that have really hampered the economy. Why there wouldn't be more kind of measures taken to really invite in foreign direct investment that we've seen actually turn negative for the first time in decades.
Have you gotten any answers to that from the delegation from China about whether they actually are committed to bringing international business investment into the country with some stability in their policies?
So Li Chang, the Premier Li Chang's speech a couple of days ago and my meetings with the Chinese delegation members have all sent a very uniform message, or what they're trying to send a message to the world is that basically China is on the right track in terms of its economy. There are some risks out there that can be managed, and China remains open and welcoming to foreign investors and businesses. Foreign investors and businesses don't see it that way. They see a much more hostile environment because it's not just the macroeconomic situation that has changed, the regulatory environment has tightened, plus the political environment has tightened. So it's going to be very difficult for China to market this message that it remains open, that it should be a place that foreign investors and businesses should look to.
This finished gloomy, but to be fair, we took it there, not you. We should be happier. The mood should be better, apparently. Ishwar Prasad of Cornell. Thank you, sir, Professor. It's good to catch up.
My pleasure.
Turns out that we can make anyone gloomy.
Apparently. I feel like Bramo's back. For those of you that missed the first two rounds of this program, Lisa was like just overjoyed, constructive. I'm not sure what Happy Valley did to her, but ultimately the gloom and doom of Bramo just sort of drained away.
Believe me,
오늘도 발표가 될지 진짜 궁금해요. 제가 지금 보고 있는데 어떤 브러셀사 파마슈티컬스 액면봉활 발표 있는데 잠시만요. 이거 어디 넣을게요. 중요한 뉴스에다가 얼마 정도 중요한지는 잘 모르겠어요. 일단 뉴스를
James Quincy, CEO of Coca-Cola. Big question. Bramo wants to know your biggest competitor right now, Pepsi or Novo Nordisk? That question up next.
진짜 슈퍼 런닝될 수 있고 그럴 수도 있어요. 그럴 수도 있는데 저는 그렇게 생각하고 싶지도 않아요. 저 계획이 있어서 근데 오늘 주식시장이 분위기가 너무 좋은데? 네, 좀 들어가 봐야 될 것 같아요. 일단은 가봅시다. 지금이 딱 좋아요. 가보시죠. 지금은 조금 올라갈 수 있는데 괜찮아요. 지금 성에 조금 봐도 괜찮고 왜냐면 제가 예상대로 급속히 떨어질 거예요. 오케이, 오늘 파란색 갑시다. 오늘 파란색을 응원합니다. 주원씨, 오늘도 화이팅! 돈 벌어야죠!
What do you want to know today? Ask a question or visit SearchGo to find answers now.
오케이, 예상대로 일단은 마이너스예요. 마이너스 girl. 파란색. 미친 같아요, 진짜. 가끔 현타 와요. 제가 지금 뭐 하고 있나 싶어.
We'll get to the second Brit in just a moment. In your equity market on the S&P 500, here's your update. We're higher on the S&P 500, up by around a third of 1%, up by 0.4% now. Yields coming in by a single basis point, down on the 10-year to almost 4.1% on a US 10-year yield. Let's get straight to it. It's fantastic to catch up with James Quincy, the chairman and CEO of Coca-Cola. Good afternoon, James.
Thank you.
It's good to see you again. Just fantastic to catch up. We gave away the first question before the commercial break. I don't know if you heard it or not. If you didn't,
I heard you laughing, but I didn't hear the
well,
question.
here comes the question. All right. Lisa wants to know this, not me. I'm not interested at all. Biggest competitor right now. Is it Pepsi or is it Novo Nordisk?
No, definitely Pepsi.
Actually,
the beverage industry depends on where you are in the world. Because we're so global, we actually face a number of kind of multinational and regional competitors around the world. I think the drugs is something that certain segments of the financial community got super focused on, the GLP-1s, but when you actually break down the data, I don't think it's a big thing for us. And in the end of the day, if you want to make it super simple, we sell a whole range of beverages from calories to 0 calories. And at the end of the day, you could eat less calories if you want to lose weight. You can't have less liquid.
Let's talk about the product mix then, whether that changes. We know the stats, about 40% of Americans are obese. If these GLP-1 drugs really, really kick on, if this is like the big solution to a monster problem in the United States of America, do you have to change the product mix? Do things start to shift at Coca-Cola?
Well, the product mix has been shifting over time already as people have tried to balance out the calories with the drinks they love. The 0 calories have just continued to grow steadily over the last couple of decades. So I think it'll just be another piece of the puzzle. As calories come under control, we'll see more 0 sugars. But at the end of the day, people will still enjoy an original Coke every now and again. That's not going to go away.
I am curious, though, who is your main competitor?
Who is our main competitor? Actually, we face a range of competitors.
Yeah, which is number one person who you wake up every morning and you look and try to see, what is that guy doing?
No, that's not how I wake up in the morning.
How do you wake up in the morning?
Because if I just chase my competitors, I don't do something new. I've got to chase my consumers. I need to think about what the competitors are up to.
일본전. 일본전.
But in the end,
아야, 무서워라.
And so if I focus on the person who's drinking the drink, what would really make them happy, what would make the retailer happy, then I will outpace the competitors.
제발.
How much are consumers willing to pay for
지하로.
artisanal water? I mean, at a certain point, are you seeing that you're able to charge?
제발 지하로.
I just wonder, whatever it is that's popular for consumers in different segments, but I'm wondering, do you see your pricing power so much stronger now than before the pandemic?
Our focus was
일단
always
지금
on we don't think about
17,016원?
pricing as a markup versus the commodity price. So it's about earning the pricing, whether that's
지금
the
너무 많이
marketing,
올랐어요.
innovation,
너무.
different package sizes, different formulas, different products. It's really about earning the pricing.
잠깐만요.
Pricing
바본가 보다.
is a catastrophe about to happen.
일본 아니었구나.
Despite challenges in China,
일본. 아이 참나.
and are the headwinds starting to fade?
네, 정신이 어디
Look,
갔어
we're in the
진짜.
closed period ahead of earnings, so no comments on that.
여러분, 감기 조심하세요. 감기 걸리면 뇌 영향이 되게
There are
커요.
always going to be headwinds. Sometimes they're economic, sometimes they're wars, sometimes in the case of the last few years, pandemics. One of the things we have underlined is we have an all-weather strategy. Things are going to happen. There are going to be headwinds. There were headwinds in 23. There were headwinds in the years before. Something will be a headwind in this year. But we are focused on our all-weather strategy to see it through, to manage through it, and deliver for the consumers all the way through to the shareholders.
I understand you can't speak specifically to numbers, so I won't push too hard. I do want to know about China, though. It's been really hard to get a read on what's happening in the world's second largest economy. We spoke to someone who looks at tourism in China, the biggest online tourism platform, trip platform for China, just a moment ago. And she said things for the Chinese consumer are pretty decent, things are picking up again. I hear all the time, we all do, that consumer confidence there has just been shot given the pandemic and the extended lockdown. What's your feel on that? Have things improved on the ground in China?
Things are improving in China, and a bit like when the openings happened in the US and Europe, different sectors moved at different speeds. So you do get a bit of weird noise or weird interpretation coming out of China because it depends which sector you're talking to. From our point of view, Chinese New Year is a very big thing for us. It's effectively their Christmas, and it happens, in the first few weeks of the year. So actually trying to gauge what's happening is very difficult for consumer businesses until Chinese New Year finishes, which will basically be the end of February. So that's for us, the real test is where do we stand post Chinese New Year? And I think one has to gauge the numbers you're getting depending on which sector you're talking to. And obviously the Chinese government's very focused on managing the property sector, but also keeping the consumption alive.
I want to go back to how John began the interview with respect to Novo Nordisk or Pepsi. And I do want to sit on Ozempic for a second, because we hear all of these analysts talking about how much that's going to decrease demand for certain goods. Have you already changed your product mix? Because you said that that's how you would respond to this. Have you already changed your product mix in anticipation of a lack of demand in certain areas?
We already have the products.
What are the products?
We have already been working towards giving people choice in the face of a need to reduce the amount of calories, whether it's in the US or other countries in the world. Almost every brand we have a low or no calorie option available for it. So it doesn't matter how you want to take your balance of calories, we have an option for you. And so over time, yes, the total mix has been shifting a little bit to the low and the low and the no calorie products, but the products already exist.
So how much do you expect the traditional Coca-Cola brand to be a much smaller part of your overall business, say in 10 years?
We see the Coca-Cola brand including all the variants.
Okay, I know.
The original, the zero.
Coca-Cola Coke that everybody gets, the original from the 1960s commercials.
I think it will still continue to be a big part of the business.
오늘 진짜 지옥으로 가야 돼.
It's being talked about a lot on the sidelines of this conference with Israel's president here, of course. How are you navigating the Gaza war, given the fact that Turkish Airlines just got rid of Coke on their flights?
Look, there's a lot of tragedy happening there. There's a lot of people getting killed. We have an Israeli bottler, we have a Gaza bottler. Employees on both sides have been killed, wounded, family members. So it's a very painful moment at the moment. Our focus has been on supporting our employees, in supporting those with losses, and really trying to look after the people who make our businesses happen.
So is it incorrect when Turkish Airlines comes out and says they're getting rid of Coke because Coca-Cola supports Israel only?
뭐 지금 매수하는 사람들한테 좀 미안하긴 한 얘긴데 오늘은 저 매도하는 여자예요. 그래서 해외선물이 재밌어요. 오늘 분위기 봤을 때 많이 할 분위기다 하면 매도 때리면 되고 오늘 분위기 괜찮다 하면 매수 때리면 되고 얼마나 좋아요.
Given what's happening, all of the questions we see at a forum like this one, James, as you know, lots of questions about geopolitics. As Lisa talked about earlier in the hour, hot wars, not just in Gaza but in Ukraine as well. Is it harder being everywhere than, say, maybe 10 years ago?
I don't think so, because in the end, every political leadership of every society wants to deliver jobs on the ground and an improvement in quality of life. And the great thing about the Coke business is it's an incredibly local business. All the countries in country A are made there, and all the Cokes in country B are made there. It's a truly local business, and jobs, prosperity, and a better life is what virtually every government on the planet is trying to deliver for their people.
James, so this was great. This is fantastic. It's just great to catch up with you, but always is. I've just got one final question. My producer Amy has Diet Coke for breakfast. I've got issues with that. Do you think that's okay?
소심한 여자.
Why are you trying to tell her what her choices are?
Diet Coke for breakfast. Diet Coke for breakfast. Just Diet Coke for breakfast.
Diet Coke is making a comeback, I think. Did you not see the Saturday Night Live?
Is it coming back? Is it coming back?
Look, it's a great product. It really is.
What did you expect him to say?
일단 돈 많이 벌어야죠. 돈 많이 벌면 소심을 버릴 수 있으니까요.
Just what? No, I know. James Quincy, Chairman, CEO of Coca-Cola. James, good to see you. Thank you, sir. Thank you very much. Coming up on this program.
5분 전 이제 진짜 5분 전이다.
Is just around the corner. That conversation is coming up very, very shortly. Taking a helm of Morgan Stanley only what, 2 weeks ago?
Yeah, something like that.
2 weeks ago. January 1. We want to know what happens on day one. You take over the bank. James Gorman gets kicked out of his office.
Put your pictures up.
You put your photos out. You get one of those boxes out for James to say thank you. Something like that. Yeah, let's see if Ted turns up. That conversation is up next.
대범한 여자. 대범한 여자. 욱하는 여자. 아, 좋아요. 와, 차트 보니까 엄청 많이 올라왔네. 오늘 하루 종일 나 쭉쭉쭉쭉쭉 올라가고 있네. 불길하네. 아, 뉴스 보니까 또 불길하네, 진짜. 일단 계획은 매도로 엄청 많이 수익을 뽑다가 오케이, 지금 딱 떨어지고 있어요. 뉴스 보세요. 아, 좋아요. 오늘은 빨간색은 거기 뉴스 나오는 빨간색이 되게 좋아요. 아무튼 제 계획은 매도로 돈을 엄청 많이 뽑다가 안정되면서 그때 편한 마음으로 식사하기. 이럴 때는 참 좋아요. 그러니까 이런 여유를 가지고 오늘 시장이 참 괜찮네, 수익이 쭉쭉 들어오네 하면서 오케이, 마음 편하게 먹을 수 있다. 이럴 땐 참 좋아요.
Today, 75% of the African people have
근데 지금 제가 인터넷이 좀 이상하긴 하는데 혹시 지금 나가리 되면 되게 억울할 것 같은데 안 돼요. 일본전 진짜 일본전이야. 제발 기도합시다, 여러분. 물론 저는 무교인데 기도 도움이 될 수 없지만 갑시다. 지하로 갑시다. 1분 전 30천.
And wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this
원래는
like a catalyst you think you're face for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
오케이, 좋아. 내려가. 이거 보세요. 파란색이요. 내려와. 들어와. 어머, 좋아요. 아주 좋아요. 19,000원. 어떡해. 매수하는 사람이 어떡해. 아이고.
And he gets elected and he says, now what? There's an element of that. Now what?
전 너무 좋아요.
I mean, that's honest, it's like going back to school. 31 years
마음
at the firm that I
편하게
love. They hired me out of college.
차트 볼
They
수
took me back after
있다는
business
거죠.
school.
너무
Now I get to
좋아요.
represent the team. It's
올라갈 필요 없어요.
moment. You're carrying the
굳이
culture
왜?
of a place
어디
that's been
올라가?
around for almost
하지
90
마.
years. And as you guys know, a place that looked at the abyss,
내려갑시다.
$6.71 in October of 08. And now here we are flourishing. And so my job is to keep going what James has done so brilliantly. And we're spending a ton of time together. It's a blast. I learned something from him literally with every interaction. And so super psyched. We've been doing these dinners together with client meetings together, and it's a real thrill for me.
You went there, you talked about 2008. I think the bank that Gorman took over
조한 씨도 오늘 매도죠?
It's a very different one to the one you're
아니요.
inheriting today.
내려갑시다.
Another 10 years. let's talk about what you want Morgan Stanley to look like in the future. I think a lot of people have taken your recent comments as a continuity candidate at the top of the bank.
Yep.
Do you see any big changes on the horizon over the next decade or so?
What James did is he laid the
좋아요,
seeds. He
좋아요.
not only transformed the place, but
쭉
he
내려갑시다.
reclaimed the best of the culture. So my job is to take the moats that have been built through transformation in wealth and asset management, where, as you know, we have about $6.5 trillion of assets under management, and a world-class investment bank. Pretty tough to compete as a global investment bank now. There are only 3 or 4 of those wealth managers, only 3 or 4 of those global investment banks, and he reclaimed that culture, and now to press on integrating the two. One ecosystem. Individual is now a walking institution. Institution now needs
기분이 좋네.
certain capabilities that individuals typically wouldn't have. So the migration of financial sponsors across the pockets.
너무
I think it's
만족스러워요.
incredibly exciting, and we'd like to think we're differentiated from many of our competitors. We have competitors that are great wealth managers. We have competitors that are great investment banks, but to bring them both together is something special. And the reason, Jonathan, I think we can do it is really born of the experience of the financial crisis. When you make it, you either are imprisoned by that forever, or you say, we made it, let's keep the good stuff and let's be something more. So I'm focused on integrating the firm across those 2 verticals.
You grew up in the investment bank, and yet you're really leading into the wealth management.
Yeah.
And on the earnings call, you talked about how the wealth management's in your blood, how your father-in-law and your father were both in the business, and you said this will be the engine for further Morgan Stanley growth, kind of underpinning some of your comments. Do you have a place in mind where further acquisitions will transpire in terms of the wealth management unit?
Well, first I want you to know that you've made at least one 80-year-old man very
이렇게
excited.
쭉 내려가면 돼요. 괜찮아요.
This actually makes my day entirely.
너무 많이 내려가면 오히려 의심스러울 수 있으니까.
Listen,
조금씩
I think the reality is
찌끌찌끌 먹다가 마시죠. 좋아요.
The danger, and James talked about it, the danger of acquisitions, they're sort of asymmetrically against you, right? Because first, the financial proposition has to work, the business strategy has to work, and then the integration has to work.
이렇게까지 올라왔네. 야, 진짜.
We did E-Trade, which I loved, because it kind of gave us enough size. It was diluted, but that didn't matter. It gave us enough size that we're going to make it. And we saw how things can get in March, and then the aftermath in Europe. And then even Nance gave us solutions.
올라가고
So
있네.
stuff is going to come across the transit. I'm not
재수없게.
sure we need to be in a rush, because again, we don't have sort of the victory's curse of thinking we just sort of do these things. I think there's enough organically, but I'm glad you mentioned, Lisa, because I think when you're talking about 5 or 10 years, and you think about the amount of aggregation and transparency of wealth outside the U.S., particularly in Asia, we're 22% owned by our friends at Mitsubishi, who literally saved us during the financial crisis. I've been going a lot to Japan. I go every quarter. We've doubled down on Japan. Imagine, just as sort of like a vision thought, imagine wealth in Japan 5 to 10 years from now when you come off the zero rate, the zero barrier. Asset allocation, wealth opportunity, investment banking. I mean, it's one example of the kind of place where we could do extraordinary business.
Does that mean that you're de-emphasizing the investment bank, that it doesn't matter as much to kind of
어머, 잠깐만. 순식간에
kind of way as traditionally?
Sure. What I love is that we've got a business strategy we can do in the elevator, literally like 2 floors. Wealth and asset manager, big scale, global investment bank, big scale, and it's not actually a choice, because increasingly there's synergies between the two. And I think it is absolutely important that
No,
investment
이거
bank
별로야.
is agile enough that when the markets
오늘은
are
빨간색 별로야.
speaking to forward
싫어요.
early cycle behavior, which is by the way,
아니야.
I think where we are now.
내려가.
Cross-border M&A ahead of the U.S. election. Folks wanting to deploy capital as the Fed gets going. You want to be in the core investment banking business. We had 4 years of no IPOs. The sponsor assets have gotten big. How many underwriters can be used to take these companies public? Half a dozen around the world.
너무 많이
How many people are
올라가.
going to be
아니.
acting as advisors on cross-border large cap M&A?
야,
high margin
이거
business.
아니다.
And the reason it's so important is it's the tip of the spear. It's the intellectual capital that the firm has been traditionally known for, and what is informed in part by our history of the 97 merger and then our crisis, our human capital crisis in 05, is that the investment bank has so embraced wealth and vice versa, because what James did this is McKinsey at his true
아니야,
best, is
일단
for
기다려보자.
these 14 years, he migrated people around the firm. So you have people that actually understand these businesses. Andy Saperstein, one of our co-presidents, worked in the investment bank, now running
내려가.
Dan Simquist turned around our asset management business, now he's running the investment bank. So it's not that I'm trying to sell you the story, I've been there kind of thing, and it gets people motivated, and we're motivated to hit 20% returns on tangible.
You alluded to it. We had a bank CEO earlier this week who just said it out loud. Investment banking's been in recession for the last couple of years. It's been really, really tough.
Absolutely.
I hear you communicating the end of it. Can that happen? I hate to be the guy who asks about the Federal Reserve and rate cuts. Can that end without rate cuts from the Federal Reserve? Can we end that IB recession given what you see in the pipeline?
I hear you guys talk about this every morning. And once when I say, we don't know, who knows? I think the path is probably that inflation is past. But, there's a tail. There's a 5 or 10% probability they do 50 in March. Not talking 25, 50, 5 to 10%, right? There's 40 to 60% they do 25 in March. There's also, if you price an exotic, 5 to 10% possibility that we have another hike in us. I kind of did that check thinking of you two guys because it is possible that we either, because every time the Fed talks about it, right, as they did in the reverse in the teens, it tightened up and they didn't go. Now they talk about it, loosens up. It's like, okay, we don't want to have the Arthur Burns bid. We don't want it to get away from us. So we're gonna do it when we're ready. I think the big picture though is they're gonna start lowering at some point. When they're ready, they're gonna be prudent. They're gonna be thoughtful. And that kind of predictability is very good for the core investment banking business because you have these financial sponsor portfolios that have been locked up that need to be liberated. Some can go in continuation funds, some can go to other sponsors, but some have to go public or be sold. And then the corporate dynamic was folks are ready to get going then with 3 years of pandemic. There's always going to be an election, there's always going to be macro, but I think the core investment banking activity that we have known with real cost of capital, traditional corporate finance like the mid-90s, I think it's going to come back.
We've been hearing from bank executive after bank executive, it's time to start ramping up hiring. They're going to be going out there and building their teams. You doing the same thing?
We have our team.
그치.
We have our team.
So no more hiring?
그치.
I believe that
밑으로.
Investment banks are notoriously pro-cyclical.
맞아.
So we see a trend and then we'll go hire a bunch of
쭉
traders,
내려와.
hire a bunch of bankers. If you really believe in, the kind of what the culture
아니야.
is, you don't want to be too
좀
herky-jerky about that.
안정적으로 밑으로 가야지. 그래도 나 마음 편하게 먹을 수 있잖아, 저녁을. 내려가. 야, 내려가.
M&A bankers along the way, but I do like the partnership right now. I really like the team, and they're fired up to go.
There's always going to be a range of views on your stock. I'm just bringing up the stock on the Bloomberg terminal right now. I can bring up the analyst recommendation screen. Got 10 buys, 20 holds, no sells. Let's talk about one of the holds, one of the changes in the last couple of days. It came from JP Morgan. They had good things to say, but they said this: we see the excellent acquisition benefits largely discounted, see limited stock-specific catalysts in the near term. We've got to deal with analysts now and again. Some people might be saying stuff you don't like. They're neutral, it's not exactly a sell, but what would you say back to that? Limited, stock-specific
Okay.
Stock had a big run. It's trading at the midpoint of the 70-100
꾸준히
range.
내려가고 있슈. 오케이.
Reality is that continues to be a great capital return story. We have a capital buffer. We pay a dividend. We're in 2 growth businesses. The strategy's unchanged. The James Gorman premium, it's been a real premium, and I want to make sure I have credibility with the marketplace. He did it for 14 years. I've been with it for about 14 days. So I was sort of joking. He's at 728 weeks, and I've done 2, so the score 728 to 2. And then he said, but it's not that bad. It's only 3,520 trading days. So we went back and forth on that.
지금 텐션이 너무 좋아요.
Get vacation. I think the reality is that some people want to know that we get to 30% PBT margins in wealth immediately. There's always going to be that sort of knee jerk. But we were at 4-6 with Dean Witter, 8, 12, 15, 20.
마음에
James
들어요.
did brilliantly, as your team knows. You guys
마음
are
편하게.
he kind of always did the
마음
post
편하게 타는
and
거 해야
beat
되네.
durably. These firms have been traditionally marked on price to book, and what we want to do, which is differentiate, is get people to look at the PE multiple, which means they can run the DCF. So that's important to me, that there's predictability and durability.
You have to go. I know that. But I do want to ask you, is it true that you can multiply any numbers whatsoever in your head in a second?
Who knows?
563 times 300.
파란색이 유난히 예쁘네.
All right, we'll do that. We'll run the numbers after the show. Hey, Ted, it's great. We're looking forward to following the
너무 좋아요.
Just
너무
fantastic.
좋아요.
It's good to see you. Ted Pick there, the CEO of Morgan Stanley. He's got to run. I've got to check it on the market, so let's do that right now on the S&P 500. Equity futures have been positive all morning over in New York City. We had jobless claims just moments ago. Mike McKee has the data. Good morning, Mike.
Good morning, John. You might want to check that two-year note yield because we're having quite a reaction after jobless claims come in extraordinarily low, 187,000 last week. Now, this could be a seasonal effect, but down from 203,000, it certainly has gotten the market's attention. We've seen some trimming of bets on a March rate cut from that. Housing starts to disappoint, down 4.3%, but that's not as bad as the negative 8.7% that was forecast. Building permits up 1.9%. Philly Fed, interesting numbers, negative 10.6 from a revised negative 12.8, but here's a number to keep an eye on that should catch Wall Street's attention as well. Prices paid 11.3. It was 24.3 last month. So inflation coming down very rapidly and no change in the job market, it appears. We do have Raphael Bostic out with some headlines on the terminal today suggesting that it's still making progress, but he's still a higher for longer guy.
감이 잘 와가지고
Thank you very much. Let's return back to that
이것도
number
잘
before we
읽었고
take a
역시
break. 187,000.
힘이 있네요.
187K. Pause. We start the year talking about rate cuts in March, and you just get this drip feed of data that says, what rate cuts? Started with payrolls, headline I know, beneath the surface we can have a debate. Then we've had retail sales, we've got jobless claims, you throw in the communication for the Federal Reserve. It's no cuts anytime soon, based on the early message in 2024.
And we just heard from Ted Pick of Morgan Stanley. He thinks we're early cycle, right? This is something where we're building momentum, and you get that feeling from a lot of different business executives that we've been speaking to. So at a certain point, again, it comes back to this question, can we get some sort of ongoing growth without inflation? Can we allow inflation to just gradually go down? I don't have a concrete answer to that.
The economy looking okay, looking decent. The geopolitics looking absolutely terrible. Coming up on the programme, Bloomberg's Anne-Marie back in the studio with us. We'll catch up with the Ukraine Foreign Minister. That conversation is up next.
차트 파란색인데 제 수익은 빨간색이네요. 이거야 참 축복이네요.
I think I was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me. But I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss.
무슨 상황일까?
Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action at a new time, 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech spread across global markets.
The real-time data aspect is going to be.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the.
뭐 좀 올라갈 수 있죠. 올라가면 뭐 어때요? 어차피 떨어질 테니까.
Everything changes if Trump wins, and mostly for bad ways. My colleagues and I, back in 2016, took Trump seriously in the sense of we said he stated these things, this is what he's going to do, let's model what happens to the economy. And we're undertaking that same exercise now. We're taking literally, if he puts up a 10% tariff on everything, and it's a tax increase. I mean, however you want to say it, it's a tax increase on all consumers in the U.S. And it probably increases inflation rate roughly 1.5 points.
It's a hot topic in Davos, Switzerland at the World Economic Forum. On day 3, it's been a hot topic all week. The future of policy in the United States, economic policy and foreign policy. That was Adam Poston, the president of the Peterson Institute for International Economics. We can now talk about foreign policy. There are 2 hot wars taking place right now. One is in Gaza between Hamas and Israel. The other has dominated the news cycle for much of the last 2 years. It's the war in Ukraine, between Ukraine and Russia. Joining us now, I'm pleased to say, is Dmytro Kuleba, the Ukraine Foreign Minister. Minister, good afternoon.
Good
to be with you. It's
대박
good to see you.
나셨어요?
It's been a difficult time for you,
자,
your government, your
축하드려요.
country. I know you've had a series of meetings at the forum with foreign leaders. Can you tell us, just give us an indication from your conversations, how close we might be to getting that aid delivered from the United States?
Well, we received reassurances that the aid is on its way. The good news is that we see that the Congress is not debating the aid to Ukraine per se. The discussion is on the border issue, and there are no disagreements on whether and to what extent Ukraine should be helped, and this is important. So while the aid itself is not in question, the timeline is in question. I think that today we are in a situation when the US citizens are as interested in passing this law to fix the border issue as we are to fix the assistance issue.
Did Secretary Blinken or Jake Sullivan give you any indication?
어차피 제가 계속 이 포지션을 유지하려고 하기 때문에 일단 기도해야죠. 일단 좀 그럼 제가 포지션 이거 저 프랑스어도 좀 할 수 있는 것 같아요. 포지션 유지하면서 일단 제가 저녁을 먹어야 돼서 일단 편의점 좀 갔다 와야 되고 집에 먹을 게 없어요 진짜. 골치 아프네요. 얘기도 해야 되고. 아무튼 제가 선거를 빌면서 갔다 올게요. 주한 씨도 화이팅 하시고. 갑자기 올라가면 안 되는데. 아무튼 자태야 부탁할게.
Well, we are inquiring into how the potential foreign policy team of President Trump could look like. And we're looking at these names, but I don't know, maybe we haven't worked enough, but I think it's even not certain, not obvious for US analysts and people in the United States. But anyway, again, let me make this point. Whatever happens, we are ready for that. We've worked a lot with President Biden and his administration. They did a great job helping us, and we will always be grateful to the people of America and to the Congress, to the Biden administration for helping us to survive in the most difficult times. But I'm absolutely confident that irrespective of what will be the name of the next president of the United States, the victory of Ukraine will be in the best interests of America and American people.
Minister, we've seen President Zelensky meeting with a lot of bank executives, trying to drum up support. Have there been any meetings with any of the Chinese policymakers who have been here at Davos?
No, because President Zelensky speaks with President Xi. And there were 2 phone calls between them, one before the war and another one after the large-scale invasion began. This is the line of contact that they're upholding. And we have our Prime Minister, and we have nothing against Chinese Prime Minister and Ukrainian Prime Minister speaking to each other. But we are now working on organizing another call between leaders of China and Ukraine, because there are things that they can talk about, namely peace formula proposed by President Zelensky as a way to restore just and lasting peace in Ukraine.
How are the business leaders in places like the United States, Jamie Dimon, for example, instrumental for Ukraine right now?
Well, President had 2 excellent sessions with business leaders, and I think this is the added value of Davos. You cannot do skiing, but you can do business skiing with the business leaders who gather all here, at Davos. And I was impressed with very positive atmosphere. It's very different from what you read in the news and in different expert comments published widely. Business is very focused on helping Ukraine. Business believes in Ukraine, and business is focused on finding solution instead of just endlessly discussing problems.
What we see in America with this stalled money, we also see American consumers worried about inflation, and there are questions, why is this money being sent abroad? At the same time, there's reports of Putin putting out feelers, their intermediaries, potentially wanting to sow this doubt that potentially the U.S. would do some sort of agreement with Russia and try to get Ukraine to the table. What do you make of that? Have you discussed these reports with your counterparts in the United States?
Well, first, Ukraine does not steal any money from American taxpayers. If you compare the overall budget, even just the defense spending of the United States and the sum of money allocated to Ukraine, it's, to say the least, a very little part of the overall defense spendings. Moreover, a vast amount of this money stays in the United States because it's invested in the production of weapons that goes then to Ukraine, and it needs to be explained to American taxpayers that their communities benefit from it, new jobs are created. Second, everyone should understand one simple fact. Whatever the price of supporting Ukraine today is, the price of fixing the mess in the world, if Ukraine loses, will be much, much higher. And most importantly, Ukraine is probably the first country in the world that is fighting a war against another country, has United States as an ally, and is not asking American troops on the ground. So you save the most important, you save few lives of your soldiers. So we kind of offer the best deal on global market of security. Give us the weapons, give us the money, and we will finish the job.
2022, excuse me, was all about coalescing around Ukraine, all hands on deck. 2023 was this counteroffensive. It didn't really go as planned. What is 2024 about in Ukraine? What is the plan this year?
2024 will be about throwing Russia from the air, because the one who dominates the air defines the timeline of the war and the terms of peace. It will be about filling the front line with drones and other sophisticated technology, because the counteroffensive that you mentioned taught us an important lesson, how war changed and how drones and software and artificial intelligence become the real kind of masterminds of warfare. 2024 will also be about keeping the Black Sea under Ukrainian control, because we achieved a major victory on the Black Sea last year when we made the invincible Russian Black Sea fleet flee Crimea and hide on the eastern side of the Black Sea, and that allowed us to restore our exports, and food prices in the world are under control. Ukrainian economy has like a fresh breath because export is finally working. So this is all very important thing. And of course, another goal for 2024 is frozen assets, Russian frozen assets. They must become available for Ukraine.
That's highly controversial. Why do you think that's the case? Rule of law is tremendously important. Do you not think there's a risk around establishing a precedent on that issue?
Well, first, how much bankers and lawyers in the West were thinking about rule of law, harboring dirty money of Russian oligarchs, laundering them and helping them out. Second, to what extent Russian money should be protected by Western rules, as long as Russia attacked Western rules and wants to destroy them and to build a world that will know no rule of law. Yeah. And third, Amon, guys, you have far better experience in business. When politicians make a will, make a decision, bankers and lawyers find solutions. We can engage in an endless discussion about immunities and legal repercussions, but the solution is there. We just need to make it.
Minister, thank you for your time. We appreciate it. The Foreign Minister of Ukraine, Dmytro Kuleba. From Davos, Switzerland to the World Economic Forum, this was Bloomberg Surveillance.
So I am expecting there to be not necessarily a wholesale adoption across the world, but we have many governments that are looking what the EU is doing and are in the process of introducing similar regulations or variants thereof. Then I think it'll be very globally. And sometimes it may be very difficult. Will they implement the obligations of those regulations only with respect to Europe, or whether they do it globally? And sometimes it may be very difficult in today's conversation environment about which is more hostile or more skeptical of the big tech companies. If Facebook, for instance, cannot use targeted advertising, or Instagram cannot use targeted advertising on minors in Europe, can they then justify that they continue that very same practice in the United States and elsewhere? Because there will be many who say, well, you have ceased those activities in Europe. Don't you care about protecting our minors as well? And it is harder for reputational reasons for Facebook, for instance, then to confine its conduct and the changes it will have to make to Europe alone. So I think we will see some ramifications of those regulations outside of Europe as well.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money, and number 2, don't forget rule number 1.
From New York City, for our viewers worldwide, a very good morning. I'm Manus Cranny in for Jonathan Ferro. So what you have is tech on a ripper as the rates market tempers its ratchet higher. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Ferro.
Coming up this morning, the U.S. jobless claims plunged to the lowest level since 2022. Fed officials push back against the rate cut expectations, and tech rallies as Apple gets an upgrade and TSMC delivers a bullish outlook. We begin with the big issue. Is good news bad news?
We're back into this kind of good news for the economy is bad news for the market.
Bad news is good news.
There's just a lot of good news.
The economy
is actually doing great. Look at the data.
You see the retail sales numbers.
Strong retail sales.
Industrial production, LEIs are bottoming.
The consumer's been really resilient. You're seeing economic resilience.
It seems like the whole soft landing is happening.
Fed is not going to rush to start implementing those rate cuts.
The market's a little optimistic on the rate cutting cycle.
A little too optimistic in the start of the timing of rate cuts.
The 6 rate cuts, that's a pipe dream if we have a soft landing.
The economy has been strong enough so we can keep rates stable for a while.
At some point that you will start to shift to, good news being good news and bad news just being bad news.
Good news is bad news. Joining me now to discuss that thesis, it is Morgan Stanley's Jim Caron and Seema Shah of Principal Asset Management. Seema, let me bring it straight to you. My favorite, by the way, is Ken Rogoff. In other words, we're living in a pipe dream on 6 cuts. But you say, Seema, the long-awaited downturn should arrive and depart without leaving much destruction. Inflation should continue to decelerate, and most importantly, the Fed is likely to open the door to cuts. Well, they're trying to slam that closed at the moment, Seema. My question to you is this: are you recalibrating your rate cut trajectory in a post-Waller world? Good morning.
Good morning, Manus. Okay, so no, we're not recalibrating. I actually think that what we're expecting is very much in line with what you've just heard from a number of analysts on the street. What we're saying is, in terms of how the market is pricing rate cuts for this year, it is too soon. Too soon. March is very, very premature to think about rate cuts. At the same time, and probably more important in terms of the timing of that first cut, is how many cuts. Now, we would say that 6 to 7 rate cuts only happens if you've got a deeply negative economic backdrop, which we're not anticipating. But because inflation is coming down, it's going to come down fairly wobbly. It's not going to come down in a straight line, but it's going to get closer to that 2% level. And around mid-year of 2024, we are expecting the Fed to be ready at that point to start cutting interest rates, but to go very gradually. So we're only expecting 3 cuts for this year. So not a change in the forecast. I think at the end of last year, the market was just far too optimistic. And at this point, you can only get slightly bad news for the market.
That's why we love bond traders. It's called natural irrational exuberance. Jim, let me bring it to you. Any recalibration for you, or are you as stoic as Seema is?
So, look, I think that the Fed is likely to cut at least 100 basis points this year. And that's just really to keep things neutral, right? If inflation's coming down, which it is, the Fed needs to change its nominal policy rate to match what inflation's actually doing. So, clearly the debate is over whether it's 6 cuts, 5 cuts, 4 cuts. Is it more than 6 cuts? In terms of the markets, it's really a question of correlation. And what the correlation of returns are is that stock and bond returns have been highly correlated. The problem with that is that there's no place to hide. You can't get diversification because effectively, if stocks go down when bonds go down in returns, it's hard to have one hedge against the other. So essentially what happened is, it seems, and I think, Seema was alluding to this, is that there was a large pull forward in expectations of rate cuts, and we started pricing in by the end of the year 6 cuts. If it's going to be less than that, then naturally bond yields have to rise. And because there's high correlation between stocks and bonds right now, that's going to put pressure on the equity markets. So like the premise of is good news bad news, is bad news good news, I think it's really a question of what the correlations are between returns of stocks and bonds in the markets. So, look, clearly retail sales came out pretty strong. We're seeing a strong jobless claims number that came out today. Yep. We probably have to recalibrate a little bit.
Okay, so a moment of recalibration or reflection. Let's not force you straight into recalibrating. Let's talk about those jobless claims, as you say, this morning, and more Fed speak in the pipeline. Mike McKee is with me. Very solid jobless numbers, Mike.
Yeah, everybody always goes to the equity markets when they do their market boards. And today you want to start with the bond market, because there's certainly been a reaction to the 187,000 jobless claims filed last week. That's the lowest since September of 2022, and it harkens back to pre-pandemic days. The question is it real or not? We saw a very similar move last year in the same week, and then we started going back up over 200,000 again. We'll see if that follows. But that drop also drops the number of continuing claims as well to 1,806,000, suggesting people are still getting jobs. The Philadelphia Fed number comes in still down, negative 10.6, but the number that catches your attention is prices paid, 11.3 from 24.3. That suggests still more progress on inflation. So where are we? Well, yesterday the Fed came out with the Beige Book, and the Beige Book said basically there's little or no change in economic activity and little or no change in overall employment. In other words, things are still pretty good. Chris Waller, as Manis mentioned, talked about cuts coming, but methodically and carefully this week. Raphael Bostic on the tape just before jobless claims coming out, saying he wouldn't want to cut and then have to raise. He wanted more evidence that inflation is going down. He got some mixed numbers today. We do have more Bostic this afternoon, and then Mary Daly gets the last word from the Fed tomorrow before the blackout. And I threw this in because, we haven't had a lot of change in the March estimate for quite a while, that they're not going to do much. But today we have seen a drop down to 52% chance of a Fed move in March, and that is just rapidly going away. And they still see a lot of moves in February, however, by December, however. So we'll keep an eye on that, and that'll depend on the evolution of the data. And it looks like at this point that it's going to evolve in the direction of less inflation, still more growth.
Okay, Mike, thank you very much. Mike McKee setting the table there from the Beige Book to the jobless claims. Jim Caron, Seema Shah is with me. Let's just step back for a moment, because if the recession or mild slowdown is delayed, it's not that aggressive. The rate cut trajectory, a little bit delayed, not that aggressive. The world does not fall apart. We don't know what happens in the Middle East. How does risk, how do you think asset managers, fund managers, how do you think people look at risk in this first 6 months of the year? Seema?
So I do think that the first 6 months of the year are going to be marked by a fair amount of volatility. As a year as a whole, we think it's a decent year. We think risk does okay, certainly not as well as you saw in 2023 for equities, but it's still a positive year. But in the first part of the year, because there's going to be so many question marks about when does that rate cut come, that debate continues, and it's going to rile them up. And I think Jim and I have a very similar theme going on. We're talking about it in slightly different ways. But at the end of last year, all the good news was priced in.
Yeah.
A soft landing and early rate cuts. And from there can only be disappointment. And I think so that's why you get volatility. And I think for asset managers, it's important to look through that volatility and focus almost on that medium term into what happens once you do get those rate cuts, and how do equities and credit and certainly alternative assets perform. And I think for us, it's certainly a time for diversification, but still leaning into risk.
So, Jim, let me take that across to you, because for me, as you stand on the outside as a humble retail person exposed to this, you go, actually, thank you. I'm glad to see a bit of air come out of the tires here. I'm glad to see a 9-week rally in equities stall a little bit and yields back up. Do you appreciate the opportunity that this all might present to you from a risk perspective?
Yeah, I do. And look, one of the things I always like to say is that one of the risks in the market is the upside risk. And just like any other risk, you need to hedge that risk. So if we take a step back and unpack what Mike McKee just said, we are having a decline in inflation, which is good, but the jobs market is not actually experiencing high levels of unemployment. Now, when you look at the Phillips curve and you look at most standard measures of the economy, typically what you would see is that it's required that the jobs market weakens quite a bit in order to get inflation to come down. And we're not seeing that. So what that tells us is that the consumer, as long as they keep their jobs and wages are still good, can continue to consume. And this is what's baffling the markets at this point. Everybody's trying to figure out where's the money coming from. We had strong retail sales. We had strong numbers in the third quarter, strong numbers in the fourth quarter. And everybody's waiting for this to actually pull back. So, yes, I would love to buy a dip in equity prices at this point. But what we have to recognize is that dip may be more shallow and may come faster, and that if the earnings as consumers continue to consume really get back on track, that could actually put upside risk into the markets. People are worried about downside risk. I get it. I am too. But we also have to recognize that the tail to the upside could be fatter than most people think.
I want to talk to you about credit, and I'll tell you why. I'm probably the best contrarian indicator in the world. So I'm a little bit obsessed by Rick Ryder came on the show last week, and he practically sold me everything that BlackRock could give you on investment grade credit. And here's the story of the day: Teflon in the credit markets. We, the retail investor, have rocked up and put nearly $8 billion into credit last week. So Seema, with that in mind, if this herd mentality is careering towards credit, are you part of the herd, or are you contrarian like me?
So look, we do like investment grade credit. We like it certainly a lot more than high yield, and there's a number of reasons for that. You know, if you're expecting a bit of a slowdown, even if it's not a recession, then typically that higher quality space is going to outperform. We look at the maturity schedule for this year. It's not particularly pressing, but it's certainly more pressing for the high yield space than the IG space. But overall, look, you are getting decent yield at this point in time. As I said, I do think you need to diversify, and overall, I think credit is going to do a little bit better than you're going to see for the treasury space this year. But it's not the time to be just solely focused on credit. We need to be looking around the rest of the market and see where the opportunities are.
Okay, well, maybe I should diversify the perspective. Jim, let me finish it off with you. Would you gorge on a little bit of credit, sir? Anything for you this morning?
Yeah, so effectively, it's really the way that we create it in our portfolio. So I do like investment grade overall as a rating for our fixed income part of our portfolios. But I do like to dabble in a little bit of high yield, a little bit of bank loans. I like to think about some of the lower quality components of the credit markets, like even in the triple C, single B sector, because the dispersion in value between the lower credit quality sectors versus high quality is actually quite wide, making the lower quality parts much, much more attractive. The higher quality part of credit is actually going to be more duration interest rate sensitive. So if rates go up for a good reason, the duration sensitivity is going to hurt you in fixed income, but the credit quality, the default risk, actually all of that can improve and you can get better valuation. So I have a very diversified mix. I'm barbelling it between some low quality and high quality. Overall, I'm coming out with exactly what Seema is saying, an investment grade overall portfolio, but I'm constructing it through a barbell.
There's no shame in dabbling in the higher risk trade. And of course, it's Rick Reader, not Ryder. Apologies to Rick. Okay, team, you stay with me. Seema, Jim, we've got a little bit more work to do. Joining me now on set to talk about the stocks ahead of this opening bell, it's Abigail Doolittle. What have we got? Upgrades in tech abound.
We do certainly have an upgrade in tech, and a big one, because we, of course, into today had 2 down days for the S&P 500, but now with Apple's upgrade at B of A to a buy, that stock up 2.2%, one of the biggest weightings to the major indexes, we're looking at a bit of a rebound, despite a number of legal defeats recently that Apple has suffered from. This upgrade on the potential for Vision Pro, their virtual reality set, well, investors really liking it. Humana, on the other hand, not so much. Plunging down nearly 13%. They basically pre-announced to the downside. They've cut their 2023 outlook on higher costs of care. The earnings now looking at $26 per share versus greater than $28. To end on another bright spot, though, in Humana's NVIDIA up 2.3%, as though that 240% plus rally last year weren't enough. Well, we have the stock climbing potentially to a new record high today. A bullish update from Taiwan Semiconductor on the AI space really seems to have those NVIDIA investors gunning to the upside once again.
They have indeed. 2 words: solid growth, solid quarter. Abigail, thank you very much. That's the trajectory from TSMC. Coming up, Middle East tensions, they ramp up. Twin strikes in Yemen and Iran.
They'd made 26 attacks. We'd given warning after warning, but we hadn't taken action. We have now taken action. We've demonstrated we're prepared to back our words and warnings with actions, and I believe that will make a difference.
The geopolitical factor kicking in to oil. That conversation next on Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more
I would say volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
They're doing it because they're backed by Iran and they've had weapons provided to Iran. And, between the 19th of November and last weekend, they'd made 26 attacks. We'd given warning after warning, but we hadn't taken action. We have now taken action. We've demonstrated we're prepared to back our words and warnings with actions, and I believe that will make a difference. This is about freedom of navigation. We want to have the freedom of navigation. It's vital not just for our economy, but for every economy in the world.
The U.S. launching fresh strikes in Yemen, targeting 14 Houthi missiles that were reportedly ready to launch. Meanwhile, Pakistan's army striking back at Iran. This is in response to the previous day's attack. Both sides signaling unease around possible escalation.
Pakistan has said that we would like to have peaceful relations with all countries in the region, including with our neighbor Iran. Pakistan considers the people of Iran as our friends and brothers, and we have no interest in escalating any situation.
And the geopolitical fear factor is seeping into the oil prices this morning, reacting on the rising risk, escalation risk, I should say. Up over 1% on WTI this morning, 73.35. Team coverage starts now. Kaylee Lyons in Washington, D.C., Will Kennedy in London. Kaylee, good day to you. On top of tracking down the hustings around the country, you're also dealing with the news flow here in the Middle East. This is very much a demonstration of capacity by the Americans against the Houthis, isn't it?
Absolutely, Manus, but also the Houthis still do have remaining capacity, clearly, because just yesterday, right before the U.S. conducted these strikes on the 14 Houthi missiles that they said posed an imminent threat to vessels in the region, another U.S. ship was attacked, the Genco Picardy. That's at least the third ship that has been attacked since the U.S.-led strikes began back on January 12th. We have now, with yesterday's action, seen at least 4 U.S.-led strikes trying to take out Houthi capability. But because they are still clearly attempting to launch missiles, that capability has not yet been wiped out, which raises the specter of the administration, the Biden administration, continuing these targets. And on that note, we are just hearing from a televised address the Houthi chief saying things like the following: we are now in direct confrontation with the U.S. and the U.K. U.S. and U.K. strikes will not change our stance, did not impact our military capability, going on to say they are working to improve their military capability, and the Houthi chief saying they will continue attacks on ships linked to Israel. All of this, man, is feeding into concerns of broader regional conflict, in addition to, as you say, Iran, which backs the Houthis, now striking targets outside its borders, including Pakistan. Pakistan now returning an attack in kind, all of it just adding to this picture of a temperature rising in the Middle East rather than cooling off, Manus.
Indeed, it's just a question of what temperature we rise to in the Middle East. It permeates on a constant basis. There is the map that we're actually dealing with, which shows Red Sea versus the Strait of Hormuz, and therein lies the differential. Let's take that across to Will Kennedy, who is with me now. Kelly, thank you very much. Will, we've coalesced a couple of times. You keep making the point, Manus, the defense mechanism is working. The missiles are being struck down. There's no choke point in the Strait of Hormuz. And for as long as that remains, then this oil market will remain well-tempered.
I think that's right. I mean, we have seen oil go higher at times through this crisis, but we've yet to break decisively above $80 a barrel, suggesting that traders are aware of the situation, but they don't think it's a crisis for the oil market. We've got to think about what could change that, and I think clearly there's concern about the widening scope of the conflicts around the Middle East. We've seen incidents outside the Red Sea and Gaza, in Pakistan, in Iraq over the last week. So there is that danger there, but ultimately the sense is that we're not going to see oil break high on geopolitical concerns until people feel that the flow of oil out of the Persian Gulf through the Strait of Hormuz is threatened, and the market isn't there yet. And I should say the backdrop is a market that is actually considered to be fairly well supplied. We had the IEA put out its monthly report this morning, and they said, we expect demand to be stronger than we expected this year, but we also expect supply to be stronger this year, and that the market will be balanced. And while there may be a small deficit this year, when people look ahead through 2024, they're not seeing any reason fundamentally for the market to tighten strongly. So that's the backdrop, which I think is important.
Well, thank you very much. Yeah, those front spreads are tightening up a little bit as Russia, and this is the subliminal headline that we're dealing with. Russia's fuel exports bursting through their OPEC Plus targets. So while the cat's away, the mice do play. Let's talk to Jim Caron and Seema Shah. Let's see what they make of geopolitics. Seema, let's put it to you first of all. Look, this is a very delicate situation in the Middle East. I mean, it's pronging on lots of directions. How underpriced is that? Briefly, Seema.
So look, I think clients are continuously asking now about geopolitics, and it's something that we're watching. Certainly, if you look at the Shanghai Shipping Cost Index, it has spiked in the last couple of weeks, which is certainly concerning. But look, I just want to emphasize this. It is quite a different situation to 2020. There are a lot of inventories, as we heard from Will, about oil, but just generally in terms of stock, we have a lot more supply. But also, in terms of goods demand, it's nothing like 2020 where there was that surge. So actually, we're not so concerned about the inflation risk today, but of course, it is something that we're watching, and it could have very significant implications if it were to deteriorate to a point where it actually starts to feed through into those PCE CPI numbers.
Okay, Jim, in 40 seconds, does it matter to the American audience? It's so far away.
Yeah, it absolutely matters. I just want to pick up on what Seema was just saying. Look, I mean, the goods component of inflation has been one of the things that's been bringing inflation down. If there's any threat to that in terms of, shipping lanes or even oil or energy or anything like that, that will actually, spike inflation, or could actually put upward pressure on inflation. And remember, asset prices are dependent right now on inflation coming down, interest rates being easy, Fed cutting, ECB cutting, and that propping up equity markets. So all of that together does pose a risk, given that we're predisposed to lower rates and lower inflation right now. This exhibits a risk.
Okay. Thank you very much, Seema Shah, Jim Caron there with their thoughts on the markets. Coming up, your morning calls and a conversation with Jim Breyer of Breyer Capital, live from Davos. Don't miss it. This is Bloomberg.
There is no digital without chips, and I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
The new Bloomberg surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Let's punch out the analyst calls. Bank of America upgrades Apple to buy, calling an end to the company's negative earnings revisions. Next up, Wedbush cuts its Starbucks price target to $95, expecting Q1 comparable sales growth to fall short. Buy your cappuccinos. Finally, Citi downgrades Spirit Airlines to a sell. The price target there, $4, following the collapse of the planned merger with JetBlue. Coming up, Deutsche Bank's Pinky Chandra on his equity outlook. 5100, it's on the way.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money, and number 2, don't forget rule number 1.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're counting down to the open, and this morning we have a moment of pause and reflection in the rates market. The equity markets are a little bit better bid. We've got a nice upgrade for Apple. Tech is on a ripper as Taiwan Semiconductors say they're going to have a solid quarter, and that gives us a lovely bump and a lift all across the NASDAQ. There is the opening bell. joy to the Bitcoin miners there on the NASDAQ. Let's have a look at the rest of your markets this morning. You've got the euro dollar trading down by an eighth of 1% and yields at 4.11 as Bostic really kicks it into the long grass for the third quarter on when you can expect a rate cut from the Federal Reserve. Jobless claims are absolutely storming ahead. U.S. jobless claims plunged to 187,000, their lowest since September 2022, and crude oil up 0.8% as there is a moment of reflection on the U.S. attacks on Houthi rebels. So there is a small inflection in the war risk premium on NYMEX crude. One stock to watch, it is Humana. Now, this is an insurer. It's slashing its forecast, citing higher than anticipated medical costs. Abigail Doolittle is with me on the details. Abby.
And as a result of this bearish pre-announcement to the downside, Manus, we have this stock plunging more than 10%, heading to the worst day in more than 2 years. Now, of course, Humana focuses on Medicare. They cut their outlook for 2023. They're also forecasting anemic enrollment growth for this year relative to the 2023 profit cut. They're now looking at $26 per share versus greater than $28 per share. I will note those are massive numbers, but still not what the street was expecting. And this has to do with rising costs as there's been an uptick in care usage by seniors a trend that started mid-year last year. This is also a warning call for Medicare Advantage plans. That's a private version of the U.S. healthcare program for seniors. It's driven growth and profits for some of these insurers for years, and it now seems as though it's slowing. The stock into today on some of these bumps had been down about 8% over the last year, and again today down more than 12%, heading to its worst day in more than 2 years.
Okay, well, let's talk a little bit more about tech and turn our attentions. I mean, it's been a rough 24 hours for Apple. It's, stopped selling its watches with the blood oxygen feature, and it gets snubbed by Netflix. Ed Ludlow arrives with me, I think, with a bit of good news for Apple. Ed, how you doing?
Yeah, good. I mean, I count no less than 4 clear standout stories about Apple in the last 18 hours alone. The main catalyst for the stock to the upside is a Bank of America upgrading the stock to buy from neutral, principally due to their bullishness about the Vision Pro mixed reality headset. They see that being a driver of hardware sales and services. They're also confident about the upgrade cycle for future iPhone. The stock up almost 2%. In the context of the Vision Pro, the other news story that came out was that Netflix has opted not to create a Vision Pro specific app. In other words, you won't be able to use the Vision Pro to view content or material through a designated Netflix app, and instead Netflix will direct its consumers to other digital apps and web browsers for that tool. I don't think that had any sort of substantive bearing on the stock. Probably the biggest one of the last 24 hours is that Apple has lost an appeal to extend a pause or an exemption from that ITC band on its latest generation watches. And as of today, they will sell the Series 9 and Ultra 2 watch with the hardware capable of blood oxygen monitoring, but it will be disabled as that patent dispute with Massimo continues. And by the way, Manus, the Massimo CEO, will be on the show with me later today, and I invite questions from our audience around the world. But we're just at the beginning of this appeals process, and Apple is very much bullish about its appeal.
Yeah, you just wonder where the compromise in that deal is. Thank you very much, Ed Ludlow, with the very latest on tech and Apple. Let's stick with the theme. Amazon is making a restructuring deal with Diamond Sports Group that will save the local broadcaster from bankruptcy. Emily Gray-Foa joins me now. Emily, what's the rationale here for Amazon?
Well, Manus, that's a good question here. Amazon had actually been in talks with Diamond Sports Group late last year to come in and create this minority investment. And one positive here for Amazon is that now its users will be able to watch live MLB and NBA and NHL games through purchasing access with Diamond Sports Group. But I'll talk a little bit more about this deal because Diamond Sports Group, a unit of Sinclair, had filed for Chapter 11 bankruptcy last year, and they were actually talking about winding down the company until those talks with Amazon began. Yesterday, we saw the stock of Sinclair pop about 17%. Today, not moving that much, actually now in negative territory after the open. The Amazon stock just up a little bit higher, but we do know that there's still some talks about whether the deal will actually be able to go through. It does have to be approved by bankruptcy courts, and the MLB, the baseball league, actually said that this deal with Amazon was a big shock and will actually really change how the MLB does business with Diamond. But at least for right now, was good news for Sinclair, and net neutral, it seems like, for Amazon stock right now, Manus.
Emily Griffeo, thank you very much for joining us. Let's turn our attention to financial services now. Discover reporting a 62% drop. This was in the fourth quarter profits. It continues to grapple with the fallout from risk and compliance lapses. Isabel Lee is with me in the studio to talk us through the discovery.
Hi, Manus. That's a steep drop indeed, and that led to the resignation of their CEO last year, if you recall. So the company posted fourth quarter profits of 1.54 cents a share. That's lower than Wall Street's estimates of $2.52 a share. Operating expenses also climbed around 18%, and the company is also expecting that their operating expense this year will increase in the mid-single digits. Shares of Discovered tumbled around 10% in pre-market trading, and now you can see that it's still continuing to fall roughly around 7%. The CFO said that fixing its compliance issues could cost the company around $500 million this year. This all began in July last year when Discover misclassified certain credit card accounts, which resulted in some merchants being overcharged, and it also resulted to their shares being suspended. And that was only the second time in a year that their company halted stock buybacks. Some silver lining, we have KBW saying that optimism could be found around net interest margin expectations and the reinstatements of their share buybacks. Manus.
Okay, Isabel, thank you very much. To Deutsche Bank's Pinky Chadra, let's talk about the target. 5,100 is the target price for the S&P 500 based on a number of factors, and this is what he wrote. We're going to discuss a number of catalysts that will impact the trajectory. Rates versus rates volatility, the playbook for geopolitical risks, and the sell-off, the widely anticipated mild short recession, and the presidential election. So there's a lot to unpack there, Pinky. Good morning. Good to see you. I'll ask you the same question as I asked my other two guests. You have a target of 5,100, which is a pretty significant number. It's a nice round number. How much of our journey to 5,100 is predicated on somewhere between 3 and 6 rate cuts?
For us, I'd say very little or nothing, basically. I think, if you think about the outlook 12 months out, and you think about it in terms of earnings and multiples, the main driver of the upside is really earnings growth. So our estimate for last year is $228. We don't have Q4 numbers yet in, but we go from 228 to 250 in our base case. So that's a little bit less than 10% earnings growth, and that's really where the upside comes from. Multiples look, some people would call them pretty full. We would argue they're sort of just beginning to price in, basically, the recovery that actually has been taking place for quite a while, whereas the macro consensus, has sort of continued basically to look for a very steep slowing in growth. It continues to do that. It continues to get upgraded, and that really keeps the bar for growth to surprise positively. It keeps the bar very low, basically.
So, Pinky, there's going to be a number of people tuning in here, and they're going to listen to that, and they're going to say, so we're going to get from 4,700, call it for cash, to 5,100 with no rate cuts. Now, that's not going to be a one-way journey, because this market is emotional. It reacts to delayed rate cuts to a certain extent. So do you think in the near term, as we see delays perhaps to these rate cuts, some disappointment in equities, which sets up a better entry level?
What I would say is, I would agree with that. What I would say is that, the lesson of the last 2 years has really been that it's not really been about the level of rates or the fact that rates, are higher than they were a couple of years ago. It's really been about, very high rates volatility, and that's what the equity market has basically moved with. So the market pricing in, for whatever reason, too many cuts, and some of those cuts come out, you're going to get rates volatility, and it's the volatility that's a negative, but the question is, will that volatility be sustained? So for that volatility to be sustained, things have to be continually basically changing, and there has to be a surprise. So would argue that, vol will come off as things settle down. And whenever vol has settled down, the equity market has basically rallied. So on the rates issue, I would argue it's really more about rates volatility rather than the level of rates.
Now, you remain neutral on megatech and on mega cap growth and tech. I'll get my sinking right in a moment. Neutrality. Why? Because I've got evangelist after evangelist telling me that AI, if it's got AI of substance and profit, it's worth having. Why are you neutral on mega cap?
Yeah, so I would say, we were long basically in late 2022 when there were no evangelists anywhere to be seen or heard from. It was basically at the bottom of the S&P 500. So we caught the rally in its entirety, basically. But by June of last year, in our view, it was really, we were very constructive on earnings and the fundamentals, but it looked to us that, it was more than really priced in. The second point that I would note is I would take a little bit of exception to the AI and the AI hype. If you take a look at mega cap growth and earnings,
please do.
For the last 20, 25 years, what you will see is that basically, their earnings have been rising basically in a pretty steady trend channel. And yes, the pandemic took them to the top and a little bit above that channel. Fourth quarter of 2022, as the forward demand started to wane, the demand that had been pulled forward began to wane. We saw earnings go all the way to the bottom of the channel, and since the fourth quarter of 2022, what we've seen is a very robust recovery, almost back to the top. So the simple point I am belaboring is that earnings have been in a channel for the last 20 years. They are still in that channel. So I would argue easily explained really by, the cyclical surprise. And so far, there's nothing happening that suggests that there's higher upside. And that's actually why we are basically neutral, because what the market is pricing is that, that we're going to go up and out of that channel.
Well, that's why we come to you, because you were ahead of the curve in the first instance. Can I ask you, yesterday we had retail sales. Today we've got nice jobless claims numbers. But I'm drawn to what Paul Donovan reminded me of from UBS. And this is just to get an idea from you about your consumer cyclicals. This is what Donovan said. Markets seem surprised by the US retail sales were stronger than expected. This is weird. Some part of the retail sales data surprised positively every single month during 2023. So my question to you on that is, you are overweight financials and consumer cyclicals, and you believe in the hedonism, I presume, of the US consumer? You're not worried about delinquencies, credit card spending? There's no level of concern?
Of course, you always have to be mindful of the risks, but given the world that we've lived in for the last year and a year and a half, which is, almost every macroeconomist calling for a very steep and sharp slowdown, maybe into negative territory, maybe slightly positive, but a steep slowdown nonetheless. Mm-hmm. And what I would suggest is leave the narrative of the last 6 quarters, which really hasn't worked, and look at the data. I mean, if you look at PCE spending in the U.S., almost 70% of GDP, it's rising very steadily in a trend. On the good side, I think the story that is missed, so I'll come to retail sales in a quick second, but what we had is a tremendous surge for reasons that we all know and understand now, well above sort of trend levels at the height of the pandemic and the pandemic boom, so summer of 2021. Then we had a period of good spending basically going sideways. But since January of last year, they hit the trend channel, and goods spending has basically been rising steadily. So you could actually argue there's nothing to see here. Now, if you take retail sales, what I would argue is you want to look at them in real terms, because a big source of confusion has really been, how much is inflation, how much is real. Retail sales are, of course, reported in dollar and nominal terms. If you look at retail sales in real terms, you will see again that basically, we're rising pretty steadily in a trend channel. And again, there's not a whole lot of news. I would say that yesterday's print was a little bit better in the sense that within the channel we moved up a little bit. But I would not argue that it's a huge or a big change. What I would argue is that this has been ongoing for 3 years. It is the narrative that is at conflict with the reality, and so we shall see who wins.
Yeah, as you say, it's putting the context around that consumer. I'm drawn to your thesis on buybacks. You played out very clearly what happened at the start of 2022, where we ended 2022. And typically when we start the year, we see lots of notes come out, get ready for buybacks, get ready for it. But you contextualize this as we are at the bottom relative to where we have been since the GFC. So it's not going to save my soul or my equity portfolio a bit of buybacks this year?
I think, the things to note are that buybacks basically come out of earnings. And so, you use earnings to pay dividends, to do CapEx. And then, one way to think about it very simply is what's left over gets paid out as buybacks.
Yeah.
And what we have is a very large disconnect in 2023, which is 2022, earnings are coming down, so buybacks are coming down. In 2023, earnings rose, each of the first 3 quarters. Our estimate is that they did so again in the fourth quarter. And what you've seen is buybacks go sideways to actually slightly down. So the ratio of buyback payouts relative to earnings, has fallen sort of to the bottom of the range. First question is, why have they done that? We would argue it's the same story, which is that, it's the uncertainty about what the cycle is going to do and what growth is going to be. But growth's been above trend for 5 quarters prior to the fourth quarter of last year. So, and I think that, it's very likely that it'll be 6 quarters of above trend growth. And so at some point, if this cyclical uncertainty starts to lift, a catalyst number 1 should be the reality of the last 6 quarters. Then you should see buybacks start to come back. Buybacks since the global financial crisis have been, the largest basically source of demand for equities. And so our expectation is that buybacks will pick up in the first or the second quarter.
Okay, well, we wait for those to come through. Binky, thank you so much for being with us. That is Binky Chadha with his course 5100 without rate cuts that the market has penciled in. I just need to bring you a correction from a little bit earlier in programming. We played a soundbite for you for the spokesperson of Pakistan's government, and we accidentally said that they were from the Iranian government. We apologize for that mistake. Okay, let's turn our attention back to the World Economic Forum in Davos. Lisa Abramovich is sitting down with Breyer Capital founder and CEO. Lisa.
Thank you so much, Manus. Really appreciate that. I am here, so pleased to say, with someone who has intense experience in the technological world, Jim Breyer of Breyer Capital. I know that you work very closely with Steve Pagliuca. You have invested alongside him with the Celtics. We're not going to speak about that. But you also have been investing in similar ventures. And earlier today, he talked about how there is a feeling here that feels reminiscent of 1999 with the tech boom. Do you agree?
It's 99 in terms of walking down the streets and the buzz around Gen AI. What's different versus 1999? So I agree with Steve on 95% of his views, but the underlying technologies and the magnificent 7 or 8 companies are extraordinarily well-led and well-positioned into this new world. That wasn't the case in 1999, where there were companies like Yahoo that were not necessarily great leaders in the technological underpinnings of that next generation. So there are always differences. History sometimes repeats itself, sometimes rhymes, but what I would offer is I've never seen so much unprecedented demand, whether it's big banks, federal governments, leaders of Europe, and the entrepreneurial activities. I've never seen so much demand for what AI as a core in terms of simulation, new drug discovery. This is unprecedented.
And we've heard this from pretty much everyone, and this to me is really a key question. Is there a company that you see out there that is going to be a Facebook or a Microsoft in the world of AI in the future?
Well, I love that you mentioned Facebook. Mark is near and dear to my heart, a genius. I met him when he was 20 and invested and joined the board in 2005. Meta is extraordinarily well positioned in AI. There will be new Facebooks and new NVIDIAs that are being created. There's one very significant difference again versus the late 90s or the social networks of 2005. And that is interdisciplinary skills are more important than ever. So the days of me just backing the great team out of Stanford Computer Science or MIT or our other great universities, those are gone. There are certain investments that still work that way, but the big upside is, and this is public and private, where interdisciplinary skills in computation mixed with big verticals like finance and healthcare. If you don't have both, you're not going to be part of that next generation where we think of the Microsofts and Facebooks and where they've come from.
I know that you talk about certain verticals, in particular with life sciences. It's something you've been very interested in the sort of technology that can advance things there. I'm just wondering how actively you're deploying money now versus educating yourself with what's out there and waiting for the prototypes to become a little bit more solid.
Well, it's a wonderful question. Since 2017, I've invested in 12 spin-outs in the world of medicine, out of Memorial Sloan Kettering, UCSF, where we start with great medical professionals, doctors and nurses, and data that might be best of world at MD Anderson versus even our best cancer centers. So I've done 12 of these over the last now 7 years. And I have to say, it's been a phenomenal surprise. My job is to go out and now find the brilliant, genius 30-year-olds at Microsoft and Apple and Alphabet that want to do something very mission-driven. And the world of medicine and life sciences and how it's absolutely colliding with computation is something where I'm really finding a lot of receptivity for, again, that top 0.1% of machine learning, artificial intelligence developer.
Well, hopefully artificial intelligence can solve cancer and cure it in the upcoming years. I hope so. I hope so. Going forward, one thing that you've been very strong in is investing in China. And I do know that there is the biggest delegation here from China going back to 2017. How concerned are you about the ability to invest in a country that so many people say is uninvestable simply because of a lack of a certainty and certainly friendliness around the regulations?
Well, it's no secret we're at very challenging times in terms of the international politics. I never think of China, though, as uninvestable. We've backed, in the last couple of years, a number of wonderful entrepreneurs who moved to Singapore. There's no doubt that in the areas that I'm most passionate about, quantum and AI, all my investing for the last several years has been in the U.S., where I believe the best talent and opportunities are.
But are you still actively investing in China? Do you think that there still are plenty of opportunities, even as you said, the entrepreneurs are moving to Singapore?
I took an 18-month pause. So I paused about 18 months ago, even if it's an e-commerce company. There are some remarkable companies we invested in several years ago. Shein is doing quite well. But no, I think for the foreseeable future, although I'm not a political analyst, I don't see the U.S.-China relationship this year becoming worse. with the elections. I have no idea what 2025 looks like, so I've paused.
In the meantime, you were talking about how here at Davos you've met with a lot of generals and talked about AI and the use of it in war. How do you see that evolving as you kind of look at the landscape and understand what's going to take off?
Well, I've met with General Milley, admirals, and senior Secretary of State personnel. We're ahead in the U.S., but we all know that with AI, not just generative AI, but simulation technologies, what quantum will do to security, if our three-letter agencies, our Army, our Navy, our Air Force, isn't investing aggressively in these technologies, we'll be surpassed. The good news is we're well ahead, but there needs to be an understanding, and I think there is with the people I've spoken to. There's nothing more important than understanding what these new technologies mean in terms of national security. And I would also say I've met with a number of medical leaders in hospitals. Ransomware attacks last year in U.S. hospitals were up 60% each month. So 6x, 7x ransomware attacks for hospital and patient data.
Unfortunately, we have to leave it there. Jim Breyer, thank you so much for taking the time. Back to you, Menace.
Lisa, thank you very much. Great conversation there about the next generation of meta to come in our world from Davos. Time now for your trading diary. Let's see what you need to keep an eye on for the rest of the week. President Biden, he speaks at 2 p.m. on Bidenomics. Friday, you're going to get your U.S. existing home sales and more economic data from UMich consumer sentiment. We then close out with a little bit more Fed speak. San Francisco Fed President Mary Daly closes off the Fed speak before we go quiet. And tomorrow at midnight, the next U.S. government shutdown. That's the deadline. Let's see whether they can fill or kill on policy there. This was Countdown to the Open from Davos and New York. A very good morning.
The hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Sitting down for an exclusive interview with Bloomberg's Francine Lacroix, and we'll go to that in just a few minutes. I'm John Tucker, in for Paul Sweeney, along with Molly Smith, and you're listening to Bloomberg Markets, 10 o'clock on Wall Street right now, and let's get a market reset. To do that, here's Nathan Hager. Hi, Nate.
Hi, John. This Bloomberg Business Flash is brought to you by IBKR. Investment advisors switch to Interactive Brokers for lowest cost, global trading, and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. That resilience in the labor market, investors are wading through that, along with a surge in tech shares. We saw Apple get an analyst upgrade from Bank of America. It's helping to fuel a tech surge this morning. NASDAQ Composite is up 1% right now, up 143 points at 14,999. Broader market, S&P 500, it's up 16 points, or a third of 1% at 47.55. The Dow Jones Industrial Average slightly lower, down 70 points, or 0.2% at 37,194. 10-year Treasuries down 3/32. The yield up a basis point to 4.11%. The 2-year yield down about 2 basis points at 4.34. NYMEX crude is up 0.5%, up 41 cents at $72.97 per barrel. COMEX gold is up 0.5%, or $10.10 at $2,016.50 per ounce. The euro weaker against the dollar at 1.0863. British pound 1.2675. That's little changed against the dollar. The yen slightly stronger against the dollar at 147.96. That's a Bloomberg Business Flash. Bloomberg Markets is on now with John Tucker and Molly Smith.
All right. Thanks a lot, Nate. Appreciate it. As we wait for an interview from Davos with Steve Schwartzman, the group chair, CEO of Blackstone Group, let's take a quick look under the hood. And to do that, our stocks reporter, Nora Melinda. Birkenstock. I mean, I know it for those sandals that, like, Jesus would have worn. Well, yeah. I mean,
it's
I'm
true.
not
They
kidding.
were called the Jesus sandal.
Yes.
Yes.
And I love it. So Birkenstock shares are up as much as 14% today, this morning, trading for their biggest gain on record. That's since it IPO'd back in October. It's it fell after its growth targets failed to satisfy traders who were hoping for more than the German sandal maker was able to offer. If the drop does extend, it could erase the gains that the company has made since its IPO back in October. So this company is really in focus, especially as it's targeting previously untapped countries like China and India, sidestepping some of those concerns about inflation that we're seeing here in the more traditional markets.
Would you wear them?
I don't own a pair of Birkenstocks.
I don't know.
I
used to.
But I know many
You've got
that
this whole
do.
Jesus aura about you, John. You can make it happen.
A Jesus aura. So not a purchase you guys see in your near
How about I
future?
get struck by lightning?
I mean, they've got so much more than the Jesus sandal now, though. It really has evolved. You know, it's not just the, what is it, cork, I think they're made out of in the bottom. It's kind of like wine cork. It molds.
That's how it looks like. That's how it
You didn't know that?
I did
I
not
mean,
know
it's
that.
there's like some other kind of looks and materials in there. I don't know. Maybe
Before we get in trouble,
we'll find John a look.
Let's move to semiconductors. 'Cause
Yes.
That's the big story today.
That is
because,
the story of
Sort
today.
of tech taking off today.
Yes, I mean, we see the NASDAQ is up about 0.7%. We've got the Taiwan Semiconductor Manufacturing in focus. That's the U.S. Depository Receipt, TSM. That's the ticker there.
Remind us who their customers are.
I mean, honestly, the customers are Apple and NVIDIA. So those are some big
everybody.
behemoth companies that we're talking about here. So this is a huge one to be watching today. And TSM is really a $500 billion company. Massive. The company reported fourth quarter results that beat expectations and gave a forecast that is seen as positive, suggesting that the world's most valuable chip maker anticipates a recovery in smartphone and computing demand.
I wonder if anyone's thinking about this now with, the new Taiwanese president, what's going on over there with China.
And the election that was,
Yes.
forgive me, it was not China friendly.
Correct. Right. And I'm not going to try to pronounce the president's name because we are on the air here, and I probably will butcher it. But I recognize it on paper, and I know that it was not China friendly.
Exactly. And a Bernstein analyst said that the report from the company was overall above expectations, but it's really the outlook that's important here. The analyst said that the guidance confirms both cyclical and secular upswing while addressing margin concerns.
All right, let's finish up with shares are slumping. Humana, pardon me.
Yes, looking at Humana today, that stock is falling as much as 13% in trading this morning, its lowest since February of 2022. Shares are plummeting after the company slashed its 2023 earnings outlook as the cost of members' care exceeded expectations, and the Medicare-focused insurer forecasts anemic enrollment growth for this year.
Weren't they just trying to carry out an acquisition? Wasn't it, right? Wasn't there just Humana and, oh goodness. I should know this before I asked it. There was just supposed to be this big healthcare deal, and it fell through.
I'll save you from this one.
Oh my goodness, am I really okay? Ignore me. It's been a long morning.
United Health actually reported earnings back on Friday, and that's kind of like the bellwether of the industry there. And Humana is now saying too what United Health said back on Friday, that it's seeing higher medical costs, but it's actually impacting EPS for Humana versus less of an impact for United Health.
Hey, have you been watching market pricing for Fed rate cuts? I mean, it's all over the place. Down to what, 60% from Friday?
I think it was maybe like more 50-50 odds.
Right. That's
closer to than for the probability of a March cut.
And I just got to wonder the extent to which that remains in the driver's seat for overall for equities at this point. Anyway, thank you so much for that. I appreciate it. Bloomberg is at the World Economic Forum in Davos, Switzerland. Blackstone Group CEO, the co-founder, Steve Schwarzman, sitting down for an exclusive interview with Bloomberg's Francine Lacroix. Let's head to that right now.
Well, I think 2024 will be a good year. It'll start out slower in the sense that, interest rates are still pretty high, and the Fed will keep them that way. Everybody has their own guess, probably till the second half at some point in there. So that'll sort of have a little bit of sort of a baffling effect. Stock market had such a run in the fourth quarter that you wouldn't expect that to really take off and go, and the economy is slowing a bit. That's normal with high interest rates. So on the other side of the ledger, the expectation that interest rates are going down is creating animal spirits again. And we did, at Blackstone, we did 6 private equity investments in 6 weeks at the end of the year after a slow year. And we're much busier now. Yeah. In a way, it represents some type of capitulation for people who were holding back for 2 years. So we're optimistic. Yeah. For this year.
But Steve, are you worried that if actually we don't get those cuts promised by the Fed, because a lot of the good news is already priced in markets, that people will start waning on the deals a little bit? So for the moment, you're optimistic. Is second half of the year a little bit trickier?
We will get the cuts. Okay. Because the way we measure inflation at Blackstone, we're already right around the 2%. The fact that the Fed's using different numbers for rents and real estate, we think they're sort of looking at 6% inflation in rents and residential real estate, and we're the largest owner of residential real estate. We think it's 0 to 1. Let's bet on us on this one, because we're the people actually doing it. And if you correct the index for that difference between what's really going on and they're saying it's 6.2, you get around 2%. So I think I'm quite confident that they'll be lowering rates. Some people are like overly enthusiastic about when they do it. We don't really care when they do it. It's just the fact that we're going to go from a period of rising rates to a period of lowering rates.
So where do you see the best deals? Where do you think that the market is really ripe and kind of ready to go?
Well, there are different things. Data centers now are really interesting. Energy transition, that's more of a book value kind of thing because you're building things typically, and we've done extremely well in that area. We have healthcare types of things where you're inventing drugs through stage 3 trials. That's uncorrelated. We're looking at very interesting things in European real estate. Now, that's counter
I was
to
going
what
to say
people
counterintuitive.
Right, counterintuitive. So there's always an actual reason why it's interesting, not an assertion. So the reason is that people who own real estate in Europe used to be paying almost nothing in interest because rates were negative for governments and even deposits. And now it's costing them about 500 basis points more to carry their positions. If you are highly leveraged, then you're having a lot of difficulty holding your positions, and the actual underlying real estate isn't necessarily growing that much.
Right.
So the way out of this dilemma is to sell assets.
Yeah.
And there's hardly anybody in Europe who wants to buy them.
Yeah.
But at Blackstone, we're the largest owner of commercial real estate. We've got plenty of money. We want to buy that real estate, but only the good kinds of real estate, like the data centers, the warehouses, the student housing, which is all doing well. So what we normally do is tell them to go back and just bring us that stuff, and we'll buy all of it to give them liquidity. And we're finding that that's happening a lot, and that's creating things because we only buy them at a price we think makes sense. So we now have not only willing sellers, but sellers who have to sell and a very willing buyer. So we're going to create a lot of very interesting investments. So what you find, Francine, in almost every environment, if all you're doing is what everybody does, it's not so interesting. If you have different inputs, you can create things with very good rates of return.
How do you look at AI? So is AI something that's embedded in the future of what you're buying, or do you go straight for AI play?
There are certain types of things, when you look at them, you have to, as part of an analysis, say if AI was more developed, is that good or bad for this type of business? So there are certain types of businesses really not good for, certain types can really be improved. And so that's now on the checklist, if you will, for due diligence. And AI itself, and we've marshaled, almost all of our portfolio companies. I did a Zoom with all of them, all the CEOs, about 6 months ago. And I told them AI is no longer an elective course. This is core curriculum. And you're going to learn to love it. And the reason...
And understand it.
Well, understand it as best you can, and we'll help you. In effect, Blackstone Parent. And a lot of companies, we embed data scientists to serve as a link. One of the things that we really want to do is make sure that every company has a plan, because if you don't and somebody else does, this is an area where if you're not the first mover and your competitor implements AI and they have bigger margins or more new products, then you're going to start losing market share. And some people, some businesses who aren't in the game are going to be really adversely affected. And I explained to them, that can't be you. You don't want to oversee somebody else taking your market share and hurting your business. They all understand this.
Okay, this is a good thing. Steve, do you worry about liquidity crises in certain pockets? I know Carson Block was talking, for example, about BXMT.
No, not. You know, we have, I think, 97% of loans paying, and you know, we've done our own analysis on that, and we're not you know, particularly concerned about that. In terms of liquidity, there'll be office buildings which will have that issue, although office buildings, particularly in the United States, as a rule, are a lot lower leveraged than they used to be when you were covering the global financial crisis. Then office buildings were 75 to 80% leverage. Now they're 55 to 60% leverage. So to the extent that those buildings get in trouble, there's much more equity in them. So this is going to be an unfortunate moment for the actual owners rather than just the banks.
Do you think private equity has a place in people's 401ks?
Oh, absolutely. Geez, you know, we're selling a lot of money to private wealth. 25% of Blackstone's assets are to private wealth customers. So that's $250 billion. And, you know, that is a little cyclical because private wealth customers sometimes get, you know, affected more than institutions when markets go down or there are threats of that type. On the other hand, there's $80 trillion with probably, that's as a market opportunity, with probably only 2% penetrated. When I started in 1985, back in the Middle Ages, that's just the way institutions work. Institutions now are 25%. And the reason is you get much higher returns over time than the stock market. You know, probably form, if not daily liquidity. And now we're inventing new products that can be put into liquid form, if not daily liquid, periodic liquid. So you give up some liquidity, but you make a lot more money.
Steve, talk to me about the U.S. elections. So you've always had a candidate, and you're on the fence for the moment. Like, how will you make up your mind?
Well, you know, all I do is read polls and media, and you know, we've only had one election, and it wasn't even an election; it was a caucus. So I think, you know, I'd like to see what the public thinks rather than what I think. So that'll take a little bit.
But is that because you want to back the winner, or because you want to see someone that could possibly beat Trump?
Well, I just want to see how the game plays. And, you know, the world's complex with all of this presidential
you're listening
politics
to Blackstone
now.
Group, Steve Schwartzman, the chair, with our Francine Lacroix, the Bloomberg Economic Forum. And you know what? Molly Smith, along with John Tucker here, the exclusive interviews from Davos, they don't stop there. We're having a panel discussion now with the European Central Bank President, Christine Lagarde, Deutsche Bank CEO, Christian Saving, the EIB President, Nadia Calvino, Eurogroup President, Pascal Donahoe, and Sequoia Capital Managing Partner, Roelof Botha. They are sitting down and speaking right now with Bloomberg's Stephanie Flanders from the World Economic Forum in Davos, and we're going to start out with ECB President Christine Lagarde.
I think Jean-Claude Juncker was the one who sort of made that one of his key projects, and that was already a long time ago. And a few things have changed. but it hasn't progressed much. And as you said, financial integration, if anything, has been reduced over the course of the last few years. So why do I think that we should really mobilize our energies, and why do I think that all of us around this panel are convinced that we can actually make progress? And you have to not blame anybody, not try to nitpick and finger point, but ask yourself whether there is a valid business case and an opportunity to actually take it further. And then what you need to do is to look at history and the circumstances during which very large capital markets, such as the US, very large capital markets, such as the UK, why did they develop? And were there circumstances that justified it at the time that could be taking place now? And that's what I think, personally. So when you look back at the US, the capital market developed massively as a result of the development of the railroad across the country. If you look at numbers, it was late 19th century, but the takeoff was clearly associated with railroad development. And there was bond emissions, most of it, but a large part of which was subscribed by foreigners. The same happens with the UK, and the municipal capital market grew to about half the size of the government debt market. I want to make it very specific, and it was related to urbanization and the development of building roads, sewers, gasworks, and all the rest of it. So what does that have to do with our current circumstances? Plenty of railroads, plenty of sewers and infrastructure. But what we have in front of us now is what I call the DDDDD, one of which is decarbonization, one of which is digitalization. And if I'm to believe the numbers provided by the European Commission, and I have no reason to doubt them, although they tend to increase over the course of time, it will cost no less than 620 billion per year to actually move the green transition further into the hope of a clean energy environment and a serious reduction of our CO2 emission. And it will cost 120 billion per year as well to develop the digitalization that we need. So if you put these two numbers together, I'll leave it to it. Do we have the money? No. Public? Not enough fiscal space for that. Banks? I'm sure that Christian will say that, yes, they can carry some of it, but it's not enough. So I contend that there is actually a set of circumstances that could fully justify that we go over the many hurdles that we have faced and that still exist in order to put in place a capital market. And I would be happy to expand on what we should do, what method we should use, because I have some views on that, having gone through 15 years of trial and errors, failing to achieve the ultimate results. And I think that artificial intelligence can help.
So Pascal Donahue, you are head of the Eurogroup. Christine has very admirably kind of placed this on the economic case for capital market union. You've stated it as a sort of priority for the group. How are you going to pursue that in the next year?
So if I could give the political side of the coin that Christine has described very clearly when she described the economics of it. So politically, as a finance minister working with other finance ministers in the Eurogroup, so much of our effort, so much of our focus has firstly been on budgetary matters, where finance ministers spend 95% of their time looking at how much they're taxing, how much they're spending, and how much they are borrowing. What little time has been available from dealing with those weighty matters over the many difficulties of the last years was then devoted to banking issues, to banking union during the global financial crisis, and in the aftermath of the financial crisis, building up and supporting our institutions and making all of the changes that were needed, the benefits of which I think we've seen in recent years. And I would contend actually that an opportunity cost, and a justified opportunity cost, has been the political focus on the need to build and deepen our capital markets has not been what it could have been, because other priorities needed time and needed economic and political capital. The reason that is now changing is exactly for the reason that Christine has just outlined there. What she summed up very, very clearly is we think about capital differently at moments of economic transition, and we are clearly at multiple moments of economic transition, exactly at the moment that finance ministers need to normalise budget policy and reduce borrowing. And this has brought to the fore the issue that we are discussing here today in terms of what change could look like from a process point of view, and I won't go into it too much because process rarely makes compelling content.
They're already here, I mean, you know.
Well, still, I want to keep the audience in the room, but I'll still sum it up quickly. Prime Ministers last March in the European Council asked finance ministers to look at this project. We've been engaged in a number of different processes in looking at it, and it's now going to conclude in March, where we are going to say to the Commission, and to the next Commission in particular, these are the areas that we want you to consider, we want you to act upon, and we believe as a group of finance ministers we can make progress on these matters quickly. And just as the President outlined the different Ds of the changes that are happening, I think there's an ABC that we need to be aware of. What's the architecture of capital markets? How can we change it? And if we change it, what's the B of what it can mean to a business? And what's the C, critically, as a politician, of what it can mean to citizens? And that's the areas that we want to make further progress on top of the gradual and important change that the Commission have been making, and they have been, but we're all conscious that we have to do more now in the time ahead.
So, Christian Sewing, you're sitting there at Deutsche Bank. Does your heart leap when you hear that this is now going to be a priority? Do you see, I mean, is this something that is remotely exciting to you, or actually just not a big deal for your business?
Well, it's super exciting for me, and I mean, if you have followed me for the last 5 years, I think I'm one of the biggest pushers and fans of the European Capital Markets Union, and for a couple of reasons. Number one, Christine and Pascal both said it. I think we are coming into an era over the next 10 years, and forget about the banks, from a corporate industry where operating expenditure is, so to say, replaced by a priority by capital expenditures. The number of investments which corporates have to do in Europe in order to be in the game, in competition, from a digital, from a sustainability, ESG point of view, is tremendous. And I think those companies who are investing will be successful. Those companies who are not following on AI and ESG will not be there anymore in 10 or 15 years. And therefore, the necessity to invest is huge. We can't do it, as Christine is saying, even if I would love to do it. And I think, by the way, the European banks have done a tremendous job in cleaning up, being robust, healthy, sustainable, profitable. The numbers Christine just mentioned are impossible to stem for us. Today, unfortunately, 70% of the financing of the German Mittelstand is done via bank loans. In the US, it's actually 25 or 30%. The rest is coming from the capital markets. If you now think about how much investments will be necessary in the next years, the bank balance sheets, as robust as they are, will not be sufficient. And we also talked about the public finances, doesn't work. And therefore, we definitely need the European Capital Markets Union. And therefore, I'm really, I think, the one who is again and again saying we need to make progress. Now, two things to this. Number one, I think we need to do a better job, including the banks, explaining why we need these capital markets. I think that in particular in Europe, in my home country, there is also from the society point of view, still a kind of a distrust in capital markets. And that may go back to the 2008 financial crisis. And we can criticize it, but it doesn't help. We need to do a better job in explaining why it is actually necessary for keeping the wealth and the prosperous situation which we have in Europe. And I think this is one thing, it's education of the people, why it's so necessary in order to get Europe competitive and let it stay competitive. And the next item is, and I'm sure our partner to the left will talk about that, when we think about European capital markets, we think about kind of the deep markets for whether it's equity issuances, whether it's bond issuance. But usually, if you get a deep capital market, then the sidearms are coming. And what I mean with sidearms is venture capital, private equity. Other people, other players are coming to the game. And this is, again, necessary in order to finance new technologies, new emerging industries which are coming. And therefore, I think we also need to see the Capital Markets Union not only as the financing pot for traditional industries, but actually as our chance to attract new industries like the tech industry into Europe. We have the talent. We have the excellence. If you look at industrial AI, some German companies, European companies, are leading in the world. But we also need then the underlying financing, and therefore my heart is leaping if I hear that.
There we go.
Yeah, Nadia Calvino, I guess we can add you to the list of people that also, or the European Investment Bank also can't afford to finance all of the things that have been talked about. But what role can the European Investment Bank play?
Yes, two thoughts from my side to complement what already has been shared. And let me start where you started yourself, which is this feeling of déjà vu. Now, I was responsible for financial regulation around the euro crisis. I left it in 2014, and by the time we already had the clear diagnosis that capital market union was a top priority and that we needed to move as fast as possible in this direction. 10 years later, we are still discussing, you know, and despite the fact that I always agree with Pascal, I think that we can spend years discussing what the ABC is, and maybe it's going to be more difficult to reach an agreement on that. So my approach to this would be, let's do it. Let's start somewhere, you know, and find some low-hanging fruit or some realistic element on which to start. It can be a market, it can be an instrument. I will come back to this in a second. But an additional reason to Christine's, to why we absolutely need it, is that for the climate transition, we need scale. So we have the technologies, we have wonderful startups and companies that have developed the technologies that are going to allow Europe to succeed, to rise up to the challenge, and we will and we can do it, but we need scale. And so it's not only a matter of capital markets union, it's also a market of integration of our markets and making Europe have the sufficient scale for this to become profitable and to become affordable. Because as Pascal said, these new technologies cannot be only for rich citizens or for wealthiest states. You know, this transition needs to reach the whole world. And so I think that it is of the essence, and it's urgent that we actually proceed with this. And this brings me to my second point, which is what can the EIB do? And as you know, the EIB has, I think, been very successful in becoming the climate bank. We fixed ourselves a target of 50% of our business in climate finance. We outperformed this target, not only in the bank, but as a group, together with the European Investment Fund. Actually, I can tell you, I mean, we will be disclosing the 2023 results next week in detail, but I can already tell you we've made 49 billion euros in green investment in 23, up from 38 the previous year. So, you know, the progression is, I think, outstanding. It is impressive. And we were also pioneers since 2007 issuing climate awareness bonds. You know, this is the pioneer instrument of climate bonds, of green bonds. Why don't we start there? Why don't we try to find an area, a market where we have the taxonomy? Europe is in the lead in developing these new instruments, and green finance, there's a strong political commitment to the climate transition. And I think the EIB should indeed play its role in being a catalyst, de-risking investments, supporting financial sector, also, you know, taking on new instruments and trying to explore new financial engineering instruments that can allow us to fund the necessary investments and mobilizing public and private partnerships, which I think are going to be necessary if we are to succeed, which we will. Thank you.
Roelof Botha, you're sort of smiling at the end, and I'm sure you're very polite anyway, but you look like you're being particularly polite when you sort of have this feeling that a lot of what people have just talked about is completely irrelevant to you. I mean, this project is partly about having more Sequoia's sort of deeper sources of venture capital as well as other sorts of financing in Europe. And I don't get the sense that any of this would sort of fundamentally change the way you think about Europe. But maybe, am I completely wrong there?
That's mixed. Firstly, thank you very much for having me here. I feel it's an honor to be invited here today. You know, at Sequoia, we back founders that build early-stage companies. And over the years, we've backed Apple, Oracle, Cisco, NVIDIA, Google, PayPal, YouTube, Instagram, WhatsApp, the list goes on. So the companies we back today account for 27% of the NASDAQ when they were private companies. So we operate in a very different part of the universe. And candidly, I'm kind of daunted with the challenge that you face because we deploy small amounts of money in founders who have a dream to build for the future. But I feel that in our business, money follows the opportunities. And so we've been active in Europe for over a decade. I remember in 2010, May 2010, I was introduced to a young company in Copenhagen called Unity. There were 30 people in the company, and I hopped on a plane and I flew to Copenhagen immediately. And we made an investment in that company, and today it's a global winner. They have $2 billion in revenue. It's a big public company. We did that with UiPath in Romania. So from my point of view, there's a tremendous amount of opportunity in Europe, and we now have people on the ground in Europe looking for opportunities. Last year, 11 of our 44 investments were in Europe. We have a fantastic investment in a company called Robco in Germany, building robotic solutions. Penny Lane is a software company in Paris. We have an early-stage AI company called Dust that's also based in Paris. So I see tremendous opportunity from the bottom up with founders who want to build for the future, and hopefully that becomes a driver of economic growth.
But is Europe, just to go back, is Europe already a single market as far as you're concerned? I mean, is that, what are the, do you face any obstacles?
From our narrow point of view, from a capital market point of view, it really is the same because we can hop on a plane and go anywhere and make an investment. The challenges are more from an operating point of view, where what the founders tell us is they want easy access to deep pools of talent. So Penny Lane wants to concentrate all the best talent it can in Paris, from wherever. They want predictable and consistent regulations, and they obviously want a large market opportunity. But I'll say the other thing that's changed about European founders, by the way, part of the reason we're so enthusiastic about being here is that they have global ambitions. I'll be honest, when I first traveled to Europe 20 years ago, I felt that founders here were aiming for small exits. They were happy with an acquisition, and now they really dream big.
Your phrase, money follows opportunity, rather than the other way around. Did I go the way around? Yes. It just makes you, I mean, are we focusing on the wrong things? I don't know who wants to take it up on, but Pascal, should we be thinking more concretely about the opportunities in the broader economy and let the money come to it?
But that's what we are doing, and I completely agree with the analysis you've just offered there regarding the outlook for European entrepreneurs. If I look at how we are doing with our share of patents in different very important parts of the global economy, and if I look at the entrepreneurs that I meet in Ireland alone, their ambition, their innovation, you'll be very familiar with Stripe.
Of course.
You've invested in.
At the seed stage, we were the first investor.
You're one of the first supporters, and now a globally successful company with peers nowhere near that scale yet, but many peers who are as ambitious in Ireland and all over Europe to do that all over again. But it's precisely because now the appetite is there in the European economy for that kind of innovation, where the lead is able to do it. The question then becomes, how can Europe itself play a role in providing the savings and the capital to contribute to that, and obviously, ultimately, to benefit from it as well? And to build on your point, it's about making sure the money is there to follow the opportunity, and not just, which, while of course we hugely welcome it, money coming in from other parts of the world, which played a role in European companies growing to the scale they are. So it's because of that practical opportunity and need that we're all now devoting time to how we can make it happen. God knows it will take time, but in Europe, we do move slowly at times, but we move carefully over years and look back at the huge progress we've made. And that's what we need to do here now.
Except occasionally in the middle of a crisis where you move really dramatically in a single night.
And of course, what's particularly challenging about this opportunity rather than a crisis is it's an opportunity that moves gradually, and then you look at the huge change that's happened in the European economy that other parts of the world have helped play a role in funding. And we just want to add to that by European savings playing a role.
So Christine Lagarde.
This Eurogroup President Pascal Donohoe and a panel discussion with Bloomberg from the World Economic Forum in Davos, Switzerland. The panel including European Central Bank President Christine Lagarde, Deutsche Bank CEO Christian Saving, EIB President Nadia Calvino, and Sequoia Capital Managing Partner Roloff Botha, speaking with Bloomberg's Stephanie Flanders. Let's return to the World Economic Forum in Davos, Switzerland.
I think we are in an accept case where it's not a crisis, but it's massive investment that is needed. So I have a slightly provocative view, probably, but that's because I have tried to help, using the bottom-up approach, trying to pick the low-hanging fruit, move one little initiative at a time in the hope that it will eventually work. I recently gave a speech in Frankfurt, and being in Frankfurt, I advocated that we needed to use a Kantian shift and move from this bottom-up approach that we have adopted for the last 15 years to a top-down approach. And for that, I have three practical suggestions. That's what you asked me to focus on. The first one is to have a single set of rules that would apply to the capital markets across the European Union, so that the regulatory authorities, and I'll come to that in a second, applies the same rules throughout the European Union. The second that we need, why is the US market strong? It's notably because the SEC is pretty powerful and can actually implement and deliver on the single set of rules throughout the United States. Well, if we had an ESMA, or we can call it a different name if we're not happy with the name, but that had the similar authority as SEC, it would certainly also make a dent in that very slow and gradual process. And third, I think the infrastructure, the trade infrastructure providers, it's one area where we do a lot better than the US. In the US, they have 5 times more venture capital than we do. We have 20 trade infrastructure providers when the US has one. This is not a good idea. We need to have a much more consolidated trade infrastructure mechanism in place. And where I say, and then I will not take any more minute of your time, Stephanie, when I say that artificial intelligence can help, I believe that it's not a question of eliminating the marketplace that Frankfurt, Paris, Madrid, Milan, and Dublin can constitute eventually, but to bring them under one single mechanism, one single set of rules, one single regulator. And we have been able to do that in banking supervision with the SSM, where the local authorities in the various member states still enjoy a level of control and authority and conduct joint supervision with the SSM. It is doable without destroying the turf and the territories that are fiercely defended in many corners of Europe.
Well, so starting with Dublin, maybe. What has the Eurogroup talked about Madame Lagarde's excellent proposals? Are you going to sign up?
We will be talking about them in our February and March meetings.
It's November, she said this. Talk about, could you not have just had a phone call after she...
Well, we talk all the time, but actually the reason why we've been doing this is we've actually been bringing into our Eurogroup meetings businesses who depend on private capital to get their view of what's happening in Europe. So we've been bringing in the private sector, we've been bringing in so-called market participants to hear what they think.
So what do you think you're going to say when you meet?
So I think there are elements of what Christine talked about that are definitely going to be considered, may play a role in it, in where we end up. If I was to pick out the 2 things that have surprised me the most and what I've learned the most from all of the discussions that we've been in, I've been really interested in how the development of national pension systems in different countries have played such a decisive role in increasing the volume of capital that is available to invest within companies. And we're starting doing that in Ireland, but there are other countries now that are well down the path that can relate the development of their pension systems now to economic growth and investment. And that's been a very interesting insight that has came out across a variety of different countries. The second issue that has been, I think, new to the debate so far is it's not just about the integration across capital markets, it's the fact that many countries want to grow the depth of their own national capital markets at the moment and recognise that they're really underdeveloped. And by doing that and looking at how we can integrate as we do it, it again creates stability to add volume. And just in reference to Ireland, while of course I'm speaking as president of the Eurogroup here rather than as a member of the Irish government, of course we're always eager to look at ways in which the single market can be deepened and completed, because we want to play a role then in playing that in that arena to grow financial services and in turn allow them to invest into the real economy.
Christian, I guess I'd be interested in what you think the reaction in Germany might be to these proposals, but actually also you've often, in these conversations we often talk about bemoaning the lack of a European banking champion, and I just wondered whether there's if you think of all the obstacles to having a big European banking champion, is it the kind of things that we're talking about, or is it something a bit more kind of cultural?
I would say, this is even a little bit different from the European capital markets, but I get back to your point on the European banking champion. By the way, I think you can't create a banking champion just by forcing the institutions to do that. That the market needs to want it, and you need to have certain preconditions. By the way, in this regard, the Capital Markets Union is not the predominant precondition. It's actually the banking union which needs to be finalized. For us, if we think about more consolidation in Europe, one of the precondition is that from a regulation point of view, from a framework point of view, we actually finalize the last bit of the banking union. I think that is one very important point. I think there is another point, and I'm really glad about the argument which came, that next to the Capital Markets Union, the first step in order to make it better is to develop the national capital markets. And I can say it from a German point of view. The German capital markets is actually not as deep as the Swedish ones, as some other Scandinavian ones. And actually we could learn a lot from these countries in order to develop the national capital markets as a first step actually to get to a capital markets union. So I think we also need to make the plea also to the politicians that they should not only focus on the capital markets union, but also work on the domestic scheme. That's number one. Number two, a very pragmatic first step to bridge into capital markets union. Even if everybody has to say a lot and has the power to do something, it will take another 3, 4, 5 years to get where we want to.
봤는데
We need securitizations. We need to actually
오늘도
bridge
나가리
the time
됐네.
to create capacity. And therefore, the proposal done by Bruno Le Maire and Christian Lindner to think about making securitizations in Europe simpler, to think about what kind of regulations can we also make a bit more light compared to the US ones.
반성할게요.
That would help a lot actually to free up our banking balance sheets in order to give new capacity into the
아니 좀
economy.
전에 분위기 괜찮았는데 역시 시장이 열자마자 바로 안녕.
But let's think about the pragmatic steps to there. Securitization.
고봐 이게 뭐야?
We have 1/10
아 이렇게나 많이
of the
올라갔어?
US volume in securitizations.
이거는 좀.
And that is simply not enough in order to create the capacity on the banking balance sheets.
Roloff, I wanted to ask you because in different ways we're talking about whether there are also other
그럼
aspects
주한
of the
씨도
environment which could be just
비슷한 상황이겠죠?
opportunities as much as some of the things that we're discussing. You're obviously very involved with AI and OpenAI.
많이 잃어버렸네 진짜. 뭐 물론 타인이 어제처럼 그렇게 많이 많지는 않지만 참나.
Is that going to be good or bad?
시원해도
Does it look like it will be good or bad for startups?
나가야 됐네.
Not yet. I think regulation is necessary with any powerful technology. Any technology can be used for good or bad. I think generally regulation is especially advised at an application level to make sure that you don't have discriminatory.
그냥 내일까지 그냥 냅둘까요?
misused in healthcare. So I think at the application layer,
언제쯤 좀 떨어지겠죠.
I'd say be careful. What do I know about regulation? But I'd be careful in the early stages to make sure that we don't accidentally snuff out the innovation, because there's tremendous innovation happening here in Europe. Based on our analysis, Europe has a much higher density of AI talent than the United States. And the number of master's degree and PhD AI researchers in Europe is far greater than what we have. And a company like Mistral in France is a fabulous example. Fabulous founders coming up with wonderful innovation.
이런 상황에서 별 맞지 않을 음악인 것 같아요. 잠시만요.
Are you worried that the act as written or as designed will do?
As written, the act has no problem whatsoever. I just think in general, it's the same conversations we're having in the United States. It's such an emergent technology. There's a risk that one accidentally prevents innovation that we have not yet seen. And it may be better sometimes to follow very quickly with abuse that one sees, rather than imagining all the things that can go wrong and preventing something from flourishing. So that's the this has the potential.
어떻게든 해봐야죠.
I've heard a lot of people express concern about the risks of AI, and I'm much more focused on the potential of AI to
뭐 그쵸. 성에도 볼 수 있잖아요.
across every single industry, and I see transformation in education, in healthcare,
이건 인생이지 뭐.
security. Everywhere there is opportunity for great productivity. So I think we should harness that.
분명히 차트처럼 올라가면 떨어질 수도 있어요.
There is a sense. I think of all the things that Europe is facing, and all the challenges for the European economy, and how countries adjust to their models, and things like a plethora of new national subsidies for different industries, thinking about competing with China and elsewhere. Is it just that this is not necessarily the biggest problem, the biggest obstacle facing Europe? And do you think that there are other things? Enrico Letta has actually singled out other things that are going wrong with the single market. Should we focus on those?
Well, it's very difficult to see, because there's so many challenges that we're confronted with right now, and they have to do indeed with the climate change. They have to do with technologies and
역시 지원 씨 엑셀처럼 참 현명하시네요. 인상이 바람 불고 대안도 대안 두고 하는 거죠, 그렇죠?
To something as complex
많이
as
배우네요.
intelligence, and react promptly in a manner that really avoids that the risks materialize, and there is a clear asymmetry between the expertise and the knowledge of the companies that are running and creating the algorithms, and any supervisor. If there's a symmetry when we're talking about financial supervision, imagine when we're talking about AI supervision, from the public sector. There is a duty to protect citizens. So
그렇죠. 근전적만 가져야겠죠. 왜냐면 내일은 좀 더 괜찮은 날일 수도 있어요.
I was very taken by this idea that we need to make Europe the land of opportunity, which is a very inspiring thought.
내일도 열심히 해봐야죠.
In many instances, and despite the challenges and the limitations and the absence of an internal market in banking, in capital markets, in energy, in so many areas, actually, the EU has become the standard setter in data protection. And when we adopted the GDPR, I remember people saying this is going to be the end of the world as we know it, and no innovation, and actually.
에이, 주원 씨, X세대잖아요. 오래 못 살잖아요. 근데 지금 20대쯤? 그 정도 되지 않을까요? 아직 인생을 배워야죠.
And just to wrap up on where Christine was, I think it's a no-brainer that we would need a single rule book, a single supervisor, and that would be. That's exactly what we thought in 2014. That is what a capital markets union, from a regulatory point of view, would look like, and you would have to focus on. And because we have not been able to reach that, there have been many different initiatives and bottom-up and smaller changes, or not so small, like the anti-money laundering regulation, which we're also making progress on. But we don't really manage to close the ABC that Pascal was mentioning. So that, I think, is leading me to a more pragmatic
솔직히 얘기해 주세요. 60대죠.
or climate finance, or artificial intelligence
갈 때는
financing or
수가
scaling up of
없습니다.
startups. And let's
맞는
build
말이죠.
from the reality on the ground in parallel to trying to make progress on building a regulatory framework that reflects these single capital markets that we should have. And that probably that approach is necessary in many other areas because indeed there are many shortcomings and there is a difficulty to reaching unanimous or qualified majority agreements in Europe in many core areas. Maybe because of the maturity of our markets and the maturity of our economies, which makes it more difficult to build from scratch, you know, maybe than in some other areas of the world where maybe it's easier to
그만큼 지혜로우시잖아요.
new paradigms.
지혜 많은 사람 같이 보여요.
One of the things we haven't mentioned, there's only a few minutes left, but we haven't mentioned what has happened since 2014 is Europe has actually lost its deepest, most mature capital market in the UK. Now, I can understand, yes, London, not the UK.
뭐 그쵸. 주식이나 해외선물 잘못 들면 스스로 갈 수도 있죠. 뭐 물론 이거 농담이죠. 스스로 가면 안 돼요.
French, German, Swiss, Romanian, they spend all their time on the ground in Europe. Can I go back to the institutional investment?
Yeah, briefly, but I do want to sort of make a challenge around
Just
it.
one observation. In the United States, most of the risk capital that finances venture and growth stage companies comes from endowments, foundations, non-profits, pension funds. And it was interesting that even in the UK, it's more likely for a Canadian pension fund to invest in late stage than UK pension funds because the rules have made it very hard for them. So I don't know what the phenomenon is in Europe, but it's just interesting to me. I don't know if that kind of a private risk capital market exists here. I just don't know, but it is what we have in the United States.
And that is actually something that the British government also
지금 상황은 좀 나아지는 것 같은데요. 좀 떨어지는 것 같아.
I know you're all going to say I'm mad, but I mean, isn't there, if it's going to be so slow to have the full European approach to developing a capital market union, would there be a way that you could at least make progress by reconnecting in some way, even in a very partial way, to the very well developed deep capital market that Europe already has in London? Is that not even worth thinking about? Taking advantage of the strength that already exists rather than trying to create things out of scratch. Pascal, you're
저
just
아직인데.
coolly. I'm not talking about letting them in or anything. I'm just saying, you know, is there a way?
아직은 와리가리하네.
Falls behind some of this from in the old days.
Well, I mean, London has been an anchor of the availability of global capital, and I don't think it was ever likely
많이 떨어지네.
that their
좋아요.
union, as much as I regret that happening,
오,
was going to have
오케이.
a very instant effect on their scale and what they can do. But for me, I don't
너무 마음에 드네요. 오케이.
that it's inevitable that progress that we're going to make on capital markets in the time ahead will be slow. I don't accept that.
가자, 돈 좀 벌자.
Finance ministers at the moment and prime ministers are deeply seized with the reality that we have to fund so much change, and the taxpayer and European institutions on their own can only supply a fraction of that resource. A large fraction, but a fraction. And the gravity of that is very, very clear to us. There may well be, and the private sector dictates it anyway, forms of cooperation that will continue
유난히
to take place
이쁜 파란색이네요.
with London and with the United Kingdom. But the reality is that the European Union needs to
가자, 내려가자.
deepen our capital markets to fund things that Europeans want to see happen. And I'll just end with a prediction. Tomorrow afternoon, I'll be out in my constituency in Dublin Central meeting constituents. I won't meet a single constituent that will be demanding deeper capital markets off me. But I'll meet lots of constituents who are deeply concerned about a lot of the changes we've talked about, feel in their bones the challenge that we have to grow and maintain living standards in the year ahead, while at the same time seeing the brilliance of lots of European companies and entrepreneurs.
또 올라가네.
They
아이
want
참.
answers. regarding how we join up all those dots. And a
우리
big
돈
part
좀
of that
벌자,
is
제발.
the theme that we're all exploring here this afternoon.
Should we add that many of these successful companies that Pascal is referring to actually go and get their financing out in the US?
Which we've heard a demonstration of this afternoon. That is exactly the case.
So what's the final, we just have, we have 1 minute left. In a year's time, since we're not going slowly anymore, what is the sort of most concrete form of progress that you would realistically hope to have achieved on this? I mean, well, Pascal, but also the others would
저
like to see.
지금 완전
So I'll
차분,
kick off with the pension bit.
차분 스크
My
잡채.
single biggest learning, particularly from looking at the Nordic economies, is the way they are presented. So they developed amazing auto-enrollment pension systems with the objective of maintaining income sufficiency for their society in decades to come. They have done it in a way that has delivered an amazing economic benefit to how they can invest in their own future. And if I was to pick one thing that I think can change the direction is more countries within the European Union doing something which they want to do anyway to look after citizens later in life, but doing it then in a way that deepens the volume of capital for investment in what we're doing today.
내가 지금 왜
I think a
그렇게
relief to the securitization route.
힘들게 숨도 못 쉬고.
The economy and
아, 역시 사실
and for you practically to have
안
on this
보는
panel
게 답이죠.
an industry leader
안 보는 게 마음
actually says
편하고,
that they are not
뭐
getting
물론
the
타이밍
financing which
놓치면 안
they need.
되지만,
So if we finally explain to the people that capital markets is not a wish by the banks, but it's a necessity for the economy, and this is represented by the industry leaders, then I think we are a step ahead.
Nadia?
I think that 1 year from now, the EIB will continue to be one of the drivers of the green financing framework in Europe. We will continue to outperform our targets, above 50% of green investment in our total numbers. And I have launched a project to try to see how we can be more of a catalyst on the liability side, and also to look into this green bond and how to interact with financial markets in a manner which makes our green finance markets, quite relevant when it comes to innovation and climate change, climate action throughout the world.
And Roloff, you said that you were daunted. You don't envy them their task, but respectfully, what would you say they should put top of their list concretely?
What I want to do is I want to find the best founders in Europe in the next 12 months and make sure that we help them build global business leaders. That's what I want to do.
Christine Lagarde, you get the last word. You get to pick your top.
That it is not a topic for another panel next year. And we have an action list and we have securitization underway.
Thank you.
Fantastic. Thank you.
Great. Thank you very much.
And you've been listening to a panel discussion there from Davos, Switzerland, the World Economic Forum.
일단은
The panel discussion with the European Central Bank President
지금까지
Christine
이렇게
Lagarde
하고
with sort of the last word there.
보시다시피
Deutsche Bank CEO
지금
Christian Saving,
20만
EIB
원
President Nadia
손이
Calvino, the Eurogroup
제가 손을
President Pascal Donohoe,
봤네.
both are speaking with Bloomberg's Stephanie Flanders, again from the World Economic Forum.
그럴 거예요. 안 그래도 그러려고 해요. 지금 너무 와리가리 하니까 지금 최대한 성의를 최대한 줄이고 나중에 조금 안정시키면 그래 다시 들어오려고요.
Below 60% for the first time since the middle of December. Plenty of stories to chew on today. This is Bloomberg Markets. I'm John Tucker, along with Molly Smith, who's been dutifully following all the goings-on at the Australian Open.
It's been a wild
I don't mean to throw you under the bus, but
morning in New York, day and night in Australia. It is now 3 in the morning in Melbourne, and there's still a match going on right now.
I can't believe it. We're in for Paul Sweetie and Matt Miller, and let's start things off reset with a market update. And to do that for us, here's Nathan Hager. Hi, Nate.
Hey, John, we'll start with the latest information to come out of the oil market. It's seeing a jump in crude with the Energy Information Administration just coming out with crude oil inventories data falling to their lowest level since October. Now we're seeing a jump on the NYMEX. West Texas Intermediate's up 1.1%. $73.37 per barrel. As for stocks, we're seeing a rally in some of the world's biggest tech companies, fueling a rebound and some recalibration when it comes to when and how much the Fed is going to cut interest rates this year. Blackstone CEO Steve Schwartzman says he's confident rates will come down. He spoke last hour with Bloomberg's Francine Lacqua at the World Economic Forum in Davos.
The economy is slowing a bit. That's normal with high interest rates. So on the other side of the ledger, the expectation that interest rates are going down is creating animal spirits again.
And as for how those spirits are playing out in the market right now, the S&P 500 is up 0.3% of 13 points at 47.52. The NASDAQ Composite's up 0.9%. Or 135 points. A little bit of a drop for the Dow Jones Industrial Average. That's down 71 points, or about 0.2%. 10-year Treasury's down 6/32. The yield 4.12%. The 2-year at 4.34. COMEX Gold is little changed, up about $8 to $20.14.30 per ounce. Euro at 1.0853 against the dollar, so a little bit of weakness there. And the yen is a little changed against the dollar, 148.19. That's a Bloomberg Business Flash. Bloomberg Markets continues now with John Tucker and Molly Smith.
불안정하다, 진짜.
Look at under the hood right now, some of the specific stocks on the move and company news. And for that, Norma Linda, we had housing data this morning, and we're taking a look at some of the home builders, but this has nothing to do with the data this morning, does it?
Has nothing to do. This is unrelated news. Looking at MDC Holdings, that's a home builder, as you mentioned. It's soaring as much as 19% this morning in trading. It's most since April 2020 and its highest intraday level since May of 2021. The homebuilder is surging after agreeing to be bought by a Japanese homebuilder in an all-cash transaction valued just shy of $5 billion. The transaction marks the latest move from a Japanese homebuilder to expand in the U.S. market.
Huh. And you know, Nora, you were just saying to us before that this merger here or acquisition rather, would create now the 5th largest U.S. home builder?
Yes, and it took some
뭐
time to
일단은
look. It actually is 10th in ranking
최근에
by
제
market cap right
쪽은
now, so that's a
완전
pretty large
똥쪽이라서
boost that it would get moving to the
주한
5th largest home
쪽은
builder in the U.S.
들을까
All right, let's move on to
어떡할까
tech and getting a boost today. NASDAQ
드는 게
100, as
나을
Nick said,
수도.
up about 1%. In no small part because of semiconductors. What's going on there?
Yes, the story here is TSM, that's Taiwan Semiconductor Manufacturing. Tech stocks across the board are really soaring today as that ADR is rising for its highest level since February of 2022 after reporting fourth quarter results that beat expectations and a good forecast that suggests the world's most valuable chip maker anticipates a rebound in demand.
Huh. And this is Taiwan Semiconductor that you're talking about, right?
Correct.
Okay. So, yeah, it looks like they're expecting a solid return to growth this quarter. So, that mean they haven't been doing so well lately? What's been going on there?
I mean, it's really been a troubled sector as of late. So I think this rebound is very welcome news right now for a lot of investors. I mean, the company's biggest customers are Apple and Nvidia. So those are pretty massive companies. And those stocks are actually popping off of the news. And information technology is the best performing sector in the S&P 500 right now.
Okay, remind us who their customers are. Because
Apple,
that matters.
Nvidia. Just one more time.
That's all you need to know. The next stock, Fastenal Company.
Yes, it's the biggest gainer by percentage in the S&P 500 right now.
What do they do?
It distributes threaded fasteners like screws, nuts, and
how
bolts.
exciting!
You know, my grandpa
right
used
up my alley.
My grandpa used to have a business like this. It was called Screws, Nuts, and Bolts.
Oh, that's so nice.
Industrial Fasteners of America. Yeah. So I don't know. Maybe this is like it reincarnated
they
or
serve,
something.
well-to-length bandsaw blades. I actually happen to have a bandsaw.
Do you now?
What do you do with that?
I build furniture.
No, you don't.
Yes, I do. You
This
know that.
guy.
That's a nice pastime. You have to build some for me.
Keeps me busy.
I wouldn't peg you as a handy person, John. I got to be honest. Maybe it's the
I don't
scarf.
know what to say to that.
You're gonna take that?
I think it's the scarf.
All right. Time to cut this conversation off. Norma, Linda, our stocks reported. Thanks a lot. That brings us to 11:09 on Wall Street. You are listening to and watching Bloomberg Markets. Well, a Fed pivot seems to be underway, but the timing, that's under question right now. How does this change your investment strategy? Let's put that question to our next guest this morning, Kara Murphy, Chief Investment Officer with Kestra Investment Management. good to see you again. So this back and forth, March, now maybe June, 2 cuts, 6 cuts, who knows? I can't keep track. What does it do to your investment strategy?
We're all having a little trouble keeping track. The market has been all over the place on this one. In December, as the Fed started to get more dovish, futures markets started to price in 5 to 6 cuts for next year. Anybody who's been a Fed watcher for a long time had to be a little suspicious about that prediction. And then, of course, more recently, we've had jobs data come in a little bit more bullish. Retail spending today looked a little bit better. So there continues to be a remarkable amount of momentum on the services side of the economy, which has to give Fed policymakers pause. So no surprise, really, that that cut for March is starting to be priced out of markets. And I think in general, what we're going to see is fewer cuts and later in the year than what the market had been predicting in December.
You think that the momentum then is going to continue into later this year as well? Is that essentially the read-through on that?
We do. I mean, in general, we think that there's a fair amount of momentum in the economy and in the markets in general. So it's still a pretty good environment for investors. Probably not a repeat of what we saw 2023. But we are starting to see, underlying momentum within the manufacturing sector, right? That's been really beaten up last year. It seems to be maybe stabilizing, so that's potential tailwind heading into next year. And then, of course, if you look at areas in the market outside, the Mag 7, the ones that really drove returns last year, there are a lot of pretty interesting opportunities. So we think that there are some nice, tailwinds heading into the rest of 2024.
Okay, so are you extending that outlook into small and mid caps?
Yeah, I mean, that's an easy place to kind of look. You can look elsewhere in the S&P, even outside those core group of names that have done remarkably well. But like small caps are a really great example in that if you look at the Russell 2000 versus S&P 500, we're at really extreme levels of underperformance, extreme levels of lower valuations relative to large caps. So, we have really, really negative sentiment that's built into these small cap names. And even if you do have headwinds for there, how much is too much? How much pessimism is too much? And so we think over the medium term, those small caps can actually offer some really nice returns.
Is there like a Magnificent 7 in the Russell 2000? I'm serious.
Gary would know.
I don't know.
Yeah, who's out there that's,
Not
I don't know, in
really.
like
At least not yet. Who knows?
Who knows? They haven't announced themselves yet. Maybe your crafts making business or whatever you're doing because you're so handy. John was just telling us that he's.
You're not going to let that down, are you?
I'm not. I really. Anyways, we're going to ask Kara the smart question. So Kara, tell us that call on small caps. Would you say that's your highest conviction view for this year?
지금 찬스를 기다리고
So, I mean, we see
있고
opportunities in a number of different
뭐
places, and that's
제가
sort of what I
오늘
like about
얘기하듯이
2024 and how it's set
오늘
up.
계속
Certainly, small caps look
샷으로
attractive.
갈게요.
Mid-caps
오늘
look attractive.
완전
Outside the U.S., you have
매도하는
similar
여자예요.
issues, right? Where non-U.S. versus U.S. has had remarkable underperformance, remarkable low valuations. There also you have the buffer of higher dividend yields. And then in fixed income as well, we talked about maybe needing to get a little bit more cautious on when the Fed starts to cut rates. But the fact is most asset classes within fixed income are starting at higher yields than we've seen in 10 years. So even without Fed rate cuts, I think you can have a pretty nice return on the fixed income side as well. So I think there are a number of areas where investors can play.
I think I put this question to every guest that we say, but in a disinflationary environment or a deflationary environment, what does that do to earnings, especially company sales?
Yeah, so certainly as we start to see inflation levels come down, deflation's always a little bit of a dangerous monster, but let's assume we're in disinflation, those rates are coming down, it should slow top line. But what also typically happens is that valuations then do better, right? Because you have more certainty about what those earnings levels are going to be further out. So even if earnings levels sort of come down a little bit, valuations then have more room to go on the upside.
So we're only really just starting to knock on the door of earnings season. Just had the big U.S. banks report in the past week. Do you have any, big calls, for this quarter in terms of themes to look out for, and just generally where the momentum is heading into the new year?
Yeah, so, around about the third quarter of last year, we started to see corporate earnings really bottom. So number one, in general, we want to make sure that those earnings are continuing to lift off of the bottom. I think another thing that we'll be looking for is being able to hear companies talk specifically, help clear out some of the noise in the economic data that we've had. We talked about labor, we talked about retail sales, home builders' confidence has been increasing. But there's a ton of seasonal volatility in those numbers, both because of COVID and because of the holidays and whatnot. So hearing companies specifically talk about what they're seeing on the floors of their stores and whatnot is going to be really important.
That kind of reminds me of a lot of what Michelle Bowman at the Fed's been saying of just, being a bit cautious about the hard data and what the revisions might show. Do you think that's maybe something investors are also a bit wary of if this data is really maybe not as strong as it's been made out to be?
I think investors should always be a little wary, particularly around this time of the year. And then we also have this issue that's been pretty consistent over the last couple of years about fewer and fewer people and businesses participating in these surveys. So just by that alone, the quality of the data that we get today is lower than what it might have been a couple of years ago.
Well, she's harping on the revisions?
No, the response rates there. That's something that's been really poor with JOLTS in particular. Which, that one we really look at a ton for those job openings. That one's already a bit difficult to interpret because it's reported with a month lag. So a lot of, it's really more been the labor ones though there, right, Kara? Or you think response rates really across the board?
Consumer confidence as well. Yeah, so consumer confidence, and again, we've seen some weird responses in general. Some surveys are telling us that consumers remain very low in terms of confidence. Other ones are looking okay. But then if you look at the response rates within each of those, they're much lower than what they used to be. So it's hard to know how much stake to put in those. So it's consistent across a lot of different economic data.
Before you go, can you give us individual names? I don't know if you do that, or just sectors, or I don't know. Let's do energy.
So in general, in sectors, well, we actually think over the medium term, energy is actually fairly interesting. The underlying commodities have kind of had their own cycle, but if we look at investment levels in those companies, they've been remarkably low, which often presages a pretty good kind of medium term return environment. Valuation levels are half of what their historic levels are. So again, over a couple-year period, we think you can find a lot of interesting opportunities there.
I was hoping you might say some names and we would hear what the Magnificent Seven of the Russell 2000 is.
The mini mags.
Yes.
I guess we'll call it that. All right, Kara, thanks a lot. Appreciate it. Kara Murphy, good to see you again. Chief Investment Officer with Kester Investment Management. Let's get the reset of the markets right now because it is mixed. S&P 500, 20 points higher right now. That's up 0.4%, 47.59 on the index. The Dow Jones Industrial Average, 20 points lower. We're at 37,246.
근데 주원 씨 아시죠? 제가 혹시 나가리 되면 이거 다 주원 씨 탓이죠. 아시죠? 주원 씨를 원망할게요.
The 2-year, which I'll say is, more policy reactive.
Yeah.
That is down,
Fed
right?
friendly, as you would say, maybe.
Well, right now it's down 1 basis point at 434. The 10-year, which is the benchmark, that's up 2 basis points. The yield there on the 10-year is 4.12%. Volatility index, the fear gauge on Wall Street, 1429. So that's a slightly less elevated than we've seen lately. As we also look at some of the other movers in today's market, well, the DAX, that was up 130 points in Europe, 16,562. And you are listening and watching to Bloomberg Markets. I'm John Tucker, along with Molly Smith, and we're in for Paul and Matt Miller. We continue in a moment. That brings us to 11:18 on Wall Street. Let's get an update on company news, and for that, here's Steve Rappaport.
John, shares of Boeing are up after the aircraft maker scored a big order. Let's get the latest on that from Bloomberg's Jeff Bellinger.
Steve, this is very welcome news for Boeing. India's newest airline has placed an order for 150 Boeing MAX jets. These are firm orders for 737 MAX 10 and MAX 8-200 planes from Akasa Air, which began commercial flights less than 2 years ago. The planes are to be delivered over the next 8 years. It's noted that this order does not include the MAX 9 variant that was involved in this month's incident, in which a plug
그거
panel
봐요,
on an
지금
Alaska Airlines jet
마이너스
blew off shortly after
10만 원이죠.
takeoff. Steve?
Thanks, Jeff.
물론
Apple
이건
will
제
have to stop selling
잘못이긴
its
하지만
Series 9 and Ultra 2 smartwatches with a blood accident
제
feature in
의주
the US, suffering another legal
의주?
setback in its patent dispute with Massimo.
뭐 물론 제가
More on
직접
that from
그렇게
Bloomberg's Charlie Pellet.
The U.S. Court of Appeals for the Federal Circuit declined to grant Apple a longer pause on an import ban of the devices imposed by the U.S. International Trade Commission. The ruling means that Apple has to stop selling the watches with the oxygen measurement feature while an appeal of the ban plays out, a period that Apple believes could last a year or more.
일단
Court
가보자.
battle has threatened one of Apple's biggest moneymakers in its home market. An unprecedented situation for the technology giant.
지금
Charlie Pellet.
괜찮을 것 같은데
Thanks,
타이밍이.
Charlie. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay
내려가.
tuned for
일단
Bloomberg Markets coming up next.
차분히 기다려봅시다. 결과가 어떻게 될지는 모르겠지만 오늘은 좀 재밌었어요. 가끔 이렇게 어느 정도 차분하게 매매하는 것도 괜찮아요. 저 매일 롤러코스터 타면 저는 심장병 걸려요. 아이 진짜 지금인 줄 알았는데 이게 뭐야
Markets, headlines, and
지
breaking news 24 hours
내려가야지.
a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
언제까지 올라가 진짜 재미없게.
Coming up to 11:22 on Wall Street, I'm Nathan Hager watching a tech
여기 사람들 굶어요.
We got an analyst upgrade for Apple and a positive outlook from Taiwan Semiconductor helping to lift semiconductor stocks, and it's fueling a rally for the Nasdaq. Nasdaq 100's up 212 points, a gain of 1.3%. The S&P 500's higher by about 0.5% or 21 points. Modest decline for the Dow Jones Industrial Average. That index is down 18 points. That's a little change to the downside. Seeing some steadiness in the bond market. The 10-year Treasury is down 5/32 for a yield of 4.12%. The 2-year policy sensitive at 4.34. NYMEX crude's up 1%, up 74 cents, I should say. It's $73.33 per barrel. COMEX gold is up about 0.5% or $10.30 to $2016.80 per ounce. The euro trades at 1.0864 against the dollar. The yen is at 148.11. Bitcoin's down a touch, around 42,400. Keeping an eye on health insurance stocks. We're watching Humana. It came in with a big cut to its 2023 earnings outlook on higher care costs for members. Slowing enrollment growth. Humana shares are lower by 11.5%. That's dragging other insurers down as well. CVS down about 5%. Cigna's down 1.75%. United Health down 3%. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
All right, thanks, Nate. Appreciate it. Let's get to our next guest. You know, we all know big caps, Molly. They're not cheap. Maybe smaller caps, the place to park your money. I gotta ask, you ever read Graham Dodd?
No, who's that?
value investing, the father of value investing.
Oh, add it to my reading list.
You must.
Don't
It's
embarrass
must.
me on the
I'm
air, John.
sorry. Benjamin Graham, whatever.
Well, I can redeem myself at least that, when Nathan was just mentioning Humana and Cigna, those were the names, if you were with us about an hour ago, that I was trying to come up with, that Humana's merger with Cigna.
It's Thursday. You've been up really early.
Not quite as early as you, but yes. Anyways, Humana and Cigna, the merger that did not go through, but yes.
Will Naskovitz is CEO and Portfolio Manager at Heartland Advisors. So, what is your method for valuing stocks? Let's start there, because I think I know what your answer is.
Well, thanks for the opportunity to be here. Our process is our 10 principles of value investing, and we utilize it to keep our exposures in check. There's a lot of uncertainty in the marketplace today, the election, geopolitical, hard, soft, no landing, et cetera. So we want to be mindful of where we're exposed, overweight, underweight, given the uncertainties out there, then use our process, our 10 principles of value investing to keep those in check.
뭐 그렇게 잘해야죠.
Something that John's been wanting to ask a lot of our guests here is who is the Magnificent Seven? I'm just saying, I think if John wants to know, then someone else does too. You were a man of the people. So anyways, the question for you then, Will, what is the Magnificent Seven of the Russell 2000? We'd all love to know.
Well, that's a great question. I'm not sure that there is a Mag 7 within the Russell 2000. It's a benchmark that's populated with a significant chunk of companies that are unprofitable. I think that creates lots of opportunities, that said, for active investors to pick off those businesses that are high quality, that are getting caught up in the near-term uncertainty, and create value for our clients longer term.
Okay, get more into the differentiation between the smaller caps, the mids, and the mega caps at this, and the advantages to investors at this point.
Well, I think the big caps have some wonderful companies within it, but there's also wonderful companies in mid cap and small cap places. We're optimistic on J.B. Hunt. They report later today. It's in the industrial space. It's a leader in the intermodal offering. Their scale and their relationship with Burlington Northern is second to none. And we see this as a classic self-help opportunity or catalyst.
I see their trucks on the road, on the turnpike. They're a shipper, or what do they do again?
They provide that container on the back of that tractor. They're the leader in that space. They have a long-term agreement with Burlington Northern. That container that goes on a rail. The cost advantages of intermodal relative to truckload are very significant. The broader space has been challenged because of rail service issues. We think that's in the rearview mirror, and we think that intermodal in general is going to continue to take share away from truckload. That would obviously be very positive for J.B. Hunt, which we think is in the cards.
So would you say you're pretty bullish on that sector more broadly, or it's really just this name? And if so, then what are maybe some other areas you're looking at too?
Well, I think it's important for investors, back to that earlier commentary of understanding your exposures. Everyone wants to talk about what they're overweight, what the opportunity is. It's equally important, also maybe even more so, to understand the downside. Are you comfortable with those underweights? J.B. Hunt falls within industrials. We actually have an active underweight there. That's unique for us. We've historically added value there. But right now, that universe in terms of the risk reward of the broader mid-cap industrial space is not super compelling. We do find opportunities, though. I think there's an opportunity in J.B. Hunt. Another active underweight we have is with financials. That's a big component of both the mid-cap and small-cap Russell indices, our benchmarks, if you will. The one name that we're excited about, and it's down today on report, is Northern Trust. That's a duration catalyst. Expectations, we believe, are very low. And we don't know what the Fed's going to do. We don't know where the economy is going to go, but in all likelihood, we're probably going to see some credit deteriorate here in the quarters ahead. Northern Trust should be a relative winner within the financial space. They also have a significant degree of higher fee-based revenue. And we see a self-help story here too, as they're addressing perhaps some cost bloat associated with the significant wage pressure we're there. Right now, their pre-tax margins are somewhere around the mid 20% range. We see a pathway to 30%, or that's their long-term guidance. And we think that as buy-side and sell-side expectations adopted, that should be very positive for Northern Trust.
It's safe to say these are more domestically oriented stocks because they are smaller cap. As such, does that mean they're immune from some of the concerns that we see with the larger cap stocks, whether it be geopolitical or, whatever?
I think the reality is we're an intertwined world of every business in some shape or form is going to be impacted from higher commodity prices, obviously, which was an occurrence associated with the Russia-Ukraine conflict. Now we're having challenges with container rates, with the issues that we're seeing in the Red Sea, et cetera. So you just have to be aware of those exposures, understand them, and make sure you're comfortable with them in terms of that over and underweight and balancing it out with your process.
Tell us then about maybe the risk from election perspectives. That's certainly got to be a domestic one on your mind.
That's a great question. I think sticking with the two names that we talked about, if Trump wins, I suspect that would be good for Hunt. I think we'll continue to see this reshoring trend. He was obviously big on tariffs, discussing trade. You're going to continue to see businesses invest back here in the United States. That should be good for Hunt. I don't know this for certain, but I think his victory would probably lift CEO confidence, high net worth confidence, because there'd be the thinking that there'd be less regulation coming out of the Beltway. That should be good for Northern Trust. If Biden gets reelected, I'm not sure what the headwinds would be for JB Hunt in the near term. Northern Trust being a financial, I suspect that there'd be continued regulatory scrutiny across the broader financial space, although I don't think Northern Trust would be under the microscope.
All right, where do you see your benchmarks? Time to put you on the spot. Year end. I mean, everybody's told us what they think about the S&P 500, 5,000-ish. Your benchmark is what? The Russell?
Yeah, the Russell 2000 value for our small cap products and the Russell mid cap value for our big cap product. We don't have a long-term target for either of those, but we're going to continue to focus on taking what the market gives us. A good example of this, we're talking about the Fed a little bit here too. If you rewind the clock back to August of 2022, Powell had a very aggressive, intense presentation in Jackson Hole. Early cyclical stocks sold off into the fall. We pounced on that Jackson Hole. Early cyclical stocks sold off into the fall. We pounced on that opportunity, and our shareholders have benefited. I suspect whether the Fed raises, holds, or cuts rates, there's going to be volatility. So stick to your process, understand how your portfolio is exposed, and capitalize on those opportunities that get presented to you.
All right, thanks, Will. Nice to talk to you. Great discussion. Will Naskovitz, he's the CEO, Portfolio Manager at Heartland Advisors, making the case for mid and smaller cap stocks. It is now 11:30 on Wall Street. I'm John Tucker. You are watching and listening to Bloomberg Markets, along with Molly Smith.
Hello.
We're in for Paul. We're in for Matt. God knows where they are.
Somewhere in this world. So
they'll be back, though.
Yeah.
We are also live from the World Economic Forum in Davos, Switzerland. Bank of America Chairman and CEO Brian Moynihan sitting down right now with an exclusive interview with our John Farrell and Lisa Abramovich. So let's listen into that.
Good to see you. Look, let's talk about this economy and the consumer. You are the #1 small business lender in the country. You've got a massive retail business. What are you seeing right now versus where we were, say, 12 months ago?
So we got 66 million consumers, and we track every week sort of how they move money in and out of their accounts, so credit, debit card spending, checks written, cash out of the ATM, Zelle payments, and everything. And so over the last 12 months, they've gone from a year-over-year growth rate in the first part of 23 versus 22 of 10% down to year-over-year growth rate now 4.5%, 5% in December, in the first part of January. Pretty consistent since the midsummer. Now, that's good news and bad news. The good news is it's slowed down because it's more consistent where it was 16, 17, 18, sort of a low inflation, lower growth economy, meaning the drag effect is starting to tame their behavior, which helps fuel inflation. The bad news is, as they're slowing down, our core prediction by our research team, which is the best in the world, is we go from almost a 4.5, whatever it was in the third quarter growth rate, to a 1% positive, soft landing, but still a quick slowdown.
Mike Gapin, who leads that team on the economic side of things, looking for that early rate cut from the Federal Reserve in say, March. Based on what you are seeing, do you think that's necessary, that the Federal Reserve would need to be doing that as early as March?
Well, you've seen the market play out here, a pretty good swing on that debate. But
getting squeezed.
Our core team has 4 cuts. And 4 cuts, 24 and 25. And so if you sort of sort that through, people wouldn't interpret that, but that is actually higher for longer because you came off of 25 basis points, and if you end up at 3.5 next year, 8 quarters away from now. So I think the team, Mike and the team, they're saying they're going to have to start cutting because they have the space to cut and the economy can keep growing. And the last thing you want to do is tip this thing over. And so the consumer spending in good shape. The credit's in pretty good shape. The credit statistics, everybody's, it's normalizing. It's normalizing at 19 and 18. Those are like 50-year good records in our company. It's not normalizing to stress. It's normalizing base case. So if you think about that, they've got access to credit. Inflation hurts, especially median income. That's tough on people. That's what you read about. But in the end of the day, they've got it set up so they have to start cutting lest the drag gets too strong. And the housing market's got to get a little more oomph to it. You've got to get car purchases up. You got to get these things that kind of keep the economy rolling on.
Just on that housing point, how much do rates have to drop before you really see the mortgage market come back?
Well, I think there'll be two parts to that equation. If you got all the people in the consumer say, if you get a 6 handle consistently, or even high 5s, low 6s, then people sort of just need time too. And so when I got my first mortgage at 8.5, I thought I had a deal. I first went into business and the prime rate was 23. And so, but everybody's used to that. People aren't used to this, so it's going to just take time for them to think about it differently and get used to the pricing's got to flatten out and adjust. Their wages have to come up. But the good news is, most Americans have a fixed rate mortgage, which in an inverse sort of is an asset right now to have against the market. And so it's going to be slow in the first part of next year. It should start picking up as people get more and more used to this. And frankly, there's just a turnover in housing because people get divorced, get sick, you die, move to a bigger house. Those are very pleasant things.
Exactly.
But the reality is that's what happens.
That's what we need to unlock the housing market.
So there's always an activity. It's just that the refinance activity is mortgage driven, but that's done for a while. But the purchase activity will pick up because people have kids and want houses and things like that.
I'm curious, in your earnings call, you expressed some cautiousness around your outlook.
Yeah.
Other CEOs of certain financial firms have been less so, particularly at this Davos meeting. Talk about hiring, talking about the incredible boom in M&A, IPOs, everything coming back. How do you explain the difference?
Well, we're cautious because the economy is slowing down, and that's just how you have to manage expenses. We have a big enterprise. We, over the course of last year, probably went down 4,000 or 5,000 headcount. We still hired 15,000 people last year. So we are always hiring. People hire 1,000 to 1,500 people a month. And with a turnover rate, which has actually gone down to 6% now, probably the lowest we've ever had in reasonably normal times in the company's history that we can find, you don't have to hire as many as you did in the Great Resignation. So we look 3 years out for headcount. We plan into it, but it's how you keep the expenses. At the end of the day, our expense base, $63 billion, 38, 40 billion is people. And so it's all about managing people and then using AI and technology and applied technology to take work away and then migrate people to other places we need to work. And so are we hiring commercial bankers? Absolutely. Financial advisors? Absolutely. Middle market investment bankers? We'll probably double that staff in the next couple of years. Are we hiring salespeople in the branches? Yes, but at the same time, the service side of that keeps going more digitized and automated. Even deep in, we had 1.2 billion digital interactions in consumer last quarter. Just think about that. And you still have a lot that isn't. So you're always getting a benefit of that. So it's a balance. Core economy we think is solid. Most people think I'm optimistic. I'm just giving you the facts of what our talented team tells us. But at the end of the day, you have to manage expenses because its NI flattens out and then starts growing. Net interest income, that's 60% of our revenue. So you got to make sure the expenses are in line with it.
The next question, Basel III Endgame.
Yeah.
It sounds like a bad movie. Let's talk about it. Given what's proposed, do you think it will go through as proposed? And let's start with what's proposed. What are the conversations? What do they sound like between you and regulators at the moment?
I think there's an openness. You don't have to really take what I say. Just listen to the people who are going to actually have the vote. The people actually have to approve it, and the difference of opinion, which is a bit unusual, honestly. I've been doing this stuff around for 40 years, and I've never seen the board itself have out in the open divergence of opinion, and that's because what it affects is so penetrative across the society. Small business lending, mortgages, tax credit equity deals, trading things. So a lot of what you heard after the financial crisis really had about 10 or 12 of us that were making adjustments that, and then another group came behind. This goes deep in the thing. That's what you're hearing more noise. And of course, they're going to their Congress team people. They're going to the regulators and saying, wait a second, is this what you want to do? And so I think that means there's going to be debate around changing it and probably change, but we'll see it play out. And even the Fed itself has said that. Do they have to change it? Yes, because I don't think it's the right balance. And that's why the comment letters flooded in Tuesday or whenever it was all over the place. And we've made the points clear. 20% increase our capital doesn't seem to make sense given where we are. Now, we have $195 billion of regulatory capital. After you do this calculation, we need $195 billion of regulatory capital. All sounds easy, except for the $30 billion that was excess right now. You ought to be able to go out and make loans or do something. That's like $500 or $600 billion of lending capacity that just got taken away overnight. if this goes through. That we're not sure that's the right judgment right now.
There is this story that's going around at the moment, and I'd love your perspective on it. On the asset management side of things, they talk about debanking. They talk about a lot of this activity shifting to private credit markets. Can you give me your perspective on that? How do you think that would really work out in practice?
So if you take a long arc, it's done. What we're talking about now is a sort of private lending at the edge, which is sort of upper middle market leverage lending and things. But if you think about the mortgage market, you think about the home equity market is still the banks because of difficulty of revolvers. The credit card market is with the big banks, but it's actually, we took it through a non-bank capacity, us with MBNA, for example, and brought it back. So we own it, but it was built in a different context when it took off. You go to anything but core small business lending, core middle market lending, auto lending, almost every class is half outside the banking system today. That is not the worst thing because that means capital gets leveraged different ways and the market speaks and dries it, and that's what Europe doesn't have, is that kind of deep capital markets allow them to get the capacity. It's good for fees and investment banking, capital markets. It's not a great thing when a company's under stress, and that's what the question of a $300 million company in a private loan fund where you don't have a workout attitude, you have a trading attitude towards it, which is not right or wrong, it's just a different attitude. That'll be an interesting question of how that reverberates in the economy, but it's largely out there, and we're talking at the margin about these private loan funds, which is really a very narrow category.
Are you thinking about getting into private credit?
We are. We have $500 billion of commercial loans, $1 trillion of commitments. They're all private credit loans. We don't do highly leveraged transactions. It's hard for us to do.
Can you compete with the Apollos of the world? That's what I mean.
I think we competed with them yesterday. I think and tomorrow, so I think we'll be fine.
Going forward, though, is this going to be a part of your revenue, especially as you are concerned about some of the risks that are building? So you said, you seem to hint that there's some risk building that's just sort of out of the purview of regulators if it's just shifting elsewhere.
And so the FSOC was conceptualized to deal with this, right? And you can't, it's hard for it to really deal with it because it's in what, think net asset value funds, i.e. the asset value is not dependent on dollar deposits. So it's a little bit like, okay, a bunch of people lost some money. So if you look at what happened in the financial crisis for leveraged funds and apply that to a bank balance sheet like ours, we'd have lost $500 billion, to give you a sense. Yeah, it was a wipeout. It just got spread through the system. So that's why it's not an entirely bad thing to have that shock absorber. It goes in all our 401ks and all our pension funds and all that stuff. Not good, but it just spreads so widely people don't feel it. It's not dollar dependent lock that I got to give $1 back to the depositor. So there's some good things about this. These things ebb and flow and come and go and stuff, but a lot of it's stuff that we wouldn't do, and the stuff that we look at that we might do more of, we can easily accommodate with a couple $1 billion allocation to certain types of industries, a little more barely passed credits versus fully passed credit. We can do it and be competitive, but it's really at the margin.
Final question. You know how it works out at Davos this week. If you have an American accent, you'll be asked about the American election and the prospects of Donald Trump coming back. I won't go there. I will ask you this, though, and you'll be used to this on Wall Street. If you are a successful banker on Wall Street, you get asked this question. In 5 years' time, will it be Secretary Moynihan? Is that how this is going to work out?
I've got a big job, and I have a fun job, more importantly, and I got a lot of years ahead of me.
Doesn't sound like fun down in Washington.
I'll let you be the judge of that. But I think in the end of the day, look, I do what I do. I love doing it. We have a great company, and it's fun to do. But at the end of the day, we need good people serving Washington. It may not be me, but we need good people to serve there.
We've enjoyed catching up with you, sir. Thanks for being with us.
Thank you.
Brian
Bank
Moynihan.
of America Chairman, CEO Brian Moynihan. Live from Davos, Switzerland, the World Economic Forum, sitting down with our own John Farrell and Lisa Abramowitz, revealing, among other things, his first mortgage was 8%. You think you get a better deal than that?
I mean, nowadays, for sure. So I think it's more around the neighborhood of 7 right now.
He was a lot younger. That was a long time ago.
I mean, that could have been a time when mortgage rates were, double that?
Yeah.
He's not that old.
Maybe.
No.
Anyway, 11:42. You are listening to Watching Bloomberg Markets. John Tucker along with Molly Smith. Let's get the market reset. And to do that for us, here's Nathan Hager.
Thank goodness I'm not old enough for double-digit mortgage rates. Thank you both. Well, get right to the numbers here. The S&P 500's up 22 points or 0.5%. The Dow's little changed, up 8 points, but we are watching a tech-led rally with the NASDAQ 100 up 217 points, a gain of 1.3%. We got an analyst upgrade from Bank of America. For Apple, those shares are higher by 3.2%, and a positive outlook from Taiwan Semiconductor is lifting U.S. chip stocks. Advanced Micro Devices up 1.5% right now. NVIDIA is up 2.3%. Intel higher by 2.9%. 10-year Treasuries down 8/30 seconds, yield 4.13%. The 2-year at 4.34. NYMEX crude's up 1.6% at $73.75 per barrel. COMEX gold is up 0.5% at $2,016.80 per ounce. The euro a little bit weaker against the dollar at 1.0865. British pound showing a little bit of strength at 1.2686, and the yen little changed against the dollar at 148.13. That's a Bloomberg Business Flash, and Bloomberg Markets continues with John Tucker and Molly Smith.
All right, Nate, thanks a lot. Appreciate it. Well, traders seem to be grappling with the timing of rate cuts, Molly, even how many, and that's making for, I'm going to guess, a pretty bumpy road ahead for
It's a real
equities.
toss-up this year. Who the heck knows?
James Dembert is Chief Investment Officer at Main Street Research, and it looks like he's in a loft in San Francisco somewhere. Do I have that right, James?
Yeah,
That's a cool-looking office.
Like one.
All right.
Yeah,
Do you have
thanks.
any? Do you have any clarity for investors on the path forward? What's in the driver's seat?
Yeah, I think the investors should stop fretting about the Fed. I mean, that's over with. And this economy is very resilient. And in our view, we're entering an AI-led super cycle. And we sort of, a lot of logic that we bake into that is that we're going into an era of a very different, in the sense of enhanced productivity growth, something we haven't seen in the last cycle, but we did see in the 90s. And so we see the opportunity here in a resilient economy with stocks cheap, that it's most likely a new business cycle, a new bull market, and of course, as I mentioned, AI tech-led. And so I think, the Fed will probably cut. I'm not sure they need to cut as much as people think they do. And I think that's because earnings are going to probably be better than expected this quarter and for the rest of the year. So I think people should maybe just stop so much with the Fed talk, which has been really obviously consuming us all for the last 2 years. I think it's going to be more about earnings and prices of stocks.
Very refreshing to hear you say that as somebody whose my job it is to hang on to every word the Fed says. So covering the economy and the Fed. So I appreciate your perspective there for us, James. But this is really interesting, this AI-led super cycle. I mean, take us through that and how people are really going to get behind the idea that AI seems to be what you're saying here will be the primary market driver rather than the Fed. That's a kind of revolutionary idea.
Well, it seems revolutionary because the last 2 years, that's all we hear about. But if you think about the longer term, and I've been doing this for 35 years, the Fed is usually not the focus of the conversation all the time. It really is more about corporate profits or what's the health of the economy. And that's why we think we're going to sort of move towards that. The AI sort of super cycle that we envision, you just think about how companies, and it's not just tech companies getting more productive with tech and AI, I think it's really going to go across all sectors. I mean, at the JP Morgan Healthcare Conference last week, I am in San Francisco right now, even though I'm based in Manhattan. But last week, the buzzword across the healthcare companies was AI. And I think investors should recognize AI is going to be crossing lots of different sectors, and it's going to make these companies much more productive. And we think that earnings over the next 5 to 7 years possibly triple. And that's what leads us to these large index focus points we have, like where the Dow will be 7 to 10 years from now. We think it's a triple, 100,000 Dow.
Okay, we're going to hold you to that.
Hard to believe. Well, yeah, I'll be back in 10 years.
Having lived through the dot-com bubble, there was a lot of flotsam and jetsam, but eventually, it was revolutionary, the internet for all of us. When does AI really start to gel in terms of productivity and in terms of sales for the companies that are doing AI? I guess, NVIDIA, one of the obvious choices there.
Yeah, and I would like to say that today is a microcosm of what I view over the next 3 to 5 years. You know, you see this big NASDAQ move on Taiwan Semi's numbers. And, you know, how long does it take for AI to really show up in the earnings and the profitability and productivity? It's a very good question. Now, some places it's already showing up, and we've seen that in the earnings reports of the early adapters in technology. I'm talking about technology companies using the NVIDIA chips, like a Microsoft or a Google. You're already seeing that, you know, affecting their bottom line. But, you know, I think for it to be seen across a lot of the other sectors that we envision it affecting, investors are going to need to be patient. But, you know, one thing about the stock market that you both know, it's a discount mechanism. So, you know, the stock market's not going to wait for the earnings to get accretive because of AI. It's going to discount that before it happens. So I think investors should be really careful here about being too bearish, too Fed-centric, and just be like, okay, wait a minute. If this is real, if this is going to lead to productivity growth, higher margins and corporate profits, you want to kind of buy dips here. And even those dips might be shallow, as this recent one has been. So I think we should be really careful about being too bearish.
You gave the Dow forecast. What about the NASDAQ 100?
Well, I think that's really where you, as an investor, you can't ignore the Magnificent Seven in the NASDAQ 100. It's very important. I know people think, oh gosh, it's a nosebleed.
Just got like 10 seconds left there.
Bleed leaves. But you know, these stocks are cheap relative to their growth. NVIDIA's gotten lower PE as the earnings have gone up this year.
All right. I'm going to say that's the San Francisco view.
The San Francisco loft view, that is.
James Demmer, Chief Investment Officer at Main Street Research, joining us from San Francisco. And NASDAQ 100, since I mentioned it, 208 points higher. That is up 100. That is up 1.3% in today's trading. You are listening to, watching Bloomberg Markets. I'm John Tucker, along with Molly Smith. And it brings us to 11:50. God bless you. Company news now. After that, here's Steve Rappaport.
John Bayer may be staying together as one big company in spite of investor pressure. The details on that from Bloomberg's Denise Pellegrini.
We're hearing Bayer is finding breaking up is hard to do. Sources telling us Chief Executive Officer Bill Anderson and other Bayer leaders are leaning against breaking up the conglomerate. It's been looking at ways to separate its consumer health or crop science division after Bayer's painful Monsanto acquisition, amid all those rising claims by tens of thousands of customers that Roundup is carcinogenic. Bayer has a strategy meeting scheduled for March 5th. Word is management may say it wants to focus on its new operational model announced yesterday instead and push any possible structural changes to a later date. Denise Pellegrini, Bloomberg Radio.
Humana slashed its 2023 earnings outlook as the cost of members' care exceeded expectations. More on that from Bloomberg's Kriti Gupta.
Let me drive you through those numbers here. The full-year adjusted EPS coming in about $26.09. They saw initially the expectation was $28.25. So you're seeing a miss by over $2 there on a full-year adjusted EPS. That's a pretty big margin. They're also, however, talking about that 2023 earnings outlook, and they're attributing it to those higher costs of care.
That's Bloomberg's Kriti Gupta reporting. Right now, shares of Humana are down more than 12%. Tech layoffs continue. Google has let go over 1,000 employees across various departments since January 10th, and now The Verge is reporting more may be coming. It reports Google's chief has told employees to brace for additional cuts. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets coming up right after this.
You're listening to Bloomberg Markets on Bloomberg Radio.
And you're listening and watching the Bloomberg Markets. I'm John Tucker along with Molly Smith. That brings us to 11:55 on Wall Street. Let's get an update on news from around the world. And in the Bloomberg 99.1 newsroom at Washington, that's where we find Amy Morris. Hi, Amy.
Hi, John. More than a dozen Acela trains have been canceled because of winter storms and extreme cold weather. Those high-speed Acela trains between Washington, D.C. and Boston are completely canceled today. And then service alongside the Empire Builder line is canceled for today and tomorrow. The winter weather also forcing lawmakers to wrap up their work today because they are not going to hold any votes tomorrow. One of those votes is the stopgap bill that the Senate is, I'm looking at it now, voting on right now. The House could also get it and clear it as soon as today. The deadline for this is tomorrow night. Congressional leaders say they're cautiously optimistic after meeting with President Biden about unlocking a deal on Ukraine aid and border security. Bloomberg government's Jack Fitzpatrick tells us there's a big X factor in those talks.
Donald Trump posted on Truth Social, "I do not think we should do a border deal at all unless we get everything needed." Presumably because a lot of conservatives want to campaign on that and are waiting for Trump to win the presidential election if he's going to.
Bloomberg Government Congress reporter Jack Fitzpatrick in Washington. The Justice Department releasing its report on the law enforcement response to a school shooting that rocked the tiny Texas town of Uvalde. 19 students and 2 teachers were killed in that shooting. State Senator Roland Gutierrez, who represents the area, says the report is clearing up confusion about what really happened that day.
We had a very early on Texas House of Representatives report that we now know had a lot of inaccuracies, things about doors not working. The doors just work just fine.
State Senator Gutierrez says the report is highly critical of Department of Public Safety employees, state officials. 5 officers were fired, including the school's police chief. House Republicans also plan to advance an impeachment resolution against Homeland Security Secretary Alejandro Mayorkas on January 31st. That's according to a document obtained by Bloomberg Government. The date was set before the first formal hearing against Mayorkas last week. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg John and Molly.
All right, Amy, thanks a lot. Appreciate it. It's 11:57 on Wall Street. All right, I've put it off long enough. I've resisted long enough.
But
Molly has worn me down. What time is it in Australia, by the way?
It is 3:57 a.m. in Melbourne right now.
And they're still playing tennis?
They just finished about 10 minutes ago. This was the last match of the day. The 3 seed on the men's side, Daniil Medvedev, if you want to try to say that.
Medvedev.
There you go. That was smooth. He just pulled out a 5-set victory, 6-love in the 5th set over Emil Rusevori. Want to try that one?
Yusufori, right?
Close enough.
I'm
Anyways,
still working on Jokovic or Djokovic.
Yeah, it's like more like the J is kind of silent.
Okay.
Or
so
it's
we're
DJ.
talking
Yeah,
we're
it
talking
works.
upsets both men's and women's, so it's been exciting.
It's been so this one, I mean, I guess wasn't an upset on paper, but he was pushed, and a lot of the men's seeds overnight were Alcaraz. He came through in a tight 4-setter. We also saw Alexander Zverev, the 6th seed. He was pushed, as well as Casper Ruud, the 11th seed. Both of those guys winning in 5th set tiebreaks. The women's side, though, some big upsets overnight. The 3 seed, Elena Rybakina, previous Wimbledon champion, lost in a 3rd set tiebreak, 22-20. I think that is a 42-point tiebreak. I think that's the longest one in Grand Slam history, or at least at the Australian Open. And the 5 seed, Jess Pegula, her family owns the Buffalo Bills, for us friends back at home. She also went out in straight sets. So some draws are opening up. And my bracket is falling apart.
All right, who are your picks? I mean, who are your favorites?
I mean, I got to say Iga Swiatek and Coco Gauff still looking pretty good. Iga being the top seed, the world number 1 on the women's side. She still looks great. And Djokovic and Alcaraz on the men's side, and Jannik Sinner as well. So those picks still intact for me.
I think you've missed your calling. You should be, doing tennis matches.
Well, you could hold the fort for the next hour.
Yeah,
Maybe I'll get going.
Yeah, I don't think so.
All right.
Molly Smith and John Tucker, Bloomberg Markets, your Australian update right here on Bloomberg Radio. We'll get back to the markets in just a moment. This is Bloomberg Radio.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker. And we are in for Matt and Paul, Molly Smith alongside me. More signs of resilience in the U.S. labor market. Applications for unemployment benefits unexpectedly dropping last week to the lowest level in more than a year. Construction of new homes in the U.S. falling for the first time in 4 months. And technology companies climbing in early trading. Also some breaking news crossing the Bloomberg. Molly Smith, you want to tackle that one?
Oh, yeah. This is, kind of had to feel this one coming out of Spirit Airlines after the JetBlue deal did not go through the other day. Spirit now, this is coming from the Wall Street Journal, reporting that the airline is examining options to address its financial challenges after that deal was blocked with JetBlue. So Spirit now plans to discuss with advisors a path forward as it faces near-term debt maturities. This is all according to people familiar with the matter. Stock is tanking right now. It is down, below $5, and that's on top of, it's just been a really
that
spiraling
deal was pretty much kind of do or die for
that's
airline,
we were talking with a few of our guests about this yesterday, and that a lot of people were speculating if a Spirit might be headed for a bankruptcy filing, that this deal was really their last lifeline. So going to be interesting to see how this one unfolds.
Maybe we'll have to track down George Ferguson a little later. Let's right now get an update on the market. So market reset, and here's Charlie Pellet.
Hi,
Charlie.
thank you very much, John Amata. Here's what's going on. The Dow lower, S&P, NASDAQ, they're both higher. Spirit, as you guys just broke the news here on Bloomberg Radio, stock tanking 24.5%. SAVE on the ticker on Spirit. We have got JetBlue shares advancing up another 2.3%, 479 right now on JetBlue. But again, the headline from the Bloomberg Professional Service, Spirit Airlines exploring restructuring options. This, according to the Journal. Right now, Spirit shares, again, down by just about 24.5%. The Dow, the S&P, NASDAQ, trading mixed. We're looking at a 90-point drop right now in the Dow Jones Industrial Average, down 0.2%. We have got the S&P 500 index higher by 13, up by the 0.3% right now. NASDAQ up by 1%. Right now, the 10-year yield 4.14% with a 2-year that's yielding 4.35%. Gold up 0.4%, 2013 the ounce, and West Texas Intermediate crude up 2.1%, 74.10 a barrel. Bitcoin down today by 1.9%, 41,845 on Bitcoin. The World Economic Forum underway in Davos. Bloomberg Radio is there. This morning we caught up with Bank of America's CEO Brian Moynihan. You heard the conversation live here on Bloomberg Markets, and we asked him about the Federal Reserve and the outlook for interest rates.
Our core team has 4 cuts. And 4 cuts, 24 and 25. And so if you sort of sort that through, people wouldn't interpret that, but that is actually higher for longer because you came off of 25 basis points, and if you end up at 3.5 next year, 8 quarters away from now. So I think the team, Mike and the team, they're saying they're going to have to start cutting because they have a space to cut and the economy can keep growing. And the last thing you want to do is tip this thing over.
And you can hear more of that conversation on the Surveillance podcast. Humana shares plummeted after preliminary earnings missed estimates on higher than expected costs of members' care, and the Medicare-focused insurer forecast anemic enrollment growth for the year. Shares of Humana are down by 12%. Again, recapping, stocks are trading mixed. The Dow lower, S&P up 12, gain there of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. Let's take a look under the hood right now, some of the specific names and companies that are moving in today's markets. And our stocks reporter, Nora Melinda, joins us right now. We start again with a home builder with nothing to do with the data today that we got.
Nothing to do with the data today. Looking at MDC Holdings, it is seeing its biggest gain in almost 4 years and highest intraday level since May of 2021. That all comes after a Japanese home builder, Seiki So-e House, agreed to purchase the firm in an all-cash transaction valued at $4.9 billion. MDC shares are up as much as 19% in trading today. This transaction really marks the latest move from a Japanese home builder to expand in the U.S. market.
So it looks like with the way that MDC is trading right now, it's just about near $63 a share, and that's what MDC shareholders would receive in the event of this takeout. So those are trading pretty nicely today, up, you said, quite a bit on the day. Let's talk about some of those tech stocks. What's going on there?
Yes, tech is the biggest gainer, the best performing sector in the S&P 500 today. After Taiwan Semiconductor Manufacturing, that's TSMC, reported fourth quarter results that beat expectations and forecast a rebound in demand. This is huge news because the world's most valuable chip maker is giving some positive news after a years-long slump for the industry in terms of tech demand.
All right, what else you got for us?
Also, looking over here at Discover, back into that financial space, which we've really been talking about over the past couple of days, Discover shares are down as much as 10%. That's a pretty big plunge for its biggest drop since August. It's the second biggest decliner by percentage in the S&P 500 right now as well, after posting a 62% drop in fourth quarter profit. This comes as the company has continued to grapple with the fallout from compliance and risk management lapses that led to the resignation of its CEO last year.
All right, Nora, thanks a lot. Appreciate it. Molly, why don't you do the breaking news that we did at the top of the hour with
on the Australian Open?
Not the Australian Open.
On Spirit Airlines, of course, coming back into our actual job for the day. Right, so after the JetBlue and Spirit deal fell apart, Spirit Airlines now, the Wall Street Journal is reporting, is examining options to address its financial challenges. They might be looking into some kind of a restructuring as it faces near-term jet maturities, has about $1.1 billion in debt due by next September. And the risks surrounding its ability to refinance that debt are increasing. That's according to a Fitch ratings report that came out yesterday. So helping us to break this all down, we've now got George Ferguson with us. He's our Bloomberg Intelligence Senior Aerospace and Airlines Analyst. George, you're with us on the phone here today. Seems like this was something we kind of maybe saw coming following the collapse of the JetBlue deal. Tell us if this was something on your radar.
Absolutely. So thanks for having me on. Absolutely. Spirit is definitely in a rough position right here, and so I think the idea that they're exploring restructuring options, probably a lot of different options, does not surprise us at all. The profitability hasn't been good. I'm sure management's lost its focus as it's gone through this, potential acquisition by JetBlue, and now the difficulty will be, getting the ship righted, getting employees, management focused on getting this airline back to profitability, and hanging over it are these, $1.1 billion in bonds that are due 2025. They probably need to be managed to some degree. The refinancing has to be done by the end of this year. Otherwise, I think their accountants will put a going concern statement on their financials, and it's not a place you want to be.
So what's the next step to avoid becoming toast?
So, look, I still think there's a bunch of value inside Spirit. The markets have punished them in the last couple of days. We know that markets can go too far one direction or another. I think what's interesting here, I think there's a bunch of things interesting. One is these bonds, these $1.1 billion of bonds, they're backed by their loyalty program. I would argue their loyalty program isn't as important to a company like Spirit Airlines, or airline like Spirit Airlines, as it is to a Delta Airlines or someone like that. There's a lot more revenue flowing through the Delta income statement than through the Spirit income statement from that. And so, there may even be this permutation where someone like Spirit, if they need to shed capacity, could go through a bankruptcy restructuring process. And those bonds may get little to nothing. Maybe they have to shed some airplanes, but maybe they could right-size the firm smaller after that, with just less of a fleet. That could be an option. A sale of this company to another airline. Look at Frontier. JetBlue got in the way of a Frontier purchase. Frontier much smaller. They'd be, the combined company could be a lot smaller size of the U.S. market. Maybe the administration, DOJ, wouldn't contest that as much because there'd be no sort of dominance. You'd be putting a carrier together with another carrier that was potentially, at risk of failing anyways. Frontier's backed by Indigo Partners, private equity firm that likes to restructure airlines, turn them around, sell them more expensively. This is certainly a cheap piece of real estate right now. There's things, there's options like that, I think, that are on the table for the airline.
Next thought has to go to where the Alaska-Hawaiian deal potentially would stand. And if that one as well doesn't come through, George, are either of those companies as desperate as Spirit, to like really leaning on a deal here, or they'd be able to survive if it didn't go through?
I think Alaska is in a pretty similar, Hawaiian is in a pretty similar situation as Spirit, and that is there's a bunch of debt out there that they've got to refinance. And so to some degree, getting them together, kind of gets the nicer balance sheet of Alaska to get them through the next couple of years that look pretty difficult. So it's a bit of a similar situation. Alaska, I think, would be exploring options Hawaiian would be exploring options if the Alaska deal doesn't go through.
All right, George, thanks a lot for coming on short notice. George Ferguson, Bloomberg Intelligence Senior Aerospace and Airlines Analyst. Again, the report from the Journal, Spirit Airlines Exploring Restructuring Options. And that brings us to 12:11 on Wall Street. Molly, I have a question.
Hit me.
How do you have a recession when you have a resilient jobs market in the
Doesn't
U.S.
sound like
economy?
a recession to me.
We actually have somebody who might be able to answer that. Let's get a broader view of the data that we got today and the economy. Bloomberg International Economics and Policy Correspondent. I get winded with this title. Mike McKee. Yeah, so that's the question. I mean, the data we got today, they are weekly jobless claims, so more frequent data. I don't know how, what the trend is. Maybe that's the better question.
Well, you're starting to learn like you've learned a little something here, John. Starting to sound like it. You got to look at the trend.
It was bound to happen.
Took him long enough.
You got to look at the sort of the trend rather than the absolute number. I was just since we can't show this color chart I made on black and white radio, I did send Molly the chart. This time of year, we always see jobless claims go down. It's seasonal residuality probably from when they used to hire a lot of people at department stores for the holidays and then let them go. So I wouldn't take the 187,000 as any kind of a real number, but the fact that they're staying low and they're not rising on a regular basis tells you that the labor market is still fairly strong. The companies are not letting people go. They're holding on to their workers. And as you said in the preamble, how do you have a recession in those cases? Well, Fed officials would say you don't. That's one of the reasons.
Maybe I could be a Fed official. Didn't I just say that?
Yeah, well,
Just kidding.
Governor Smith.
Oh, I'm being risen to a governor already. Wow, thanks for the promotion, Mike. But I had a question for you yesterday that I was struggling to get my head around, that our Bloomberg economics colleagues had mentioned, that to note that you don't necessarily need to see a drop-off in consumption during a downturn. And I caught up with them after our conversation yesterday because I was really stumped on that. And they were saying that you might see the slowdown in the economy come more from business investment or from residential construction, and that would maybe then be how GDP falls off rather than people losing their jobs and not spending their money.
Well, one of the reasons that we're expecting to see growth be slower in the fourth quarter, not as slow as people had anticipated, still looks like it's going to be a good quarter, is inventories. Inventories drop off. Companies have been working down inventories, and that also brings down GDP without affecting consumption. So there's a lot of different ways that it can happen.
Are we somewhere near price stability and full employment?
Isn't
Can I
that
check
the
those
$1,000,000
boxes?
question?
We are close to that. Of course, neither one of those has an absolute definition. The Fed thinks price stability is around 2%, but the old Greenspan line about price stability is when the change in prices does not affect business or consumer decisions. You're not going to put off buying something because you think it'll be cheaper tomorrow. You're not going to hold off on investing, that sort of thing. So 2% is the Fed's target, but we're reasonably close to that now. We should get in the PCE index this next week. We should see core join the headline in the 2% range. And if we get that, that tells you we're getting pretty close. Full employment is also one of those things we don't have an actual definition for, but Fed officials do believe that we are beyond full employment at this point, that it's somewhere in the 4% range, and right now we're 3.7%. So we're very well employed at this point.
Yeah, I mean,
All right,
even if
I'm
you...
satisfied.
Okay, John.
Let's
so
go
you-
gangbusters.
Let's cut rates. Is that what you're saying?
Or yeah, I mean, what's this last couple of miles to get to 2% or where we're supposed to be? I mean, it's just like.
Well, that's the hard part. There are always things that are going up in price and always things that are going down in price. And squeezing the last little bit of that 1% out isn't necessarily easy. You also get into the different kinds of seasonal factors and base effects from the year before. So it takes a while for this to come through. The big thing to watch, I think, when we get next week's numbers and going forward is rents, because the housing market has been the part that's been going down more slowly than people thought.
What do we call it? The owner equivalent rents?
Owner's equivalent rent.
Super core?
Is, yeah. Owner's equivalent rent is the way they sort of impute the housing numbers into the CPI, not the PCE, but the Bureau of Labor Statistics has a new rent index that's experimental, but it shows the rent levels going down faster than any of the others. So it is possible we're mismeasuring a little bit. That's one reason that inflation is coming down in that last percent pretty slowly, is it's taking longer to get it out of housing.
We don't really get a great look at that in the same way, though, in the PCE, though, do we, as far as rents go?
We don't get the same kind of look at it. It's all a matter of how you want to define what housing costs are. But the biggest thing is housing costs are about a third of the weight of the CPI, and they're about half that in the PCE. So housing is not as important to the PCE numbers, which is one big reason that they are traditionally lower than CPI.
Mike, thanks. Appreciate it. Bloomberg International Economics and Policy Correspondent.
Try to fit
Michael
that on your business card.
No, it doesn't fit. I've tried it. Again, the numbers that we got this morning, at least showing a resilient labor market. You wrote the story. What did you say?
This one I only edited, but thank you, John. Yeah, this one was pretty impressive. I mean, the jobless claims number, those initial applications down below 200,000, and the continuing claims, people receiving benefits, also lower.
All right, S&P 500 right now, 14 points higher. You are listening to Bloomberg Markets. And that brings us to 12:18 on Wall Street. Let's get company news now. And with the update, here's Steve Rappaport.
John, Apple smartwatches without a blood oxygen feature go on sale in the U.S. today following a setback in its patent dispute with Massimo. Bloomberg's Gina Cervetti reports.
Apple said the tweaked Series 9 and Ultra 2 models will be available at its retail outlets and online store. Apple itself can't sell watches with the blood oxygen feature, while an appeal of a ban on the sale of the watches in the U.S. plays out. The company believes that could take a year or more.
That's Gina Cervetti reporting. Shares of Apple currently up more than 2%. Yesterday, we told you about J.P. Morgan Chase planning to add to its headcount this year. So is Goldman Sachs. The firm is looking to make fresh hires in its asset and wealth management units as it continues to expand those businesses. That's according to its international CEO, Richard Node.
What is really, really important to us is that we have the best team in the field. We feel terrific about the team that we've got. The strategic focus of the firm is as good as it's ever been. We've got two significant pillars, both of scale. And at the end of the day, the success of that strategy depends on the quality of our people.
That's Goldman Sachs International CEO Richard Node speaking to Bloomberg TV from the World Economic Forum in Davos. Here's another take on dry January. What about giving up your phone for 30 days? USA Today reports yogurt maker Siggy's Dairy is offering $10,000 and other prizes to 10 people who participate in its 30-day digital detox program. The purpose, according to the company, to show people the benefits of going digital free. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. A developing story that we are watching. Spirit Airlines shares, they are plunging right now, down 24%. Spirit lower following that Wall Street Journal report that the airline is exploring restructuring options following the JetBlue deal collapse. George Ferguson follows the airline industry for Bloomberg Intelligence. He was a guest moments ago right here on Bloomberg Markets.
Spirit is definitely in a rough position right here, and so I think the idea that they're exploring restructuring options, probably a lot of different options, does not surprise us at all. The profitability hasn't been good. I'm sure management's lost its focus as it's gone through this, potential acquisition by JetBlue, and now the difficulty will be, getting the ship righted, getting employees, management focused on getting this airline back to profitability.
And again, we've got Spirit down 24%. JetBlue shares, they are higher now by 2.3%. We're looking at a mixed market right now. A rally in some of the world's largest tech companies is fueling a rebound in stocks. Traders also weighing the latest economic data and Fed speak for clues about the central bank's next steps. So here's where we stand. S&P higher by 10, up by about 0.2%. The Dow lower by 84, dropped there 0.2%. NASDAQ 100 index up 144, up 0.9%. NASDAQ Composite Index up 0.8%. 10-year yield 4.14%. Spot gold up 0.4% right now to $20.14 the ounce, while West Texas Intermediate crude oil is up 2.1%, $74.11 for a barrel of WTI. Apple shares are gaining after Bank of America upgraded the iPhone maker to buy from neutral, a sign of confidence in the stock following a weak start to the trading year. Again, recapping, stocks are mixed. S&P up 10 right now, higher by 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks very much. You are listening and watching to Bloomberg Markets. Molly Smith and John Tucker with you, in for Paul and Matt. Well, what are they getting done or not done in Washington, D.C.? Let's get the update from the nation's capital now. Nathan Dean of Bloomberg Intelligence join us. I was kidding. I was not kidding before. They have like one snowplow in all of Washington, D.C.
Is that so?
And snow's on the way. And Nathan, I got to imagine that's actually a motivating factor today as they take on some really serious business like keeping the government open.
Yeah, no joking aside, trying to get to your flight at Reagan or out at Dulles during a snowstorm certainly made the policymakers come to an agreement a day earlier than they normally had. But look, all they did here was kick the can down to March. And so, they agreed on a $1.66 trillion deal. They'll likely pass it today. But the same situation that we're facing right now will come back March 1st and March 8th. March 1st being when 4 out of the 12 appropriation bills are at threat of shutdown. And I would also note that there are only 4 days in February where both the Senate and the House are in session on the same day. And so the lawmakers aren't even going to be in Washington come February. So this is going to be a challenging March because you've got March 1st and March 8th, and also on March 7th, you have the State of the Union. So what are the market impacts? Well, usually with government shutdowns, there aren't usually all that much markets need to be worried about. But in this case, we have a deadline of April 30th. If we are operating under a continuing resolution, kicking the can, if you will, by April 30th, there's a 1% sequester, 1% cut, and that also goes to the Department of Defense, and therefore contractors are not going to be happy. Now, we don't think this is going to happen, but certainly to keep in mind as we get closer to that March date, will they try and kick the can again? That may not be good for those defense stocks.
Kick the can really seems to be the theme of how our Congress operates. Is there ever going to be a time when this will be resolved and we won't have to be at more or less like constant threat of the government shutting down?
Well, eventually, nobody's going to want to shut the government down during an election year. So there will come a point where, 435 members of the House are going to say, look, I'm tired of this. I don't want to deal with this. I want to be back in my district, because every day they spend in Washington is another day that somebody running against them is back in their district. So I think eventually they will come to an agreement and they'll say, look, here's what the funding for the rest of the year is going to look like. But this kick the can mentality is difficult for markets because nobody knows what's going to happen, and you have bad headlines and so forth like that. I will say the best news for the markets in this case is that the debt ceiling doesn't come back until after the election. And so, really for the rest of the year, we're going to have to live through these shutdown threats. Eventually they'll make a deal, but ultimately very little impact to the market.
So just give me the update. The Senate, there was unanimous consent, and now the House has to, what's happening?
Yeah, so the Senate is expected to vote probably just in the next hour or so, and then that's going to go to the House. The House is going to try and vote on it later. Don't be surprised if President Biden doesn't sign this till tomorrow. He's supposed to be in North Carolina later today, so I think eventually he'll come back and sign it tomorrow. But ultimately, this doesn't really do anything other than just taking this interview that we're having right now and putting it again in March. So, I will say, though, that when it comes to the March 1st and the March 8th deadlines, when it comes to the March 1st, if you are a commodity trader that utilizes reports from the Department of Agriculture, that's one of the first departments that was shut down.
What movie was that?
Trading Places. Exactly. Exactly. So if you're in the commodity trading space, that March deadline may be a little bit more important to you just because there's going to be data that you probably utilize that won't come out. But the March 8th deadline is the one that we think will get Congress. If there was a shutdown in March, it's really that March 8th deadline that's going to get Congress to say, we need to get something done. We need to figure it out. Oh, by the meanwhile, President Biden gives the State of the Union address on March 7th, so he may want to make some comments there as well.
So that data that comes from Commerce, HUD, Census, BLS, that would all be okay? So just ag that would be affected?
No. So on the March 1st deadline, it's only 4 out of the 12 appropriation bills. So it's departments like agricultural, transportation, and energy. Now, the rest of them come on March 8th. So Department of Defense, Commerce, and so forth like that. But when it comes to a government shutdown, let's say we had a multi-week shutdown. I don't think this will happen. But if you have a multi-week shutdown, most contractors are actually protected because the length of their contracts go out 12, 18 months, 2 years, and so forth like that. So from a planning perspective, you're not going to be able to work with your counterparts at the government, but in terms of financing, you'll be okay. Obviously, smaller contractors, folks that get furloughed and so forth, there is a bigger risk there. When it comes to the reports, however, essentially when the government shuts down, they're not allowed to actually touch their email, they're not allowed to touch their phone. It's as of this moment, you're no longer working. And so therefore, the reports that a lot of traders utilize and a lot of reports the Federal Reserve utilizes just would be delayed.
All right, so border security and Ukraine, funding for Ukraine, how does that fit into all this? Where is that?